I'm just trying to figure out if my bit rate sucks. I think my bit rate sucks right now. I just want to know if my bit rate sucks. Because if my bit rate sucks and I look bad, then fuck it. You know? They keep trying to change every goddamn thing on this damn app. Every time I disappear, they change something. Y'all make it so fucking hard for people to come back here and do what they want to do. Because every time I come on here, they change something. And it fucking makes me want to just be like, fuck it. I don't want to learn all this shit again. I just want to press a button and go fucking live. That's it. I don't want to tinker and all of that shit. I don't want to be doing all of that. All right, let's take a look here. Make it so fucking hard. Trying to bring this channel back. Trying to, do shit. But you guys make it so fucking hard. All right. So I think I'm live now. Somebody just say something in the comments so I can know I'm fucking live, please. Just say hello or something. I see people in here, but we just want to talk about Bitcoin today. It's selling off. I don't have shit to do today. I really want to come back and be a fucking streamer because you guys don't watch my fucking videos. So, I mean, I might as well just stream to death. Okay, Dirty Mix, I appreciate you, man. And see what else is going on out here. This is a nice pullback on Bitcoin. What's going on right now, man? I'm up $4,300 right now for the month. I'm up $4,300 for the month. You guys know my goal is $7,000 to $10,000 a month. That's my goal. I actually had hit five, but uh, looks like the market's running a little bit. But I did hit five earlier today. I might close this tomorrow. I mean, this hasn't really been one of my best months. It hasn't been one of my best months just because, like, I was way too bearish coming into the month. Way too bearish, you know. And that's my fault. I made some mistakes coming into this month, and kind of honestly wish I made some changes going into this month. Let's take a look here. Maybe I need to just start showing love to my other channel, man, because this I don't know what's going on with this channel. I just feel like YouTube is just like hurting this channel. And but I think it's also because I'm just not posting every day. If I post every day, then they push you. They want to turn you into like, one of those like YouTube slaves that I was for a while. When you do go like every fucking day. I got two other channels I can run, AI assisted trading and then penny stocks unlimited. I got those two still available for me to fuck with. Um, but obviously this is the one that I put my heart and soul into. And it's just so frustrating to see how, you know, but maybe I just have to start fucking going live on here. This is going to be a 10-hour stream because I need to get this channel back monetized. So I'm going to be live all freaking night. This is going to be up here all night, whether I go to bed or not. And I'm going to put some training videos up on, and it's just going to keep running and running and running. I hope you guys know that shit. So it's not going, now that I've turned it on, it's not turning back off until I get at least 1,800 hours. 1,800 hours is what I need, they said, 1,800 hours. And that's viewer hours. So that means they could be done in a week. It's not just 1,800 hours consistently, just 1,800 viewer hours. to get this channel back monetized to where now it starts to make sense for me to put my effort back into this shit. You know, because right now, I mean, that's the problem. It's just not worth the effort. You know, and I don't know why you guys not fucking with my trades. My trades are the shit. My trades are the shit. You know, MSTR was at $515, and I made a video say get it before 1,000. That was a 400%, 4,000x return on your options. Like I be giving the shit away. I really be giving the shit away. You know, I really be giving the shit away. My course is $99. And the only reason I sell it that low is because, you know, I'm a part of a demographic that's, you know, broke as fuck for the most part. So I can't sell $6,000 courses and not be able to feel like shit. Some of these dudes can go out here and do that. I can't do that shit. I can't do that shit. I can't sleep at night, you know? I can't fucking sleep at night, you know? Shout out to the new subscriber. I appreciate it. Oscar Comel, thank you for the new subscribe. Where are all these subscribers coming from? I only see 5 people in here, so I'm not sure where all these damn subscribers are coming from. And I get it, because everybody's at fucking work. John who? John Brandon. Hold on, I can't even see the fucking text. Where are these damn alerts coming from? Shamar Diaz. Okay, I don't even know where these fucking texts are coming from, man. I mean, these fucking alerts are coming from. Solomon Imani. Are these old or something? I think these might be old. Why are they sending me old ass alerts? Damn, I know I haven't been on here for a minute, but goddamn. Okay, yeah, I'm turning this shit off, man, because this is old ass shit. I think it's old alerts coming through. All right, guys, thank you for joining me in here. The day trader, trucker, appreciate you, man. Appreciate you joining me in here. I don't know how I only got 3 people in here. I got 37,000 subscribers, and I got 3 people in my live. How the fuck does that happen? Unless YouTube is doing something to my stream. I mean, that's crazy to me. So, this is what we're going to do. I'm going to be up here for 10 hours. I'm about to put 10 hours in, and we're going to see. Obviously, I'm going to have to take dumps and all of that stuff, and, you know, we'll figure it out. I don't know if you guys have been watching everything what's going on with this TikTok debacle. They're going to get TikTok shut down. And the reason why they're going to get TikTok shut down because there's a certain demographic in this country that doesn't want us to fucking have the information. They don't want us to have the information, man. You know what I'm saying? There's a very popular video on, was it on X? I think it's on X. That is all about like you know, let me see here. Where's that video that was on X? What the hell is he doing? About the ADL not wanting TikTok anymore, you know, and that ADL has a TikTok problem. But this is freaking scary, man. I mean, look at this TikTok. Like, whenever the government wants to pass something very, very fast, that's when you know it's to harm you in certain kind of way. Government is to harm you, period. Government is to control you, it's to harm you. There's no form of government in the world that actually works for people over time. There's no form of government that actually works for people over time. That doesn't eventually become corrupt over time. You know, you can go back to as far back as Charlemagne and gosh, what's this? Julius Caesar, Socrates. What's this guy out of France? Oh my God. What's that famous general out of France? Somebody in here knows who the hell I'm talking about. Who's that famous general out of France? Napoleon. That government corrupts over time. You know, so whenever you see these people working fast like that, it's to control you. And we live in a corporatocracy. All right, that's what we live in. We live in a country where certain people from a certain group of a certain country control your government. They literally control. They literally control your government. You know what I'm saying? It's crazy. I think this is one of the videos right here. Hold on.
The CEO of the Anti-Defamation League, an organization that claims to be combating anti-Semitism, but what it really is a Zionist propaganda arm. It's a lobby for the Israeli state, and one that has a lot of influence over the US government. And the ADL has been really big on pushing for more TikTok censorship because there's so much criticism of Israel here on this app. And I think it's very likely that they're one of the lobbies behind this bill that's now being pushed through Congress, which threatens to ban TikTok. Listen to this leaked audio clip of Jonathan Greenblatt from about 5 months ago.
Wow.
So there you go. You have Jonathan Greenblatt openly calling for Israeli lobbyists to put their energy towards censoring pro-Palestinian content on TikTok, towards making sure that young people continue to support Israel. And now a few months later, you have a TikTok ban being pushed through Congress. I mean, it's pretty obvious what's going on here. Our politicians are nothing but corrupt puppets of the corporate lobbyists who control them and pay for their campaigns. These lobbying groups are the ones who are really driving U.S. policy, and right now they're driving the TikTok ban.
Shout out to White Boy dropping the game, man. Shout out to the White Boy dropping the game. There's nothing but facts there. Nothing but facts. You said get back to the Friday all night vids, miss those. Yeah, I got to get back to that, man. You know, that's why this is going to be a 10-hour stream tonight. I mean, I don't know if, you know, the whole night I'll just be sitting here rumbling my mouth. I might put on some training videos or something, but I got to keep the stream operating because YouTube is just punishing the fuck out of my channel right now. You know what I'm saying? And then when you drop videos and then the algorithm is like, you know what I mean? It's fucking disheartening, man. So if I got to become a live streamer again, I'm willing to do that shit. I just want to make sure the needle is moving. I don't mind sitting here live streaming. That's the shit right now. All right. Now I'm not going to sit up here and act like a damn coon, like a Kai Sanad or, you know, Aiden and all them. I mean, they, you know, they're not on YouTube for a reason. They can't be on YouTube. Right? They can't be on YouTube because they doing stuff that you're gonna get banned on here if you do that stuff.
This is Jonathan Greenblatt.
So they just take their clips and then they move them here. you know. But if I got to go back to being a streamer to get paid on this stuff, then yeah, I'm going to do it. I'll do it. You know what I'm saying? I'll do it. Let's see what you talking about.
Simon Wiesenthal Center, Israel Project, Friends of Israeli Defense Forces, Women's Zionist Organizations of America, the Jewish Agency for Israel, American Friends of Likud, American Israel Cooperative Enterprise, the Israel Allies Foundation, the Jewish Policy Center, Leon and Harry Helmsley Charitable Trust, Jewish Council for Public Affairs, Zionist Organization of America, World Jewish Congress, Republican Jewish Coalition, National Jewish Democratic Council, Center for Security Policy, Israeli American Council, etc., etc., etc.
Goes on and on and on.
These are all lobbying groups for Zionist Israel in Washington, D.C.
Crazy, bro. It's crazy. It's crazy, man. Thank you, Sheldon. I appreciate you, bro. Yeah, it's the market is the only way to make money. You know, otherwise I'd still be working at the warehouse like a damn slave, man. I'd still be working at the warehouse like a damn slave. And, you know, thanks to trading, I'll never get back there again. I'll never get back. I know too much now. You know, and the difference between, you know, getting to financial freedom and where you are right now, which is in a rut, or if you are in a rut, those of you guys who feel that way, it's just reading a couple books, man. Reading a couple books, getting your affirmations down, reading your affirmations every day, some meditation in the morning. Like these guys who make those videos like that, like actually take a notebook, go to the dollar store. This is what you do. Go to the fucking dollar store. Get a pack of pens, get a notebook, right? And then block out like 2 hours a day and just watch informational YouTube videos about how to change your life, how to improve your life. Write down the things that really stick out to you and then actually follow through on that shit. I started learning how to meditate, right? So in the morning, like I'm still not the best at it and I still feel like I'm not there yet, but I'm way, way better than I used to be. I used to not even be able to like have my mind closed for like a minute. Now I can go about 2 to 3 minutes where like I'm really closed in and I'm centered. I'm getting so much better at that. I start my affirmations every single morning. I can, I will, I must. I can, I will, I must. I can, I will, I must. My day is planned out from the morning to night. If I don't do something, I go back and get it done. I figure out a way. What can I push out to get it done? Because what I started realizing is that my life wasn't I wasn't hitting the milestones that I needed to hit because I wasn't getting shit done every single day. Like hitting those milestones is just getting shit done every single day. You know, I gotta get an hour of an audiobook every single day. Find that fucking hour. You got that fucking hour. I was losing that hour watching, you know, shit on Instagram, watching fucking ass and tits. Girls who don't give a fuck about me, dude. You know, and I'm embarrassed to say that I was still in that loop at 33, 34 years old. 34 now. I was still in that fucking loop. All right. And now I've cut out. I've got a great girl now. I'm treating her right. I'm not fucking cheating on her like I used to. I used to be, dude, I was cheating on my ex all the time. It was horrible. Wasting a lot of fucking money. A lot of fucking money. And then here's the thing is, like, I just need to do a 360, man. I just needed to do a completely like, well, not 360, 180. A complete 180 because I just, you know, and those of you guys who might be living that life or who have lived that life, dude, you're banging 5, 6 chicks a week. It's not even fulfilling. It's not even fulfilling. You know? It's not even fulfilling, dude. You still end up, you know, like fucking pissed off, you know, not really kind of happy with what's going on. Yeah, we're down. We broke 70 here on Bitcoin. This is completely healthy, guys. Like, this is nothing. Like, understand this is nothing right here. You know, I'm seeing some guys here on Wall Street bets get nervous or whatever. This is nothing, guys. We were down what 3,500. You can make this up in a day and a half. You know, don't go running around closing your options. This is why when I make option trading videos, I always talk about going out 100 days. 100 days, 90 days because the first I can almost guarantee you the first week to 2 weeks of your trade probably won't go your way because that's just what the odds are. The first hour, the first day, the first hour. How many times have you tried to make a trade and literally as soon as you go in it shit starts to go left? That's why, dude, dude, I said fuck it to that day trading shit, man, because like you'll win big and then you lose 5 times, you win and lose 10 times, and it's like, dude, fuck that shit. I want to win every single fucking time. You know, I'm up $4,500 right now for the month just clicking on a button. Just clicking on a button. I didn't work for that. I didn't sell nothing for that. Simply making a common sense trade that I believe the market's going to stay at a certain level until a particular date, and then I'm going to cash out and go. Make my $7,000 to $10,000 a month. You know what I'm saying? Pay my fucking child support, pay my fucking, you know, car note, right? Pay my rent, and then life goes on. Save the rest, reinvest the balance, and then make another trade. You know, my goal is to eventually get to about 10 to 15. If I can break 10 to 15,000 a month, I think that's when I really start to want to be like these other traders that like travel the world and but I've been afraid to leave the country because the last time I left the country, they fucking froze my card and I had to, for like 3 days I was a loser calling people to send me money because none of my cards were working, you know. And I had called these companies. I was like, yo, look, I'm going to XYZ country, but like they can still freeze your shit. They can still freeze your shit. Now things have changed now with Bitcoin, right? I'm a lot more comfortable now with Bitcoin where it's like, okay, you know, take a couple thousand in Bitcoin, right? So now, you know, you can go out there, get yourself on in some kind of bank or some type of financial, and then you can be moving money as you need it, right? But I'd love to see my trading get to about $10,000 to $15,000 a month before I just jump up and do that. Kuro, you said you got a leap and stop looking. Okay, that's what's up. I got some leaps in MSTR right now. I've already got $2,000 calls on MSTR for 2026. I'm already there. I think the short term, you try to judge Bitcoin short term, you're going to get bit every time. These pullbacks are completely healthy. They're doing it completely intentionally. That's the thing you guys need to understand. They understand these market makers. They know where your weak spots are. Okay, they know yet many of you cannot control yourself emotionally. So all they've got to do is get you into losing a couple $100 and you're going to sell your position, and that gives a fund that's got a couple 100 million the opportunity to get some really low cost Bitcoin. A fraction of a percent is a big deal to somebody who's got $100 million. You know what I'm saying? Don't let these people shake you out. Don't let these people shake you out. You know, what the fuck is $3,000 for Bitcoin, dude? Come on. I'm in Wall Street bets right now on Facebook, and people are acting like the sky is falling. You know, don't let these people shake you out and get your Bitcoin, man. I'm telling you, they want it more than you want it. They want it more than you want it. You know. Now, me personally, I'm not an ETF guy. I'm not a big ETF guy, particularly when it comes to Bitcoin. I'd rather have, the a single stock risk like MSTR, or I'd rather, own the Bitcoin outright and move it to my wallet. I'm not big on these ETFs where the government can just kind of take the money when they want. I mean, look how fast they're moving on fucking TikTok, bro. They can just take your fucking Bitcoin. I don't trust the US government anymore. I'll be the first one to tell you I do not trust my government. I do not trust my government at all. This is not, your grandfather's US government. It's not. These people answer to a certain country out there in the Middle East that has plans to control the Middle East, and they could give a damn about you as an American citizen. That's why one of the big things that got me really in trouble a couple years ago with the black community here on YouTube, because I used to be considered part of the black manosphere, was, I feel good behind white folks with guns. You know what I'm saying? The day this country loses the rights to own firearms, to be able to speak as freely as we do, it'll be because white folks decide to hand over their guns. They decide to freely become subjects, of the state of the small hat. And I'll be long gone before that ever happens. I'll move to Russia before that ever happens. I'll move to Russia before that ever happens. The market cap of crypto is impressive on the monthly. Yeah, everything's going good, man. Look, everything for crypto is going good. I got a 10-minute chart on here. This is what it looks like on the monthly. Okay. This is what it looks like. Okay. You're overbought on here on the monthly time frame. Now, I'm not saying you're going to get back to 60. I'm not saying you're going to get back to 50 or no. You're overbought right now. Okay. Let's look at the daily time frame. Okay, let's let the Keltner channels develop. Yeah, you were overbought a little bit. Bitcoin is about to get right into the buy zone. It's literally selling into the buy zone. All right, this is what happened a couple days ago here on March the 5th. It went right into the buy zone and they ate it all up. This is, these are one of the places you want to accumulate Bitcoin. All right, you want to accumulate Bitcoin right here, right here. Every time it touches that blue line, if it does, you want to grab some or gets close to it. RSI is a little hot right now, but the fundamental supply and demand story for crypto is the same. You have very little supply, and you have very incredibly high demand. Understand this, folks. This is just the beginning. You're still early. Don't you understand? This is going to $1 million in your lifetime. In your lifetime. And you're blessed enough to be an American that you can put your $10 and $25 and still be able to generate a nice return over time. Go talk to some of those people that live in fucking, Rwanda or who live in Venezuela. They can't put up 10 Venezuela bolivars or whatever the currency is and get any kind of substantial amount of Bitcoin. Okay? They can't do it. So you're blessed and in a fundamental position to go into the crypto economy, which is where we're slowly moving into, that the dollar will eventually lose value, and yet you're still going to walk into, as an American, into this new economy with the benefits and incredible amount of pricing power because you were able to leverage your US dollar to be able to get more Bitcoin than anyone else in the world. Nobody, the average working man in India will never be able to buy enough Bitcoin than you can right now. You've been blessed enough to get an advantage that will never be eclipsed. Now, the only thing and the only way you unfortunately lose that advantage is by not, putting some money up in Bitcoin. And unfortunately, a lot of of my people, black folks, are not invested in Bitcoin, and they're going to lose out on that. And they're going to lose out on that. You know, and I've told people again, if you don't have money, $100 a month, if you can't afford $100, $50 a month in Bitcoin from now until infinity is going to make a huge difference. It's going to make a huge difference in the quality of life that you have, you know, forward. Understand, this government is broke. They don't got them. They don't have the money. Wells Fargo is out here freezing people's accounts. Bank of America is insolvent. Bank of America owes more on its balance sheet than it has. These banks are insolvent. The country is insolvent. They're just going to print. 52% of all US dollars were printed in the last 5 years. 52%. And they've got to keep printing the money. This is your only hedge, man. Don't you get it? Don't you fucking get it? This is your only hedge. Bitcoin, owning land, owning property, owning non-renewable assets like fucking a lake, freshwater lake or some shit like that, And watch out for that too. They're gonna just start poisoning water resources too here. I've been watching some of these water stocks. What's that like consumer? What's that water? There's a water company out there that it's just going to fucking Pluto. Um, American Waterworks. I think was it American Waterworks? Okay, yeah. Wow, they've been selling off. Yeah, I haven't paid attention. Oh wow, okay, they've been selling off for a little bit. I wonder why, what the story is here. But man, I was watching that during the pandemic. I was like, what the fuck is going on here? They're about to fucking have us sitting in water lines. The market is selling off. That's why I'm making more money. The market, that's why Bitcoin is selling off too, by the way. You understand, like, it's all robots, guys. The market's selling off. Bitcoin is going to sell off. I'm making more money because, again, I saw that we were overbought and I got into what's called an iron condor. Again, I teach that in my course, mastertrendsystem.com. If you bought my course in 2019, 2020, 2021, you get it for free. All right, you get the new update for free. It's been completely updated for the future of trading. All right. When I started this live stream, I was at 4,400. I'm at 5,200 now. And the more the market goes down, the more money I make. I always hedge my investment, guys. You got to hedge your investments. All right. But then again, I've been doing this for almost 10 years. So please don't. I'm not no pro. I still got a whole lot to learn. Whole lot to learn. Whole lot to learn, man. I went to this vector vest little thing. This is what is it? Do they still make vector vest? That little vector vest. Do they still make that? Wow, they still make the vector vest. Okay, wow. Okay, so yeah, this was like a couple years ago. And I'm the only black dude in there. And all the others with white dudes with, silver, gray hair and everything like that. And they're talking about trading, investing. I'm like, God damn, like there was like I thought I knew a lot of shit, but there were still concepts that I was still like, damn, okay, I still gotta read up. I gotta read up on more. Because there were some concepts that were still not there yet. So that's humbling to know that there's still a lot that I need to learn. Invest in Moses' water machine is the shit. Okay, that's what's up. Yeah, shout out to Moses and his water machine. Yeah, I read that brother's story, man. They've been, trying to sabotage his stuff here and there, but he's been out here pushing it. And he's too known now. They can't do nothing to him because it'd be so obvious. Because he don't put himself out there like that. What do I think about the Reddit IPO? Yeah, I think it's a sell, Trading Jedi. I think it's a sell. I mean, I understand this. I can almost guarantee that Reddit is not profitable. Uh, Look, I don't think that running message boards is a relatively profitable business long term. Okay. Uh, I love what Reddit does. I think there's definitely a place for that, but it's not Twitter. All right. It's not X. You don't run to Reddit to find immediate news about what's going on right now. You typically run to Reddit to find archived information about a question that you're looking for, or you know, that's the kind of stuff people go to Reddit for, you know. And for most people, Reddit is a here and there kind of thing. You're not always on Reddit, you know. If you're somebody that's always on Reddit, it's typically because you have an engagement level with the material that's, I would definitely say is more than what most people would would engage the website. You said Reddit might become the new TikTok. How? I'd like to know how trading is a lifestyle, because do they? I mean, I know they allow video, but I mean, do they? Um, I don't know. I mean, what's the algorithm like on there? I mean, trading. I mean, comparing Reddit to TikTok, bro. TikTok is out here making billions. TikTok is out here turning people into millionaires. Is Reddit doing that? Is Reddit allowing you to start a business and selling it to hundreds of millions of people, selling products and services? Because that's what TikTok Shop is doing. Understand a lot of this hate that TikTok is getting because they're spreading a lot of game on there. Here's that. You guys know those refund schemes that are on TikTok? And I ain't gonna lie, I'm guilty of it. I'm guilty of it. You know what I'm saying? I'm guilty of it. I bought something on Amazon. Okay. Uh, I bought something on Amazon, and after some time, it stopped working, and I went and ordered another one. And when that other one came in, I sent the old one back and got my money back. I ain't afraid to say it. I ain't afraid to say it. You know? Yeah. People been, white folks been doing that for years. It was white folks put me onto that. I was like, damn, I didn't even think of that. I didn't even. Wow. Oh my God. That's amazing. I can order something. If when it doesn't work, I just order another one of that thing, send the old version back, and I get my money back. Oh my God. You know? Let's check on my Iron Condor here, because my Iron Condor is making some money. So here's my Iron Condor. Those of you guys who got my course, I teach Iron Condors as well. Uh, no more of the futures, though. The futures is woo. Yeah, enough with the futures. No more futures. All SPX now. Futures is a little too much for me. But that's my levels here. Uh, I don't know why I was so bearish on that. I wish I moved that up to about maybe 4,800 or 4,700, but it is what it is. I put 4670, 75 is actually what. Uh, but I had just kind of started to see like things were slowing up here. You know what I'm saying? And things were starting to slow up. Uh, the Qs have been really the leader, the vanguard of what's been happening in the market. And what you'll notice is that since January, like the 21st, right? What was that? January the 24th. We're up only 2% since January the 24th. We're up only 2%. So we haven't been going anywhere, okay, in the last 30 days in the Qs. So this is an opportunity right now for those of you guys who enjoy these, non-directional options that I've been making a lot of videos about. You're soaking it up, man. You're seeing it. I mean, I'm up $1,000 in the last 25. What is it? The last hour, I'm up $1,000. You know, and you know what gets me every time is that, like, I can make this video and somebody somewhere is working at a Family Dollar right now for $9.50 an hour, man. That's crazy to me, bro. That's crazy to me right now, man. But I get it, man. People have bills. People, get kids way too early, and unfortunately, you get forced, and this country will force you into a lifestyle you don't want if you saddle yourself with uh with obligations too early in life. You know, that's a different conversation, but it's for real. You know, it's for real. I've made some really aggressive moves in my life, and some worked out, some didn't. You know, I bought my first house when I was 21 years old, and that's because they were giving them away at that time. Literally, you could sign some papers and they're giving away. And then in the 2008 recession, I lost the house because I unfortunately didn't get a fixed interest rate. I got an adjustable interest rate. So the rate adjusted, um, and I was fucked. I just couldn't pay it anymore. Me and my girl couldn't pay it anymore, and I ended up losing the house. And then it took me about 9 years to be able to get into another house because my credit was shot and all that stuff. But you know, I was really slick about it because I ended up filing for bankruptcy. You can look that up. City of Detroit, 2010, I filed for bankruptcy and I cleared all my debts. I cleared all my debts. Don't hesitate to file for bankruptcy. I would do it again. I don't need to because I don't have any credit card debt now. I've sworn off credit cards. I do not have credit card debt. I have one secured credit card with $1,000 balance that I use to rent cars. That's it. I use it to rent cars because, like, these motherfuckers won't let you rent a car today without a credit card. But that's it. That's all I have. That's literally all I have. I have no credit card debt. Student loan debt, but I don't pay it. I will never pay. I mean, I literally got on the phone with them and I just told them I would never pay the student loan debt ever. I'm never paying it. And they still give me loans. This is crazy because I'm in my PhD program right now at Liberty University. They're still giving. I get on the phone with them like, look, I'm never paying this back. I'm never paying this shit back. So the community pumps this like GME. Pumps what like GME though, VE? Wait till they approve option chains for Bitcoin ETFs. It'll be all over for the average Joe. Oh, absolutely. Understand this, man. The people who aren't in Bitcoin now, it's going to be even like they're going to hate themselves when it's at 150 or 250 and they understand like the the best times to DCA are over. I've been DCAing since about 2017. Have I been as consistent as I want to be? Probably not, because I probably wouldn't even be live right now if that was the case. I wish I was a little bit way more consistent with my dollar cost averaging, especially before 2020. Especially before 2020. I wish I had the network that some of you white folks had that introduced you to Bitcoin in 2012 and 2013. I didn't have that network. I didn't have the network. I didn't, surround myself with people who tested me mentally at that time. So I didn't get the information, you know. And I say tested me mentally. I'm not necessarily like, stomp my ass or anything like that, but just more or less like when you get around these people, like you got to know some shit, you know. If you stay around people like that, you're never going to not be in the know because they're always looking at information. They're always reading. They're always studying. You know, they're always up on something. Let's see what's going on here. Let's get back to Bitcoin here and see what BTC is doing here. Come on, give me the. Gosh, I should just save this shit, but you know, I always see what's going on Coinbase, but I know the proper way to really look this up is Bitcoin/USDT because 65% of the way Bitcoin is bought is with Tether, you know, because most of these people are outside of America are the ones that are buying Bitcoin, sitting in it, using USDT to buy it. Before they changed the rules in the 90s, that was the thing to do. Just rack up debt and declare bankruptcy every 7 years. Oh, that was up. Curo Network. Oh man, I figured that. And then they closed the loophole on the student loan thing where now you can't discharge it in bankruptcy. I mean, that's fine. I'll leave the country, man. I'm a dual citizen. You know what I'm saying? I'm a dual citizen. I still have my little African passport just in case, because again, I've always believed America will eventually turn into a prison state. Where they're going to prevent you not being able to leave. Here's the hourly on Bitcoin. God damn. All right. Here's MSTR. Again, very, very comfortable, man. I'm not tripping on any of these right now. Do not let them shake you out. Do not let you shake you out. Understand this, guys. When BlackRock gets behind something, stay long, bro. Because they're going to make their money. All right? Because right now, you got guys at BlackRock who are trying to convince the pension funds to come into Bitcoin. This is they got to make it look real. See, that's the thing. That's what a lot of you guys don't understand. They got to make it look like it's, oh yeah, it's going up. They got to give you these red days like this. Because if it just went green, 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 green every day, it wouldn't look legit. Even you'll start saying, "Oh man, look at this fake Ponzi scheme stock market." Once in a while they got to make you look, make you feel like, oh shit, I'm actually really trading here. But you better believe they got, 1 to 2 trillion now invested into this thing. Yeah, this they're gonna make their money. They're gonna make their money. Okay, they're gonna make their money. What did IBIT do today? Good Lord, 40 million shares? No, 78 million shares traded in IBIT today? 78 million traded in IBIT. 15 billion market cap right now in IBIT. 15 billion in IBIT right now. All right, 15 billion. I remember the first couple days these ETFs sold off. People were like, "Oh man, I don't know what's going on." Yeah. Just adjusting, man. Looking really good. This market is looking great. Fantastic. This is nothing to get shaken up about. This is fantastic. This is an opportunity to buy more. Reddit. Somebody already said Reddit going to be the new TikTok. I think you're crazy, bro. And I say that in a good way. But that would be crazy to see. Let me see here. All right. Let's see, what are they talking about? Some anything about Bitcoin here? Let's see. Let's see if people are scared. I don't see. Mm-mm-mm. Okay, this is some interesting game right here. He's talking about continue to see the signs that this time is different. Behaviorally, this market has changed. Coins were sent in the past. Now coins are leaving exchanges. So he's seeing data showing that coins are leaving the exchange. Glassnode. Okay, Glassnode's legit. Okay. Okay, exchange net position in exchanges. Okay, so green means there were more coins hitting exchanges, and now there are less coins. Okay, net position changes. Oh, wow. Yeah, they are losing. Okay. Wow, it's very indicative of the fact that prices are going higher. Okay, that's what's up, man. See, charts like this, I love charts like this because it's so, you know, confidence boosting in terms of what's going on out here, you know?
And my last point to you, you do not sell your Bitcoin.
Never.
Thank you. And my last point to you, you do not sell your Bitcoin.
Yeah.
Thank you.
Yeah. Yeah. Fucking
And
yeah.
my last
Fuck
point
yeah.
to you, you do not sell your Bitcoin.
Yeah.
Thank you.
I'm gonna save that. I'm gonna take the audio from that. I'm gonna rip the audio from that and have that be a. Yeah, I'm gonna rip the audio from that. That's a good DJ clip right there. That's great. I'm gonna save that one. I'm gonna rip the audio from that one. You do not sell your Bitcoin. Yeah, I'm not man, look, you can't let these white folks get rich without you. Shit. Did you still assume the mortgage? No, I ended up selling that house. Trading is a lifestyle. I ended up selling that home. Because remember, I assumed the mortgage. So I just basically started paying the note. And you know what's crazy? I ended up, and you know, after, because that was 2019. So then COVID, right? And obviously, I mean, the house literally doubled. The house literally doubled. So the old lady was just like, "We should sell, we should sell," and it made perfect sense. So you know, she wanted out, I wanted the money. You know, I did split. I did make sure to give her, you know, a nice send off. So everybody got paid on that, man. Everybody got paid on that. I was able to do some really good shit for my family and stuff. You know, there were some things my old man and my mom wanted to get taken care of, so we took care of that. So it was beautiful, man. It was a beautiful thing. Like the timing was just, man, God is good, man. God is good. All right. Bitcoin has no top because fiat has no bottom. Man, that's beautiful. Woo! That right there says it all. That right there says it all. Bitcoin has no top because fiat has no bottom. That's the only reason why Bitcoin is running the way it is. It's not just because there's a limited supply. It's because, you know, you're losing your money. You know, we're losing. Look, understand this as Americans, we're losing about 5% of our wealth damn near every year, bro. You're losing 5% of your wealth every year. Not only is the standard quote unquote 2% inflation, which we know is not 2% inflation, right? We know it's actually a bit higher, but it's the 2% inflation plus the fact that, you know, business owners like to raise the cost of things. And you know, you're losing value in your money. And then the banks aren't giving you shit. I don't even keep my money in the bank anymore. You know, all of my money now is in the trading account. Shout out to Interactive Brokers because Interactive Brokers gives me a debit card, right? So I use Interactive Brokers as a bank. You know, all of my money is locked up into Bitcoin on Strike and Interactive Brokers. I do not use any banks, Wells Fargo, Capital One, True Lion, whatever. I don't use any of those no more. Because these banks are insolvent, man. They don't have the money. Like, you got to put your money in hard places now. You know, I saw what happened with these small medium banks, and it's going to happen to eventually one of these large banks. There's going to be a bank run. There's going to be something's going to happen where you're not going to be able to get your money out, and some of y'all going to be fucked, man. I'll keep going there and trusting these Wells Fargos of the world. You putting your paycheck in there every 2 weeks. That's crazy, bro. You better find some different options. You know, and I learned from that from Raul Paul. Raul Paul, that's his name. Raul Paul. He said 100% of his money is in crypto assets. I was like, oh, for real? Okay, yeah. I gotta move the same way. I gotta move the same way. So somebody put me on the BitPay. I got put on the BitPay. So now, I got the BitPay card. And the BitPay card, here's the thing. There was so much demand for the BitPay card where you can turn your Bitcoin into cash. They're behind like 20,000 applications. Yeah, New York Community Bank, VE, you're absolutely right. New York Community Bank. I mean, they're going out of business right now. Here we go. Here we go with the list of assets. Bitcoin, look, Bitcoin is eating up gold, man. Gold right here, number one asset in the world right now at 14 trillion. And we're going to watch that slowly over our lifetime be cut into half in our lifetime. I can see that going to 50% in our lifetime. Okay? And it's so funny because we talk about how Bitcoin eats everything, but the internet eats everything. Right? Like if we could have invested in the internet as a thing, it did to the mall what Bitcoin is doing to damn near every other asset. The internet did to the mall, to to commerce that Bitcoin is doing to damn near everything. It ate it all up. Bitcoin, I mean, the internet basically made your mall worthless. It made going to the mall stupid. The internet made going to the mall stupid. Now you go to the mall because you want to gather up the family and the kids to have something that everybody can go do and enjoy at one place. But in general, it's pretty dumb. Like to go to the mall. Like whatever you're going to find there, you could probably get it cheaper if you're willing to wait a couple days. Crazy shit, man. Thank you, all you guys, for joining me here on my 10-hour stream. Appreciate you. We're going all day, all night tonight. We're going all day, all night tonight. I probably won't be here the whole time, but I mean, I definitely will be in the building. I definitely will be in the building. Bro, I get all kind of fake job offers. Hi, my name is Natalie from Insight Global Recruitment Company, U.S. Are you interested in a flexible remote position? Can I share brief details? About what? I don't remember asking anybody for a job. Yeah, it's a sell-off today. It's a sell-off day today, guys. Again, don't get shaken out. This sell-off is weaker than what it was, 2 weeks ago. This sell-off is weaker than it was 2 weeks ago. If you remember, that was a 12% day, 12, 13%. I don't know why people tripping now. That was a 12, 13% day. I remember that day. Because that's when I reloaded up on some of these MSTRs positions. This is beautiful. This is exactly what the market is supposed to be doing, man. You way outside here on the counter. I mean, come on, y'all expected this thing to continue to to go higher beyond these candles are doing exactly what it's supposed to be doing. You know, it's got to follow the laws. You get outside that channel, it's going to come back into the channel. Outside the channel, you're going to come back into the channel. Outside the channel, you're going to come back into the channel. Outside the channel, you're going to come back into the channel. Let's do it again. Outside the channel, you're going to come back into the channel. Outside the channel, you're going to come back into the channel. Eventually, you're going to come back into the channel every time. Okay? You're going to come back into the channel every time. So even if tomorrow is another red day, I'm cool with that. Somebody said maybe next step 68. Oh, that's cool with me. Okay. Again, I got 100 days on my options. 120, 130 days. I got a couple 2026 options. You know, why trip? Why trip? You know, this is the reason why I tell you guys stay away from these weekly options. You know, daily, 0 DTE, like that. That's trash, man. It's trash. You don't want none of that. You got 30 minutes left in the market. 30 minutes left on the market. 25 minutes, actually. Check out my trading course, mastertrendsystem.com. Bitcoin right now, selling off aggressively. See, shit like that scares people. Like, what's going on? Oh my God. I just put $100. Now I'm down like $30. What the fuck? But that's that same person who's down $30, they want to be a millionaire and can't lose $30. You know? That's why I used to think that I wanted to do consultations, you know, with people. And we put together a great trading plan. We'd enact the plan, and then these people, particularly beginners, they will not stop hounding you because they're going to call you every fucking 20 minutes because when the stock goes down, they don't know how to act. They don't know how to act. That's why you want to play beneath the price action. I'm all about paying beneath the price action, man. Bespoke 1985, you said, do I have an earning strategy? Yeah, I just like playing beneath the price action. All right? Beneath the price action, particularly if you believe that the market is going to go higher, right? You believe this is going to be a market winner, then if I'm feeling upward, if I'm very confident, like if it's, for example, NVIDIA, maybe like 3 months ago, right? Then you would sell an out of the money call option, buy an in the money call option, where if, you know, NVIDIA hits, I mean, you make a great amount of money. You know, your ROI on those are very, very nice. You know what I mean? Your ROI on those are very nice. But you just better hope that it hits. And for those great companies, it does hit. Time and time again. These companies that just beat earnings every time. You know. Yeah, man, this is just a red day overall. I mean, like, you know, again, man, we've ran hard, guys. Like, we ran really hard. You know, you look at where, you know, the market is right now. You know, like we ran really hard in the cryptos. We ran really hard. Understand if the market just stays. See, a lot of people aren't ready for this. If the Qs and the SPY stay exactly where they are right now, this is a great year. This is a great year. If they stay exactly where they are right now, which is very much a possibility, this is a great year. If we ended the year right now and said the market was up 7%, everybody would say that was a great year. That's the average. That's the average. You know what I'm saying? That's the average. So, the expectation that everybody has that, the Qs and the spies are just going to keep going up, up, up. You're going to have to let me know where that's coming from. And if that does come, it's because we're going to see some lower interest rates, which we have been seeing. I'll give them that, which we have been seeing. Home mortgage rates are below 7% for the first time in quite a while. For the first time in quite a while. Okay. And I'm not believing for a second this Bitcoin is going to stick below 70 for very much longer. They're going to let it close beneath. I mean, this market might close beneath 70, but I have a feeling tonight you're going to have a nice buyers step in here, want these 68s, 67s. We'll see. What's good, Elite? What's good? Yeah. Bitcoin University and Bitcoin ETS overtaking Grayscale. Yeah, I mean, Grayscale's just woulda, shoulda, coulda been. But I mean, look, shout out to GBTC. They had their run, man. Shout out to GBTC. They had their run. You know what I'm saying? GBTC had their run. I'm not even going to front. You know, look, they did their thing, man. And this is they never split. What did they split? Yeah, they did one split. They did do one split. But for the most part, man, look, it got to $4. It got to 12, 13. GBTC did their thing. I fucks with GBTC. They did their thing. But the market has definitely grown. Wealth advisor Satura has just approved Bitcoin to be offered to clients. It has 475 billion assets under administration and 190 billion under management. And you're going to start seeing a lot more of that too. More investment, retirement management companies starting to allow their clients to get Bitcoin. Now, I don't know why you got to be the kind of person where you got to wait till your company that's managing your money telling you you got to wait. Fuck you. I take my money somewhere else. You ain't got to wait till somebody to tell you we going to allow you to do this and do that. You better let me do it. You work for me. I don't work for you. Yeah. In just 45 days, Bitcoin ETFs soared from 27.11 billion to 63.46 billion, a 134% increase. Okay. Wow, that's very impressive. Huge assets under management. Oh, okay. I appreciate you, Elite Man. Yeah, I've been thinking about going live. Like, I got to go back to live streaming, bro. Like, posting videos is not my thing. Like, I'm a live streamer at heart. In fact, if you've been watching me for a long time, then I'm really a live streamer than a content creator. Because I can't edit for shit. Like, my editing fucking sucks. I don't want to take the time to learn. Uh, People say I'm better at just miscellaneous speech than I am trying to put, a video together. Although you guys love my training courses, I appreciate the love with that. So you guys love when I do my training. But yeah, I think I'm more of a live streamer. The only thing is, I just got to get some girls on here. Like I gotta, but the girls that I like, you guys don't like. I like BBWs. I like girls with like double G boobs. You know what I'm saying? Like I like girls with a little bit of weight on them. You know, I like plumpers. You know, and I had an episode where I had a girl like that on, and guys were just giving me a whole type of shit and weren't giving her, the kind of love that she honestly deserved. I mean, because she took time to, pretty her face up, and she was looking great. I mean, the boobs were just huge, and you guys were just acting like fucking assholes in the chat, you know. So after that, I mean, she wasn't really feeling like coming back on, and you know, women today are very sensitive. You know what I'm saying? You guys want like girls who look like sticks and bones. That's not my thing, dude. I like plumpers, dude. I like girls who like to eat. You know. I said I had lost you for a while because you changed your name. Couldn't remember your old channel name. Oh, okay. I appreciate you, bro. I appreciate you, man. I be changing my name a lot too, just because I'll be just wanting to freshen things up a little bit. You know, I think it was small cap millionaire, small cap happy penny stocks. Then I went to American Trader or something like that. So just trying to like mix shit up. You know, just trying to mix shit up. Look at this guy. Looks like Bitcoin is dead. Damn, that was fun. That's that fear porn that a lot of guys just, and this is called engagement farming. It's these dudes who just post shit like that to get you in your feelings, and now he's got a ton of engagement on the post. You know what I'm saying? This is all engagement farming. They know what the fuck they doing, man. Because Elon basically has set this up to where he'll just pay you to get people to do shit on the platform. Shout out to Elon Musk though. I mean, I still think he's, you know, I don't want to use that word right now because I don't necessarily have proof. But you know, he's allowed us to have this platform where we can kind of pretty much say what we want to say. So I'm grateful for that. And that's again goes back to why they hate TikTok so much is because you get to say stuff on there that you can't say on these other platforms where they can control a lot more easily. On TikTok you don't have uh, same-sex relationships being thrown in your face every 5 minutes. You don't have somebody who's trans trying to like bully you and stuff like that you see on Facebook. You know. Oh, American Trader. Okay, there you go. Yeah, American Trader. Yeah. Shout out to you, V. Appreciate you, V. You said Nubian Queen. Yeah, man. I like girls with big legs, man. I like girls with big, thick legs where their thighs touch. You know what I'm saying? I like my women healthy looking. You know, but on these live streams, that's just not that's not what's popping out here. It's you guys like girls who are really thin and you know, and I don't really talk to those kind of women. So yeah, maybe I could probably hire them. I definitely could hire a couple of them. You know, what do you think? What you think if and when Elon take X back public? It's gonna be some time first. I think it's gonna be some time until he does that again. It's gonna be some time until he does that again. Bitcoin's moving 70,000. Bitcoin is moving below 70,069 too. Miners are down, but not accelerating much more. Down besides this move. Good to see that. Would be awesome if Bitcoin can bottom around 68 and make its way back up again. Yeah. So me and him are thinking the same way. What's that? Future leader investing. Yeah. I mean, I see support at 68 as well. Me and him are thinking the same way. I see support at 68 as well. All right. I see support at 68 as well. Let's do our hourly support and resistance lines here. All right, where's our most recent highs? It should be right there. And does Alt H works yet? I don't know why my Alt H doesn't work on my, like I used to just be able to put Alt H and then for whatever reason it's not doing it. Let's find some support and resistance lines here, okay? And we do it on the hourly because it does such a great job of creating on the daily. I don't want to go too far low here, but yeah, there's some support at 68. Looks like the trend line actually gave me 67 on the support and resistance lines. So I mean, I'm cool with that, man. I'm cool with where we are right now. I would get a little nervous if we get past 67 though. If we get below 67, I'll get a little nervous. I don't mind 62 again, but I've got some options up there that, are holding some great value. I don't want to see the value diminish. Probably an excuse to buy more, but I'm already well capitalized in MSTR and Bitcoin right now. I really don't want to spend anything else. Do you pay high taxes since you're trading full time now? No, because I trade under a corporation. Shout out to a brother named, I want to say his name is Ben. And I've been saying this for years. Trade under a corporation. Trade under an S Corp. Trade under S Corp. I got an old business video on here. How to start a trading business or something like that. Trade under an S Corp. So I trade under an S Corp. I do not trade under my own name. Okay? When you guys go set up your trading accounts, they'll say, are you a sole proprietor or yourself, or are you trading under corporation? I always put corporation. All right, so get yourself a S Corp, right, with your state, just $50. Then go get yourself an S Corporation, man. This is the best thing for your taxes. Seriously, the best thing for your taxes. Yeah. But yeah, it's the best thing for your taxes, man. You said the hype of panic selling. Yeah, I mean, of course, look, in any Bitcoin rally, you're gonna have weak hands, man. And the thing is, the weak hands don't even know what's good for them. Imagine being a guy who like sold out of Bitcoin at 3,000. Like, you rode it all the way to 3,000 and sold it, and then like literally 6 months later it was at like 19 or whatever it was. Like, just be patient, man. The days future, like, look at this. Like, we hit 68 something and we're bouncing. Like, we just bounced $1,000. Did you guys see that? We just bounced $1,000. Like, that's crazy. That's crazy. That's why you can't let these people win, man. And MSTR is not selling off like it used to because it's got so much Bitcoin in it now. Here's Litecoin. Litecoin is another thing I own a little bit of too. And I'm so mad because I was going to make a Litecoin video at around like 66. I was like, yeah, and then I made the page and everything like that, the whole like thumbnail and everything, and I didn't fucking do it. It's my fucking regret, dude. Literally, I was ready to make this Litecoin video like, hey, everybody fucking jump into Litecoin. Big fucking regret. All right. And then the way to jump into Litecoin, LTCN was the ticker, is the Grayscale Litecoin Trust. And at that time, it was sitting like, it was like right here at 12. Yeah, it was at 12 something. All right. LTCN trades at a premium to Litecoin. So when Litecoin moves, LTCN is just like, boom. It's like a rocket ship. It's like a rocket ship. LTCN is what GBTC used to be. All right. So as you can see, Litecoin is pulled back, but LTCN is still high, is still hanging up there. All right. So that's a big regret. I'm introducing this to you guys now for those of you guys who didn't know, but boy, that's a rocket ship. It's truly a rocket ship. Let's go back to Bitcoin here, right here. Let's look at the 1 minute. You know, one of the worst charts to look at right now. Look at that. We bounced $1,000, guys. This is $1,000 bounce right here in 10 minutes. Why would you sell? If we can bounce $1,000 in 10 minutes, 3,500. Come on, man. These folks is tripping. These folks is tripping, man. I have a sole LLC, not tax corp. Should I change that? Yeah, you want to have an S corp. You want to have an S corp. All right. And you want to work with I don't know the thing by, because again, I go to a professional with this, and I always overpay by 100. I try to overpay by at least $150 every time, just because I never ever want them to come back and say I owe them X amount of dollars. But just get a professional. And again, these professionals, man, just get you a nice, good, decent accountant, right? Because you'll get the ones get somebody that's relatively young, they're going out on their own, you know what I'm saying? Or maybe like, early 40s, mid 40s, late 30s, somewhere around there, somebody you can grow with, because it really is a relationship. So you don't want to go to somebody who's like, literally about to retire or soon, or somebody, you want to have somebody you're going to grow with, because this is I don't want to call him your money manager, but he is and y'all not going to talk every day, right? So sometimes just a couple times, a couple times every so often, but you want to be able to have a relationship with this person. Hey, how's everything going? How's business going? Great. Awesome. How are your kids? Oh, awesome. Great. Hey, man, I just wanted to review things and just kind of let you know where I'm at. I'm going to send you over the reports or whatever he may use. I don't know, depending what software he uses. Tell me what we're looking like right now. What do I need to change? Am I making too many trades? Am I, he'll let you know that. Decent hourly rate. Got a decent hourly rate. What's going on, Big Onk? He said the last time you caught a live stream was 2021. Shit! God damn, nigga. Shout out to you. Appreciate you coming back in here, man. So this live stream, I'm gonna let this computer run all night, because see, the market is running again, because now I'm down 1,000. I was up 1,000, now I'm down 1,000. I'm down to 4,500. So the market is running again. The market is running again. So yeah, see, there you go. Look at that bounce. I lost 500 on that bounce. So I'm hedging my bets, man. I'm hedging on Bitcoin. I'm hedging on, because my Bitcoin is all in a company called Strike. So I use Strike for my Bitcoin. I do have a wallet, but man, I'm nervous about wallets. Like, I got my little letters or whatever, the little 12 12 code, 12-word code thing, but I'm still so fucking nervous about wallets and stuff. I don't know what it is, but I have to get comfortable with being off chain, you know. But I'm still like nervous. But I appreciate you, Big Ankh, for being back in the building, man. Yeah, I remember because I was wearing a mask at work. Woo! Yeah, yeah, man. Bro, they had us acting stupid with 2021, man. They had us acting straight stupid. The mask, it was just straight stupid, man. I go back and look back on some of that shit, and I'm just like, you know, it's crazy. Somebody sent me a what your, let me see here, photos. What your stimulus would be now, your $1,200 stimulus. Let me see if can I see that? There it is right there. Your $1,200 stimulus. Well, this was as last night, so your $1,200 stimulus is now worth $12,752. It's for those of you guys who instead had invested your stimulus. That's some crazy shit, man. That's some crazy ass shit. Yeah. Let's go ahead and see what other. So, what other stocks you guys are looking at right now, man? What other stocks you guys are looking at right now? I should have. There's some trade considerations that I had in Tesla right now. I mean, Tesla right now looking like a boring ass car company. I mean, it is a car company, but you know, maybe they've decided to start giving it that valuation. Because it's looking quite rough for Tesla. All right, it's beneath that 10 moving average, and I tell you guys that 10 moving average is very much that 10-month moving average is very much like a really great place to start putting shorts and longs. When stocks start crossing above that 10 moving average, that's a great place for a long. When it crosses below it, it's a great place to start selling some calls if you're into that kind of stuff, or doing some bull put spreads. You know, yeah, that's crazy. You said, and that's X10 if you were paying. Yeah, absolutely. Marve. I mean, that's a beautiful thing. And again, I just think about all the people who are living in the hood somewhere, living in a ghetto somewhere, who were making ends meet, and then took that money and did something stupid with. Because a lot of people did a lot of stupid shit with that COVID money, you know. And a lot of people are doing a lot of dumb shit now with their tax money. I know some people who got their tax money and it's already gone. It's already gone. They went and got themselves a car note, 25% interest at some C lot, D lot. You know what I'm saying? And I don't want to go into some of my anti-woman rants, but it just feel like when it comes to money, they just 99% of them just don't know what to do with money. You know what I mean? They just go on these dealerships and they fall in love with one car and sign anything. Like they're not even paying attention. And I think women more than anything are very overly confident about their ability to make a large payment in the future. A woman, and I used to sell cars. She'll come in and like, oh, and again, this is 2016, right? 2012 to 2016. Oh, I only want something for 350 a month, and then she'll sign for 515 or 485. Like, that's tight. Like, that's tight. Like, why would you? But they're so overly. Oh, I can do it. I'll figure it out. And then next thing, 4 months later, it's like, It's getting repossessed. You know what I'm saying? It's getting repossessed. You know. Honestly, I'm just waiting to see the shit hit like 520 and make another crash. Man, you ain't seeing no crash anytime soon, bro. You ain't seeing no crash anytime soon. I don't know why people think about the crashes. You ain't seeing no crash anytime soon, my brother. Because, that crash thing is what people said about real estate in 2019, 2020, 2022. Bro, we just lifted interest rates over nearly 120%. All right? Interest rates on mortgages went up 120% in 2 years. And these houses are still high. These houses are still high. And now rates are going lower again. The crash is not coming, man. There's no crash because there's not enough real estate to go on. You just brought in 6 million illegal immigrants, man. What crash? You just brought in 6 million illegal immigrants. You got the state of California passing the American Dream Act that gives $50,000 to people who aren't citizens to buy a home. Come on, man. What crash? We just brought in 6 million people who need a place to stay. What crash? 6 million new workers, 6 million new taxpayers. What crash? Come on, man. Y'all better get off this crash stuff, man. Every single day, 12,000 Americans turn 65. Okay? Millions of people are going to be needed to service these older people in these early years as they cash out. And we need to bring in these immigrants. And the government just don't want to be honest about it. We need these people to come in here and become taxpayers. We need taxpayers. That's all we need. The largest tax base is literally about to fall off the face of the earth, demographic wise. You know? This guy talking about sending pig feet. What the hell are you talking about? All right. X. U.S. Steel. You're talking about U.S. Steel. U.S. Steel pulled back to that 10 moving average. Boy, that's aggressive. What happened, man? Okay, was this earnings or what? Why did they lose almost $10 a share yesterday? No, wasn't earnings. So what's going on U.S. Steel, man? I'm gonna have to. Isn't U.S. Steel owned by like a French company now or somebody like that? Somebody just bought them out, if I remember correctly. Somebody just bought out U.S. Steel. I used to like this stock when I used to play penny stocks. I'm about to have my baby mama do only feed hilarious. And shout out to them OnlyFans chicks, man. Shout out to them. Like I'm not even mad about it. I used to be mad about it. I used to be like, hey man, like look, like, it's at the end of the day, like you can't do stuff like that for a living and not be affected mentally, right? And I think that it is a lifestyle that leads to death and destruction in the lives of women. But like you can't tell these women nothing now, man. Like you just, if she's got a great body, a huge, great set of tits, um, a freaking huge, like, donkey ass. Like, I mean, it is what it is, bro. Like, she's gonna say, I'm gonna sell it. She's gonna put up pictures, and she's gonna make more than what you would make at a job. You know what I'm saying? And it is what it is. I saw a video of a guy was talking about how like, oh, it's not fair that they make more than guys who fix the roads and guys who keep the lights on. I mean, it is what it is, man. It is what it is. We've got simps out here, and you've got guys who, unfortunately, who can't get laid, and which is just it's just sad, man. My heart is just so torn on OnlyFans just because it's uh it's unfair, but at the same time, it's just like that's where we're moving to as a society. It's where we're moving to as a society. You're going to create anywhere between, 1 million to maybe 3 million more women to doing OnlyFans over the next 5 to 7 years because they're going to be automated out of the workforce. All right, these women are going to be automated out of the workforce. They're, you know, the girls who used to answer phones and do like very easy, what do they call big girl jobs or whatever? Like in the corporate world, do these little women jobs. You know what I'm saying? Like these little office jobs, repetitive tasks over and over again. They're going to be gone. So yes, you're going to see more women, particularly in Gen Z and the generation behind them, Alpha. They're going to go into sex work. They're going to go into sex work. So money should be free flowing into these hard assets. I saw CEOs Jim Lamar sold off millions of shares, particularly possibly to buy crypto. Oh, absolutely. I don't doubt it. I don't doubt it at all. Here's IYT. Yeah, I'm looking at the transportations. I'm looking at the transportations. Y'all hitting me up, but y'all not saying nothing, man. 470. I don't know who that is. Yeah. Money should be free flowing to hard assets, blah, blah, blah. I mean, the hardest assets in the world is Bitcoin. There's no harder asset than Bitcoin, bro. That's the end game. Bitcoin is the end game. There's no other end game besides Bitcoin. All right. You're a single mom right now. You only got $50 a month at the end of the month left over. The answer is Bitcoin. You're a young man coming of age. You're 19 years old, trying to make a life. Save your money, invest in Bitcoin. All right. Start a business if you can. Get as much education as you can. Yeah. Invest in Bitcoin. All right. Dip is red. We've been through this run. Yeah. Pacific Bitcoin. Oh, what is that? ETF, Bitcoin. Yeah, it's coming. All of that. This is definitely coming, man. This is definitely coming. 100K Bitcoin, all these ETFs buying. It's coming, man. They ain't even got to look, bro. We got to $70,000 in 6 weeks. We got to $70,000 in 6 weeks. We still got 7 months. Well, how many months we got left to go? 7 months, right? 9 months. We got 9 months left to go. All right. We got 9 more months in the year to go, bro. It's fucking crazy. Things get more expensive. It's moving up in years. Okay. Yeah, man. This is a great time to be alive. You know, I got better technology than the King of France 100 years ago. I could do more with my life than the Vanderbilts 100 years ago. I can do more than them. You know what I'm saying? I could do more than them 100 years ago. great time to be alive, man. All right.
Qualifying for inclusion
All right,
in the S&P 500. The lower bound market potentially qualifying. Previously, I talked about MicroStrategy potentially qualifying for inclusion in the S&P 500. The lower bound market capitalization is now about 14.5 billion, and MicroStrategy is now almost 30 billion. If MicroStrategy does get included into an array of S&P 500 passive index funds, that will bring a new wave of consistent passive flows to MSTR. But I think there's potentially an even larger, more important feedback loop.
Come on, man. Get to your point, bro. Get to your point.
It's Saylor's strategy of perpetually increasing MSTR's Bitcoin holdings per share. Bitcoin is the apex digital property, as he has explained. Would you buy a company who's trying to grow their seashells per share? Then why would you buy a company who's trying to grow their dollars per share? Saylor is actually trying to grow his Bitcoin holdings per share, the world's best form of property.
Okay.
Saylor obviously understands the game is accumulating more Bitcoin, the only immutably scarce asset, but he's effectively found a unique arbitrage opportunity to accelerate this. MSTR is consistently valued at a price greater than its book value, which is mostly its Bitcoin holdings.
Okay.
This is true of almost all public companies. Their price to book value ratio is above 1, indicating that the total market value of the company is greater than the sum of all of the individual assets that the company holds minus their liabilities on its balance sheet.
Right.
Right now, the price to book value for the entire S&P 500 is almost 5, indicating that the market value of a typical company in the S&P 500 is 5 times higher than the book value.
Okay.
This is the arbitrage that Saylor is performing. Large public companies are valued higher than their actual book value. This is very reasonable when a company has high growth expectations or investors are buying equities at any price to save for the future when their currency is being debased.
Okay.
But that means you can dilute shareholders by issuing equity or convertible notes, and it can be accretive to shareholders if they are using Bitcoin per share as their metric for return. And it's logical to use Bitcoin per share as your metric, as it's the apex digital property. Over the long run, it will likely outperform the dollar and all other fiat money, which is designed to debase against basic consumer goods. As a capital allocator, your objective should be to accumulate more Bitcoin, not more seashells, dollars, salt, or glass beads. This strategy may even work in a bear market. If MSTR stops trading at a premium to its Bitcoin holdings, then MSTR can borrow money and buy back underpriced shares that are trading at a discount to the Bitcoin they hold. This strategy may work in both directions. It's actually pretty genius. This could potentially open up a new wave of adoption. Either nobody copies Saylor and MicroStrategy relentlessly continues accumulating Bitcoin and drastically outperforms all of its competition, or the S&P 500 catches on and begins performing the same strategy. So who will be next? Which public company will adopt a Bitcoin strategy and upgrade their benchmark to Bitcoin?
Great video. Great video. Yeah, I'll give you a follow,
Previously, I talked about MicroStrategy.
Joseph Burnett. I'll give you a follow for that. If you like it, I'll come back to it. Yeah, great video. You know, saw some stuff I already knew, but I mean, for the most part, you put it together real nicely. Yeah, Bitcoin is the end game, man. Bitcoin is the end game. I hope you guys saw my video yesterday that trade MRVL. We're looking for it to settle down here. Hoping that 63, 62 is the end there on that one. But it's got a really, really nice risk reward here on this AI thematic trade that I think's got some great potential here. But we need to see this, you know, settle down here before and above 63. We'll see. Really good trade, by the way, too, on that risk reward ratio. Bitcoin back above 70. I told you all that. Man, look, man. After a while, you've been trading so long. After a while, some of you guys, man, after a while, you've been trading. These folks done played you out. These folks done played you, man. And when I say you, I don't mean you necessarily in the comments. I'm talking about like, there's somebody out there that bought today at 72 and just sold at 68. And now you back on the phone and you see it's at 70 and you're like, damn. But that's the lesson you got to go through. That's the lesson you got to go through to end up like us. You know what I'm saying? To end up like us. Okay, this market's running hard. I'm almost back down to 3,000. What the fuck? I was up $5,400 for the day. You know? I was down to 5,400 for the day. What the hell? You know? As you guys know now, with the 24-hour market, Interactive Brokers is doing so. Now the market might be closed. It's 4 o'clock, but these options will still be moving around at least for a couple more hours. And that's just what it be, man. We are moving to a 24-hour market too. It's only a matter of time because now on Robinhood, you can buy stocks 24 hours, right? And it shows you the price. Yep, I saw that. Robinhood will let you buy a stock 24 hours now. Yeah, I saw that. I definitely saw that. If I'm wrong, I'm mistaken, but I swear I saw that on Robinhood where you can go in there and they're showing you the price like literally as it happens. All right, now we're fighting for that support line I made earlier. Let's go back to the 5-minute. We can see it. Well, let's go to 30 minutes so we can see it clearly. That support line that I thought here's going back to 2 days ago. Is support going to become resistance? I hope that's not the case. We should bust right through that. All right, it looks like we are through. All right, so it looks like we got through it here. Let's see if we can get it, because eventually, again, we got to get back above that 50 RSI. All right, because I don't care what anybody says. Every trending stock has to get above the 50 RSI. All right. Ooh, this is a very convincing candle for 30 minutes. Wow, that's convincing. Look at that power, guys. Fuck. Shit. BlackRock has 300,000 Bitcoin. Shit. Oh my God, man. And you know what's really fucking fucked up, man? Bitcoin once traded for 33 cents, bro. What's 300,000 times 33 cents? I want to do the math. That's not. God. That's 100 G's, bro. That's $100,000, my nigga. My old man just sold his crib, and they got a check for like 215. Oh my God, man! Somebody give me a time machine, man. Somebody give me a time machine, man. I'll go back in 2013 and get 100 racks. I know exactly where to go. God damn. Anyway, we all been there. Buy up, buy high, sell. Yep, sell the low. We all been there, bro. Everybody got to learn eventually. Everybody got to learn eventually. What have you guys been liking on YouTube? Right now, I've been really enjoying a lot of Austin Holloman, the guy who travels around the world meeting women, and you know, that's a brother I definitely like his content. I'm not a big fan of Floyd, his co-captain, or I don't know if they're just friends or whatever. I'm a big fan of those guys as they travel the world. You know, just two brothers out there, you know, going to different countries in Latin America, smashing women and having a good time, seeing the sights and stuff like that. I support anybody out there who's doing that. You know, I support brothers going, particularly, you know, Black Americans going out there, traveling, seeing the world, putting out a different light than what's you know what most black men experience on a day to day. So I love that for them. Love that for them. All right. All right, let's just see what else is on there because y'all not saying anything. So let's iShares, a lot of monster ETF. Was this yesterday? Okay. Oh no, this is today. 1 day flow $798 million. God damn, there's so much money in the world, man. Like you don't realize how much money is in the world until like you really start to see like these flows and like what's going in, what's going out. Like how do you pull in $500 million into your business in 1 day? That's crazy, bruh. That's crazy. Shout out to Lynn Alden. I do like Lynn Alden. Her book, Broken Money. That's my next book to read. I'm reading the Bitcoin Standard by Sahedin. But I like Lynn Alden a lot too.
Some of the like the no coin or TradFi arguments are Bitcoin is no longer like cypherpunk money because there's ETFs on it, right? But that's a silly argument because Bitcoin didn't decide to have ETFs on it. It's not like the Bitcoin committee council got together and decided we're going to have ETFs now. There's no such thing as a Bitcoin committee or a Bitcoin council. Bitcoin is just an open source protocol. And now TradFi has decided to put structures on top of part of it to bring some of it into its own system. All the ETF is in developer terms is basically the API for the fiat system. It just allows the fiat system to plug into Bitcoin a little bit better than it used to. That's all that these do. It's an upgrade to the TradFi system, not an upgrade to Bitcoin, even though it moves Bitcoin price more than it moves TradFi price this cycle. And so that doesn't change the fact that there's other uses of Bitcoin that are more cypherpunk, right? If our parents have Bitcoin in an ETF, right, that's not particularly cypherpunk, but they don't really have a cypherpunk need right now, so they're like fine with that. Whereas,
okay, she's losing me where she's talking about cypherpunk. I got to do some research on that. I don't know what cypherpunk is. Okay, I'm lost at the cypherpunk reference because her argument is connecting to cypherpunk. I don't know what cypherpunk is, so I need to do some research on that before I get too deep into it. Michael Whitman and Tame the Ark have a multi-view live stream. Okay. Now are they travelers, Marve? Are they travelers? Are they travelers? Judge says he's reached a conclusion. Yeah, Craig Wright. Shout out to guys who were going after Craig Wright. He was calling himself Satoshi Nakamoto the whole time. This man was lying. All right, he created a whole fake white paper trying to show that he had the original edits and the whole thing was fake. They showed that he had just created the shit. You guys want to know who Satoshi Nakamoto is? I'll tell you who's Satoshi. This is Satoshi Nakamoto, Dr. What's his name? Dr. I think it's Stephen Beck. Or is it Beck? Where is he at on here? Dr. Stephen, but he's Satoshi, man. God, what is his name? Dr. Stephen Beck? Somebody here knows who the fuck I'm talking about. Stephen Beck? Back. I think it's Back. Dr. Back, Dr. Stephen Back, Adam Back. There you go. This guy is Satoshi Nakamoto. That's him. That's him right here. That's him. This is Satoshi right here. This is the guy who's Satoshi. It's him. He's got a PhD in computer science. He's the co-founder of Blockstream. He also is the creator of Hashcash, which was the foundation for what later became Bitcoin and Bitcoin mining, right? All of the skills Satoshi Nakamoto had, he has the skills, right? The British handwriting, he's also from Britain. Everything lines up, man. Like, even like the time he joined like Twitter, like everything just like lines up. Like, somebody broke this really good down on YouTube. There's a video on it where they expose Adam Back as Satoshi Nakamoto. And yeah, if you're not following this dude, follow this guy, because that's him. That's him. It's him. It's him. You know. They got 2 different channels on YouTube following the bull run. Okay. Tame the Ark. What is that? Tame the Ark. Let me go look at what is that. Where does Tame the Ark? Let me see. What are you talking about here? Tame the Ark. I'm gonna look that up right now. Oh, okay. So he goes live and follows. Okay. So he's a live streamer. Okay. And he just kind of lets his thing go. Okay. That's what's up. Wow, he's got some very elaborate looking charts. God damn, there's a lot of shit on that chart, man. Tame the Ark. Yeah. Shout out to him. Okay, so he's not a big time live streamer though. Does he stream a lot? Yeah, he really doesn't stream a lot. Okay. He's more of a okay. I'm trying to get back big on streaming, like streaming day to day to day to day. That's my goal. My goal is I'm trying to get back streaming heavy with the streams. They say he worked for the CIA. Adam, I'm not. I don't doubt it. I don't doubt it. If Bitcoin is a secret off ramp for the U.S. dollar to be able to get Americans onto a new standard currency, because America is failing. The dollar is failing. I mean, I wouldn't be surprised. The dollar is failing. You know, but at the same time, it's unlikely because we would see way more corporations going ahead and buying right now at these prices. Why are they waiting for it to get to 100,000 before they start buying? You know what I'm saying? Like, these insurance companies should be doing everything possible to do exactly what Michael Saylor is doing. Sell shares of your stock to go buy Bitcoin. Secure your liabilities against Bitcoin. Right? As the wealth of the Bitcoin continues to get in value, right? The value of the Bitcoin continues to increase, you can borrow against the Bitcoin. That's the thing about the people don't understand. The Bitcoin you're buying, the true wealth comes in the fact that you're going to be able to borrow from yourself. You're going to turn yourself into a bank in the next 10 to 15 years. You're going to turn yourself into a bank. You can borrow against your own Bitcoin, right? You'll go to a fintech institution. You'll say, hey, I've got $100,000 in Bitcoin. I'm going to put this at risk for X amount of dollars. I'll make payments on it, this incredibly stupid low interest rate, right? Forget about like 20% interest, 30%. Those days are gone once we move into a Bitcoin crypto system. You'll be stupid to pay more than 1%, right? Because the money's virtually like you're not going to want to pay more than that. You're not going to want to pay more than that. Man, I can go so deep into, man. Again, if you haven't read or listened to that audiobook, it's called The Bitcoin Standard, man. Go listen to it, man. Go listen to it. I got Audible. I listen to an hour audio books every day. Sometimes 2 hours. Yeah, the Bitcoin Standard. Go listen to it by Saifedean. It's a really good book, man. And Audible too, man. It's the best $20 a month I've ever spent. The best $20 a month I've ever spent. I've listened to so many books, got so much information on how to build my confidence, how to act with women, how to, just, man, so many things. Manage my credit. Like, it's just so much information you can get at a click of a button. And there's, thousands of free audiobooks too. Free. There's a ton of free stuff. Podcasts, absolutely free, you can listen to. Just soaking in game, man. They're putting a lot of game onto these podcasts that, like, you don't know anything about. Somebody says because of the halving. The most impressive halving is the one that's coming right now next month. That's the one that, like, don't get me wrong. The one next month is going to be a big deal. The one in 2028 is going to be a big deal. But understand, 80% of Bitcoin is already out there. 80% of Bitcoin is already out there. Our biggest threat to Bitcoin is slowing demand and or the top 100 crypto owners coming back and just selling on top of us. Other than that, I'm not, the halving and all of that. Like, after this next one, it's not even going to be consequential because it's, they're only going to be, what, 400 daily made? So, like, less than 400. We're eating up more than 400 now. All right. What we need to do is we need to continue to keep convincing people to buy Bitcoin and then save their Bitcoin. That's what's going to keep making it go higher. And this is one of the big things that one of the biggest reasons why I love seeing all of this corporate support right now. Fuck retail, man. Retail ain't shit. I don't give a fuck about somebody that got, $100 to put in Bitcoin. No, we want to see, GE. We want to see Apple. We want to see, Robinhood. We want to see all of these big companies. We want to see them buy. All right, we want to see them buy. Somebody who's got $1,000, $100, $10,000, whatever it is invested. That's not enough. That's not enough. You said watch the Dow. Yeah, absolutely. I mean, you can't just be all up on crypto, but at the end of the day, we can't deny the outperformance. Like, the performance has been insane, dude. You can't deny. We're going to watch all this. These are all asset classes, but the asset class where all the money, I don't want to say all, but the good, overwhelmingly outperformance is taking place is crypto. Hey, take care. Appreciate it, V. Appreciate your contribution in the chat. But yeah, man, I'm always gonna put my eyes on wherever the money's at, man. I'm black. I need to get it how I get it, any way I can get it. You know what I'm saying? I don't know about you guys, but I don't have a grandpa with $1 million inheritance. I don't have I don't have none of that. You know what I'm saying? So I gotta follow wherever money is being made. You know what I'm saying? I'm not afraid to admit that. I'm doing it on my own. Nobody's helping me out here. I'm not counting on any kind of inheritance or any kind of money coming in from any kind of where. It's on me. It's on me. I don't know about you other black folks, but it's on my back 100%. MSTR up already after hours, back above 1700. Okay. Let's keep looking here. Let's keep looking. Yeah, but go ahead and definitely subscribe to Mr. Adam back here. Let's go see who's live right now on X. Let's see who's live. Can we see who's live on here? Media Studio. Let's see what are they talking about here?
Apparently it was from Reuters. I couldn't find the article on Reuters itself. There was just a headline going around. So that one I thought was, I don't know if that's what we're talking about here, but yeah, I wasn't able to dig in more and find that. Colgate raised their dividend, by the way. Who knows if any of you guys even watch that CO? 50 cents up from 48 cents, effective Q2. WP Carry also increased theirs up to 86 cents.
You cut out?
Do you hear me?
I can hear you.
You guys hear?
Gotcha.
Yeah, I can hear you.
Yeah, well, someone tell Stock Talk to get in and come back up.
You say drop down, stock down. And come back up.
Nice, he did it. Good teamwork, guys. I appreciate you. I'm seeing something around Nucor as well. They announced some guidance for their forward quarter. They expect EPS between $3.55 to $3.65. Wall Street wanted $3.76.
All right, he ain't talking about shit, man. He ain't talking about shit. All right, let's get what you guys want to look into, man. You guys ain't talking about nothing. I'm scrolling. I'm hoping no big set of titties pops up on this stuff when I. Who is that? Oh, okay, you cute. All right. As I scroll down here, you know how Twitter can be sometimes. I don't follow that shit, but. And his girlfriend allegedly murdered 23-year-old. Oh, damn, that's crazy. Oh, he's a G League player. I'm thinking, what the hell? Oh, I got it here. Born was disabled at site after Texas suggested to prevent access of mine. Oh. Who's the ultimate boss of Bitcoin? There can only be one. Yeah, Michael Saylor for sure. Michael Saylor for sure. He's the big boss of Bitcoin. BNB? Airbnb? Yeah. I rock with Adam. Dude be having me in tears. A normal day is 3% daily trade, or can only go 6% when it pushes up recently. I mean, big players have been accumulating. Yeah. Absolutely, bro. I agree with you 100%. This man, stop having sex with women who can't take you out on dates, pay for you. Hilarious. What the hell are you talking about?
Wages are rising faster than prices, and now we have among the lowest inflation rates of any country in America, and we're still fighting to lower it.
Whoa, wait, what?
Wages are rising faster than prices, and now we have among the lowest inflation rates of any country in America, and we're still fighting to lower it even further.
This man is just. I mean, I think that was definitely a slip up, but still, man. I mean, he's slurring and. Like, this is crazy. Look at this. What the fuck is that?
Asking anyone to respect me. I'm demanding it. When I tell you what my pronouns are, I expect you to use them. I deserve baseline human respect. You don't have to tolerate me, you don't have to accept me, you don't have to like me, but you do have to respect me.
Last time I checked, respect is...
Jesus Christ, man. I don't even want to say nothing, man, because these people get your whole channel deleted and all that stuff, so I don't, I don't even want to talk about it. Crazy, man. So what you guys out here, what you guys doing, man? What you guys, give me a stock to look at or something? You got your pullback today. That's exactly what we wanted to look. Mark Coleman wakes up in tears while embracing his daughter after successfully saving his parents from a house fire. Wow.
I almost had to go outside.
What the fuck?
I got him, but I couldn't find the hammer.
Jeez. This dude who's always making them faces. This guy, that's an ugly ass nigga, bro. He make a lot of money, but he an ugly ass nigga. And that's what I'm just trying to say. Like, women say that they have standards, but at the end of the day, like, just have a lot of money. Like, whatever standards that women are out here saying about what they look for in another person, it's all BS. Just have a lot of money. I don't care if she thinks like you want to have like, I need somebody who's 6'6" and makes $200,000 a year and all of that stuff. Just have a lot of money, bro. Just have a lot of money. Just have a lot of money. All that other stuff is just have a lot of money. Just have a lot of money. Is Rumble buying TikTok? Says who? Rumble ain't got no money like that. What you talking about, man? Rumble ain't got no money like that. Come on now. Rumble ain't got it like that, man. And that reminds me, I wanted to start posting on Kick. That's a big time live streaming thing as well.
Is your strategy you just don't give a shit? You're buying no matter what, like periodically?
Yeah. Yeah.
Huh. Hilarious.
What's hot?
Sheeper Chinese Ching Ching Chong.
What's how Korean hummus?
Orange chicken looking ass.
Kimchi looking ass.
Dog eating motherfucker.
What the fuck was that? Hilarious. So yeah, up 71K again. Shout out to you, bro. Michael Black, what did you say? I didn't see what you said, bro. Up 71K, bro. I'm telling you, they shaking you out. I'm about to order some fried chicken here in a minute, or maybe I'll order a pizza. I don't know if I want to order some fried chicken or a pizza. I tried to order a bucket from KFC on Grubhub. Why the fuck is a bucket of chicken $52 to deliver? It costs $26. How do you go from 26 to 50? I'm looking at the fees like, what the fuck? How do you go from 26 to 52? Fucking ridiculous, man. Hey, man, y'all, hey, look, if my unrealized goes down to 3, I'm going to have y'all start hitting the fucking Cash App because this, god damn, your boy done lost $1,500 today. I got to as high as 5,500 today on my profit and loss. And now I'm hanging on to $4,000. What the fuck? Hey, but that's options though, man. As long as I make my 7,000 a month, I'm good, bro. You know, as long as I make my little seven to 15, I'm good. So far, it's the 14th. I'm up 4,000 over the last 2 weeks. Not bad. You know, not bad. No jealousy to those guys who make $4,000 a day. It ain't me. I'm good. I don't need that kind of risk in my life. Eventually, I will get there. Please believe I will get there because my account will be so large that as the options deteriorate, there will be thousands of dollars. Yes, speak it into existence. Thousands of dollars will be made daily as the expirations come closer day by day. You got to speak it into existence, man. I went and got that book, you know, 369 manifestations and all that stuff. I've been reading books about manifesting my future and stuff. That shit works, bro. I don't care what anybody says. Manifesting and you know, working the plan and like, bro, that shit works. That shit works, man. Dear citizens of Russia. Right. OJ the Juice Man has been arrested on cocaine and gun charges in Georgia. Damn. That's crazy. But I did like his music back in the day, though. See, nigga simping already. Look at this. This nigga. Isaiah, why the fuck are you simping, man? Why are you simping? Bro, Isaiah, I love Isaiah. I really do. I love Isaiah. You know what I'm saying? You guys know who that is? I love Isaiah. That Isaiah's my brother. But he'll make comments like this on Twitter, and it's just like, bro, you're above. I mean, we're the YouTubers, but you're above us. You done went and wrote a book. He wrote a book called Bitcoin in Black America. These white folks, man, they sent him all across the world to talk about that book. You on another level, bro. Don't be talking like that. You on another level, bro. You know? Isaiah, bro, you on another level. These folks is flying you all around the world to talk about Bitcoin, and like he posts stuff that just like, bro, why? Why are you moving like a YouTuber? You know what I'm saying? Like, what the way he posts is like crazy to me. Like, you on another level, bro. Act accordingly. I don't be getting the stuff he be posting sometimes. You know? Because there's some people that I know don't follow him anymore. He's like, he had Obama following him for a while, and then he had, you know, some big name people, man. Don't be fucking that shit up trying to be cool with the niggas, man. You know? I never understood that. You know, what's your Bitcoin address? And he got this big booty model on his page. Come on, man. These females ain't going nowhere, bro. You got a rep. You got a reputation. You said, look at it. Even the women are calling you now. You simping? Send me some to mine too. Come on, man. There you go. Shout out to this dude. Bull markets are for pimping, not simping. That's what I'm talking about, man. That's what I'm talking about. That's the attitude I'm taking. Bull markets are for pimping, not simping. And he follows me. I love Isaiah Jackson, but you know, come on, man. Don't be posting stuff like that. I'm on small trades. Bitcoin is booming again after the drop. Okay. Yeah, man. Don't let these companies push you out, because that's exactly what they have days like that to do. just to get the weak hands, the guys who are down $30, $50, $150, and it's like, oh my God, I can't hold it anymore. I gotta sell. You know. Yeah. Crazy, man. What the hell?
Yeah, we were all thinking it. Israel is trying to buy TikTok. And this is one of those rabbit holes that I had no idea how deep it was about to go until I fell in. So bear with me here. And before the AI censors me, the country Israel is not trying to buy it. It's people with really deep ties to Israel. This lead came from Whitney Webb, the patron saint of independent journalism. And it starts here with Steve Mnuchin, who just announced that he's putting together investors to buy TikTok.
Wow.
Wait, Steve Mnuchin was the U.S. Treasury.
Wow. That's crazy. Bro, these people are, oh my God, I can't even say the word. I can't even say the S word, bro. The S word that ends with an N. They're literally the living manifestation of the S word and it ends with N. What the fuck? That's crazy.
Treasury Secretary. He's not Israel, right? Well, let's peel this onion back one layer at a time, starting with just the fact that he's Jewish, just par for the course, and don't.
Michael Black, you said you have almost $42,000 in cash. What you should do with it? I take 10%, put it in Bitcoin. I take another 10%, put it in different stocks. And then I take 10%, put it in Bitcoin. 10% put in like an altcoin, like I prefer Litecoin, right? Something like Litecoin. Put another 10% in Litecoin LTC. And then, so that's about 8,000 right there. And then I take another 10%, put it in different ETFs that you may like right now. And then I'll take the balance of whatever's left over, and then I'll put it in what are called, oh gosh, what are those stocks that pay you every single month? That pay that dividend. There we go, dividend stocks. I'd look at some really great dividend stocks for you to put the majority of their funds in right now. So you got some exposure to the high-powered stuff, some exposure to some great companies that are doing really great things right now, right? And then the majority would go into some dividend stocks right now, because right now we're the market is really, really hot. At the end of the day, where you don't want to be is in cash. You don't want to just be sitting in cash. You don't even want to be in these money market plays right now either. I mean, even those aren't even doing that great. All right, you want to be in some great. If you got great cash, you want to be in some great dividend stocks that pay a great dividend monthly or even quarterly. Just kind of sitting on the money right now. Oh shit! What I do?
All thinking it. Traveled to Israel with his century of finance career at Goldman Sachs and hedge funds. He was a key member of the Trump campaign. And among his many ties to questionable people in finance, he's buddies with Michael Milken, who's famous for being one of the richest and most evil scumbags in the history of the last century of finance.
Okay, I want to watch that later. I don't want to turn you guys off here. You hope INTC breaks the ceiling. Yeah, INTC is gonna break that, bro. It's just a matter of time, man. Like, we talk about INTC. I made a video on INTC. It's a matter of time, man. It's right now you've got some consolidation going on right now in INTC. I know it's frustrating. I made a video on that, talking about eventually we'll break through the 50 here, but the problem with Intel is that the exposure to AI isn't as strong as you get in NVIDIA, right? You get in SMCI, you get in MRVL, you get in Snowflake, or, any of these other like stocks that are really running right now, when you buy a server rack, right, or when you buy a new computer, right, particularly a supercomputer that's made to help in one of these learning, these LLMs, these big learning, what is it called? Like LLM. I forgot what it stands for, what the first L stands for. But the most important part of that supercomputer are the graphics cards, not the processors, right? So NVIDIA wins huge. And Intel, which only has literally, for the most part, one product within these computer systems, which is maybe maybe the CPU, and outside of that, maybe the motherboard. Sometimes it's not even the motherboard. So all they got is really that CPU and a few other small peripherals in that computer system. It's you're not seeing the kind of returns that you would hope to see in the line of business that they're doing. And that's what's frustrating for a lot of investors right now in Intel. It's just not there, man. It's just not there. So you're just gonna have to let it do its thing, man. Eventually it will happen, because at the end of the day, like, a rising tide lifts all boats. But I understand it's frustrating. It's been like that since January. You haven't gone anywhere in Intel in January. That's why when I made Intel, that video on Intel, I told you to sell the $40 call and buy, I believe it was the $38 call, right? Because the expectation is that it's going to sit above 40 for the next several weeks. Eventually, we think we got to get a move higher, but I just can see 40 hanging around for much, much longer. And I believe your break even was like 38 something on that trade. So you're keeping it tight, but it's the best you can do right now. It's the best you can do right now. One of my homegirls is calling me. I don't know. She only called me when she's trying to make some money. And I'm not on that kind of parade right now. I haven't heard from her in months. Yeah, I'm not. It's so crazy that she would call me during a live stream. They're buying shares that are low all day until the market closes with Bitcoin now. Your thought? Okay, yeah, it could be. It could be, but I mean, like, you gotta understand, like, when you're moving with hundreds of millions of dollars, you need the liquidity of an open market. So, it wouldn't benefit them to buy after the close, because you need that liquidity. You need all those small little traders allowing you to being able to get better pricing on your large purchase. Liquidity for the most part dries up after the market closes. So it wouldn't be good for you per se to sit around and wait. One second here. Let's see what the hell she's talking about. So they're often higher in the morning. Oh, absolutely. Well, because also you got to remember, Bitcoin is an international market. It is an international market, and the fact of the matter is, like, Bitcoin opens, right? The Chinese market is about to open up here in 4 hours. Right? So the Chinese market is another big market. It's an illegal market, but it's a market. All people all over the world are going to be waking up here in a couple hours and, buying Bitcoin. They get paid too. And, if you're someone who lives in Nigeria, I mean, have you seen what, Nigeria has done to Bitcoin? or what Bitcoin has done to Nigeria. Like, bro, it's not even the same. Like, it's just embarrassing. Let me see here. Nigeria, not found in crypto. Nigeria, Bitcoin. Can I know there's a. Hold on, man. BTC NG. Is that one? No, that's not it. BTC. And God, man, I know I'm not doing something. I'm not doing something right here because I know it's. I know I'm not doing something right here. But what Bitcoin? Let me show you. I can show you at least on Google, right? Can I show it on Google? Oh shit! No, I don't want to leave that site. Fuck. I think I can show it on this. U.S. dollar to Naira. Oh, no. Naira to Bitcoin. Yeah, basically nothing. Yeah, so one Nigerian Naira can't even get you one Bitcoin. One Nigerian Naira can't even get you one Bitcoin. Bitcoin has basically ate all value from the Nigerian Naira. All right. Even the Brazil real, like one real can only buy you 0.0000028 of Bitcoin. Like you guys, like it's crazy, man. Like $1 and $1 has been losing it too. Luckily, I mean, we still got you got an extra zero. With $1 right now, you can buy 0.0000014 Bitcoin. All right, with $1. That's the most Bitcoin you can buy right now. Obviously, back in the day, 2020, you could have bought a little bit more. Over the last couple of years, you could have bought way more in 2016. Damn, look at that. You could have got 0.0023 Bitcoin in 2026 with $1. But yeah, as you can see here, like $1 doesn't get you shit anymore. Doesn't get you shit anymore. All right, let's go back on X. Yeah, 18 ETH for one Bitcoin. 18 ETH for one Bitcoin. It's crazy. Like, and that's the thing that people don't understand about like these smaller cryptocurrencies, because there's definitely a place for them, right? I definitely believe there's a place for Litecoin. I definitely believe there's a place for ETH, even though I think it's ETH is a low-key scam because like the gas fees, the burning of the tokens, like just weird shit. Solana doesn't even work half the time. But there's a place for them, supposedly. But if Bitcoin eats everything, it also eats at those things too. Like, understand, like, people who make a shitload in Solana, they're going to eventually go to Bitcoin. Like, it's only, they're eventually going to take their gains from there and go to Bitcoin. So, so it's interesting. Vigilantes who are in our country legally have been arrested for terrorizing the neighborhood of Baltimore, Maryland, robbing their homes. Wow, crazy. But yeah, man, what else? I'm just trying to keep the clock rolling here because I'm trying to keep my stream up for 10 hours. I'm gonna do that today. I'm gonna do that tomorrow. I'll probably do that for the rest of this week, to be honest. God damn, my PNL is dropping. Shit. My P&L is dropping, bro. I'm almost down $3,000. What's going on? What's going on with Bitcoin right now? Oh, my Bitcoin's fine. Let's see what SPY is doing. Okay, so it's just all right. So it's just the after hours funny business. Yeah, just after hours funny business. Okay. Yeah, but Michael Black, going back to what you were talking about, man, you gotta some choices you gotta make, brother. You got some choices you gotta make. You got some choices you gotta make, bro. $85 beats a minute. Okay. Make it to the rally, buying some shares all day. Okay. Long-term strategies for daily use. Yeah. I mean, ETH BTC is what? Or is it BTC ETH? Yeah, there you go. BTC ETH. Yeah, man. Bitcoin eats everything, man. I'm telling you, Bitcoin eats everything. So this should be this. If this is coming down, that means ETH is doing better against Bitcoin. But right now, Bitcoin is clearly winning. Bitcoin is clearly winning, right? If I'm reading this right, yeah, Bitcoin is winning. This is taking more Bitcoin. Am I reading that right? Why do I feel like I'm not reading this Bitcoin ETF right? Yeah, Bitcoin is clearly winning because it's costing you more ETH to get one Bitcoin. Okay, yeah, I'm reading that right. I'm confusing myself a little bit here. Okay. What's this going on?
I won't be able to afford rent. This is the first month I won't be able to afford rent. I'm not a rich person. I don't have a lot of stuff. I have basic household necessities, a couch, a bed, washer, a dryer. That's about it. A car. I don't have a lot of lavish things. I don't go on vacations and I don't spend a lot. Rent's increased from $1,300 to $1,800. The food prices are too high. I've cut back on eating because I literally cannot afford food. I've cut back on my favorite snacks, cat food, treats. I'm exhausted all the time from being overworked and underpaid. You don't catch a break when you grow up poor. I don't need much to be happy. I just want to be able to live comfortable. I just really need to catch a break right now. I'm trying so hard and I feel like I'm not doing enough. I don't have family. I don't have anything to fall back on. This is the first month I won't be able to.
You gotta get a man. You gotta get a man. I mean, a lot of you ladies, man, you gotta get a man, bro. Like, young lady like you, she's a relatively attractive woman. You gotta get a man, bro. You gotta you gotta do the 2 income thing. A lot of you girls, you don't make enough money to do it by yourself, man. Y'all just don't make enough money. You trying to live a city girl life, making $40,000 a year. Yeah, there's some women who are doing well, but they're not on the computer on TikTok, saying that they're poor. She's saying that because she doesn't work enough. She doesn't work a high-paying job. So you got to go get yourself a man. You know what I mean? Somebody you can go 50-50 with, you know, and, live forever, happily ever after, man. Like, y'all just be doing too much out here. You know, a lot of these women just be doing too much. He said that the idea that single women can live off of one job is a weird concept that has never existed before our recent history. The idea that a single woman can live alone off of one job. Yeah, he's actually kind of got a point about that. Even though I don't like Tim Pool, I'm not a big fan of Tim Pool, even though he's doing the streaming thing. And I think he's low key an R word, but I don't have any proof. But yeah. Let me see. Oh, here's Bitcoin. Here's Mr. Dave Ramsey.
Well, my question comes from Jason in Connecticut, who's also not evolved. Can we start treating Bitcoin the same way you would treat single stocks? Crud, son. I understand you're not a fan. No kidding. Where'd you figure that out? But an asset with $1 trillion market cap is not a beanie baby. No, but it's still thin air. Ask people like Warren Buffett, who says if he doubled the amount he had put in Bitcoin, he would still have zero because that's the amount he's put in Bitcoin. I'm going with Warren on this one. Not saying you have to add it to your portfolio, but it's a good enough asset to invest 5%. No, it's not.
Okay, I don't know where the 5% comes from.
I don't know
That's
where
an
the $1 trillion
arbitrary
market cap comes from. Mist and smoke and mirrors, like the whole
here's what's
freaking
happened,
concept. Question comes.
Good. Hey, I want people like that to have that attitude, because you're going to turn around and have to buy it from me, or buy it to join me at $250,000. That's fine. Have that attitude. You can have that attitude. Please do. You can have that attitude all you want. Please do. Please do. Mm-hmm. Bro, what AI is doing to Excel is crazy. Plan. What the hell? It's time for 39 years. God damn. Wow, that's crazy.
So everyone knows the commonly cited Morgan Stanley study that half of women are going to be single and childless between the ages of 25 and 45 by 2030. Now it's 2024, we're 6 years away, and we're already starting to see this, right? And I had somebody recently say to me that he just expects to be a single parent because that's the way the world is going. And even though this is kind of a gloomy outlook, I couldn't help but think he was right. And the reason that I couldn't help but think he was right is I'm already starting to see it. So let's say half of women don't marry, don't have kids, okay? What happens to the other half of the women? Let's say that, let's be generous here. Half of the women that have kids, let's say a third will be single mothers. I think we all could agree, on both sides, that's probably about true. Now, let's say the 2/3 get married. Now, we know that half will divorce, so then you take out that half.
All right.
Now you have a third of the half, which is like, 15, 20%. Let's just say 20% of women. No, that's too high. Let's say 15% left that stay married. We know a quarter of marriages are sexless. I would argue that's on the low end. So you take out a quarter. I mean, that's maybe 5-10% of people that are married. And it's really interesting because I'm going to keep seeing the cope, right? I'm going to keep seeing everybody say, return to traditionalism, return to traditionalism. And don't confuse this with being my hope. This isn't what I hope to happen. But what seems like, and every indication is showing that it's going to happen. We've liberated women to the point that they don't need men. They're given jobs we don't deserve. We're overpaid. And we're given government incentives to leave. So many women have chosen to do that. You know, I'm guessing about a quarter of women by 2030, maybe 2035, will be doing sex work to some capacity.
I told y'all about that.
It's already that high with the rise of OnlyFans, but we all know that academia is always going to censor information that makes women look bad.
There you go.
Because you see it in real time. Whenever I say any information that makes women look bad, the gut reaction is, 1, what did the men do? And 2,
that's a good point. Academia always censors information that makes women look bad.
Something that excuses the behavior. For example, if I talk about women making bad choices, what do you guys do? What does the simpery do? Oh, it's the culture's fault. Oh, it's feminism's fault. It's never the woman's individual choice. Now, what does that tell us? We actually live in a culture that doesn't shame women for doing any of these decisions. You see female single mother influencers on the right. And that's the other thing. It's interesting because everyone's trying to pretend marriage isn't dead. But even amongst conservative influencers, many have been married multiple times. Many are divorced. There's single mothers in there. So even on the right, we can't preserve it. Doesn't seem like. There's some places that are better than others, but across the board as society, it's kind of scary to think about what the future holds, because the future is going to be not what I wish it to be, but what every stat that you look at shows it's going to be. If you look at dating app stats, which is the #1 way people meet under 30, if you look at the STD stats, it shows women are the ones spreading them, small percentage of men are spreading them. It's going to be a lot of sex workers, especially if they start pulling away government benefits. Women will run to sex work, a bunch of single mothers, and women sharing men. Women are already sharing men. They may not know it or do it publicly, but it's already happening.
That's facts.
So when we look at the future,
no, what the fuck?
How do you reverse an economy? Guys, 80% of consumer buying decisions are done by women. That is so much money. That is billions of dollars spent marketing and selling things to women. It's all precedented on women being single and them being able to sell stuff to them. The divorce industry is like billions. It's a huge industry. So will that be reversed anytime soon? And will we stop making these decisions, especially when the right and the left will blame everybody else but them for those decisions? I mean, you know, when I was in high school, I tell the story of me, you know, I threw a little shindig. I got in trouble for it. You know, never did my dad say, that wasn't your fault. Oh, your friends pressured you into doing this. Even though they sort of did. But no, he didn't let me. That wasn't an excuse because I made that choice. And if the right and the left doesn't shame women, or at least tell women, or not allow women to make an excuse like I was young and dumb. No, you made those crazy choices because you wanted to. Then it'll just stay the same. So it's a little bit scary when you think about the future, because if that's what 2030 holds, what will 2040 hold? Let me know what you think in the comments. Like the video, subscribe. Let me know what.
That's some crazy ass shit, man. Man, shout out to you guys who are married. You're managing your families and doing what you guys got to do. Because yeah, man, for a lot of guys out there, they're struggling to find a wife, struggling to get married, struggling to even, you know, get laid, dude. You know how many guys struggle just to get laid? That's wow. Crazy stuff, man. Crazy stuff.
The audience. Stephen Paranod, I've been following him for years. We share a common friend in Shaheen Khan, who I went to undergrad with at Cornell, who had an amazing career at Sun Microsystems. And, you know, we reconnected, and Stephen put me in touch. I mean, Shaheen put me in touch with Stephen, and it turns out Stephen was very much into Bitcoin and into the quantitative side of understanding the power laws of Bitcoin. So we've been following each other for a while now. And, you know, now we finally have this rally, after the last bull market, after the bear market. Now we have this rally. So I'd like to thank Stephen for coming. Stephen is a PhD, a BA in physics, a PhD in astronomy and astrophysics.
Shit, that's
and
hard,
has
boy.
done work in
PhD in astronomy, that's hard, boy.
And has one of the most underappreciated Twitter feeds I've seen. Like the ratio of content to followers is probably the highest I've ever seen. And so big welcome to Stephen. And we got a cool presentation. So Stephen, just thanks for coming. And I'll share this presentation too.
Great. Well, it's great finally to be with you, Fred. And as you say, we've got this long-term connection through Shaheen. Today's Pi Day, so happy Pi Day, everybody. I wore the nerdy shirt. And I'm ready to dive in. Look, I think we've been in a bull market ever since we bought them. So certainly since December, 15 months ago.
Right. Okay,
we're accelerating.
Okay, now I'm having some issues with this presentation. One second. Let me just see if I can just share the whole screen. Share screen. I see. Just share entire screen is what I want to do. Okay, here we go. Okay, so here we have the presentation, and we can go from here. So Shaheen, why don't you walk us through this presentation?
Okay, that was a Freudian slip. I'm not Shaheen. I'm Steve.
Excuse me. I'm sorry, Steve. Sorry about that.
No problem. That's our connection.
Okay, good.
So title is Power Laws of Bitcoin. I haven't found any better way to represent the price and market cap behavior than a power law. I'm not the one that first did it. We'll talk about that. And then a subtitle, how can an S-curve be a power law? And we'll get into that. And, you like to have simple models if you can. It's not always possible to have simple models, but Occam's razor says you'd like to be simple. So we've got this quote from Feynman. We'll move to the next slide.
Okay.
Thanks. So that was my rather brief time in the finance industry. In high school, I was an assistant working at the bank. Hartford National Bank went through 3 acquisitions and is now part of Bank of America. And I was also their youngest teller one summer when I was in college. I was their youngest teller. And that was the end of my finance career.
Do this to where you guys
So
can
I'm older
see
than
it
Michael
better.
Saylor, and I'm younger than Feynman, who I never met, but I did see him on the wall every day when I went up the stairwell because his picture was there. We were in the same fraternity at MIT.
A little aside, my grandfather knew Feynman. They were both at Caltech together.
Yeah, very nice. Very nice. Yeah. So I started out in astrophysics, went through my postdocs, and then I thought it might be good to go into the real world. It was also a very tight job market. So I basically went into the high-performance computing industry around 1980.
What the fuck?
And spent, the rest of the 20th century and the first decade of this century, 3 decades in high-performance computing, and left the corporate world about a decade ago and have been doing technology consulting. At Sun Microsystems, I did work for Fred's college roommate, Shane Khan, and I continue to work with him. He's the founding partner for OrionX.net is the website, and I'm an analyst and partner there. Next slide, please, Fred.
Yeah, there we go.
So this is just the outline. I want to talk about block time first. I like to do most of my models in the natural calendar system that Satoshi invented. I've written some articles kind of elucidating that, but it was Satoshi's creation. And just like our own calendar, it has elements related to the Earth, the Moon, and the Sun. Then I'll talk about the Lindy effect, and then get into the power law model, which I kind of decided would, grew out of the Lindy effect. Right. We'll talk about S-curve models. We'll also talk about positioning.
We're going to do some learning right now.
Kelly criterion. And whatever. What about utility? And
they're talking about.
Why don't we do what Timmer does at Fidelity, and model basically based on Metcalfe's law and network effects.
Perfect.
Next slide. Next slide, please.
Right, here we go.
Okay, so what is it? It's a time chain, right? So the hash of the previous block gets loaded into the current block and gets hashed in, and that's how everything gets linked up. And we're going to reach 840,000 for block height when we hit the 4th halving around April 19th or April 20th in just about a month. So I won't go through all the details of what the block calendar looks like, but basically we have these 4-year cycles. Each one has 210,000 blocks. We're going to be at the end of the first 4 when we get to 840,000 and be starting the 5th cycle when we get to the halvening or halvening in April. And you divide those into 4 and you have block years of 52,500. We're at the tail end of the 16th block year now. We have a little over a month to go in block months. So each block month is equal in the way I like to look at it, and each one has 4,375 blocks. And I think it's important to use this as a temporal basis because halvings and difficulty adjustments happen on block boundaries.
Correct.
The difficulty adjustment is every 2,016 blocks, which is about a fortnight. Now, early on in Bitcoin's history, the block time was running quite a bit faster. And if you go back about 4 or 5 years ago, it was still faster, but not as much. And so we had the halvings move from November 2012, then move several months to July 2016, and then the next one was in May of 2020. So you can see it was speeding up. It was running faster. So the blocks were averaging less than 10 minutes.
Right. So we have 15 years since 2009 but now we're at 16 years in terms of block time. So it's a little bit faster, right?
That's right. And for a while we were running 2 weeks faster, but now and that was per year. And now we're just running about a few days faster per year. So
Okay.
it's become more stable, shall we say.
Okay, let's go to the next one.
Yeah, so next slide.
Yeah.
So what is the Lindy effect? This came up through Lindy's restaurant in New York, and comics and show business people hung out there, and it had a long run itself, about 100 years, but it closed in 2018. But, they would have discussions and say, well, if the show's running on Broadway, for 12 weeks, or if a comic's got to run, for some number of weeks, then they're probably going to survive longer.
Mm-hmm.
And so you can apply this to technology as well. There's a little inset in the upper right. If it has a longer past age, you can expect a longer future longevity.
Right.
So formally, you write it as the expected value for the future time, which is the total time minus the current time, is equal to some multiplier times the current age, and P is called the Lindy proportion. Now, I did a quick estimate recently. I just used the annual percentage price gain as a way to do a P estimator. I took the geometric mean of all the values over the past 15 years or 13 years, because we didn't have price history early on. And you get a P value of about 2.4. So you could say, if you believe that as an estimator, and if Bitcoin...
Did y'all just see that? Did y'all see the math this man just put up? He just explained the Lindy effect, which basically explains how a particular service or product that has lasted an X amount of time, you can then suggest will survive another X or so amount of time. So he's saying if Bitcoin has survived 15 plus years, it should have another 36 years ahead. And once it reaches 50, it should have another 120 years in the future. Can you imagine the cost of Bitcoin 50 years from now, when we know fiat is printing the way it prints now? Can you guys imagine that shit? That's crazy, bro. I really hope you guys are feeling what this man is saying right now. That's some crazy ass shit. That's some crazy ass shit. I've never seen this video. It just got put out today, but I'm catching everything he's saying. I had to slow down and have you guys really understand what the hell he was talking about. That was some deep ass shit.
And it survived 15 years, it should have another 36 years ahead.
Okay.
Now, I think most people on this call believe it's going to make it to age 50, in which case it has another 120, for that. So this, ironically, is been written about by Taleb in his anti-fragility discussions, even though he's no longer a believer in Bitcoin.
All right.
Next slide. So why try a power law model? It's natural in physics. Nature loves power laws. Gravity is basically, at least in the Newtonian domain, and over very many orders of magnitude, obeys 1 over r squared law. Electromagnetism does the same thing, actually to higher precision than gravity, as far as we know. The strong nuclear force has a 1 over r squared term, but then it has a cutoff, so that it actually has another term, which is like a spring stretching, and that's the core confinement. And then the weak force is the same. It's got a 1 over r squared term, but it's also got an exponential multiplying it, and then it's got a 1 over r term. So this is
all four of the fundamental forces exhibit power laws.
They all exhibit power laws.
Wow. Okay.
Yeah, and even in the inflation models for the very early phase of the Big Bang.
Oh, that's another great point, right? Because you're looking at kind of time. We look at time. So the current estimate of the age of the universe. Actually, don't remember it off the top of my head. Is it like 10 billion years? Is that sort of the
a bit more? It's 13.8 billion.
Okay, 13.8 billion years. But the very first the first 5 seconds of it are also very, very interesting. So people are interested in what happened in the first millisecond of the universe, right? And so you have to look at it on a power law, and you really need to understand how did the universe expand back in the very, very first seconds of the universe, right? And that's something that astronomers look at, right?
Well, the hyperinflation period, which is just called inflation and should be called hyperinflation, only lasted about 10 to the minus 33 to 10 to the minus 32 seconds at most.
Right.
So a billionth of a trillionth of a trillionth of a second. And that took it from sub-micro scale to macro scale.
Wow.
And it's been kind of coasting since then.
Okay.
All right. Next slide.
Fascinating. Okay.
Okay. So this is the same model and the same regression fit. 2 different ways to look at it. One's a semi-log chart and one's a log-log chart. So on the left, we have the semi-log. And this is just a power law of time, but I'm using block years, and I just told you what block years are. So it's price proportional to a constant times the kth power of the block age. And so we've got a log scale, for the y-axis, and we're running from when Bitcoin was only 2 years old and started having price discovery until 15.75 block years, which turns out to be January. So it's basically current.
Right.
Of course, the blue jagged stuff is the price history. These are monthly data points, so we've got almost 16 times 14 data points there. And the black line is the regression best fit. And then we have plus or minus 1 sigma shown in the green and the red. And the standard deviation here is about a factor of 2. It's actually a bit more than a factor of 2. So people should remember that. Then on the right-hand side, we have the thing that really...
So just to slow down on that. Okay, a factor of 2. What that means is that you can go down by half to half its current price, or up to twice its current price, right? And you'd still be within one standard deviation, right? So that would be entirely normal for this model to double or to drop in 50%.
That's crazy.
2/3 of your data points should be in that.
2/3 would be in that.
That's
67% according to the normal distribution, right?
68, yeah.
Right.
Yeah, okay. And, it actually skews right. With this kind of model, it skews to the right too, which we like.
Okay, yep.
And the other is a log chart. So here we're showing not only price as a log, but we're showing the age as a log. And so you see that it starts at 2 years, it runs to well over 10, and in fact it runs to 15 3/4 block years, and the green dots are the price history, and you just see a straight line. So
which is, I mean, this one here, when you see this chart, you can't unsee this chart, right? This chart is, to me, is the most compelling chart that I've seen in Bitcoin history, is this exact chart. Looking at the space in log terms, and you're looking at it and you're going, my God, it's a straight line, right?
Mm-hmm. Right. So I should say I first became aware of this in late 2019.
So Bitcoin,
I saw H.C. Berger's
what
work.
they're just basically saying is that Bitcoin is literally designed to go up over time. Oh, my bad. Bitcoin is literally designed to go up over time. Like, it's literally designed to go up over time, to be the exact opposite of what fiat currency is supposed to do.
Working the power laws earlier, and you've had it on already on Spaces.
Right. Yeah.
And he's also an astrophysicist.
Yeah.
Yeah. So
can you talk about the R squared, and what that is, and what is 0.94 significant or not?
It's highly significant. You'll see it in the inset in the upper left. It's sorry for the small font, but the R squared, it's basically the same for both of these. It's 0.943, and that means that the correlation coefficient is about 0.96 to 0.97, right?
Mm-hmm.
So it's very highly correlated, and the F test is quite high as well. The F test is well into the 2000.
Explain again. Let's go explain what is an F test for people who don't know any statistics.
Well, it's just a measure of the goodness of fit. A higher F number is better, and you want it to be much larger than the number of points you have in your sample.
Okay, great. So highly significant, not possible really, especially on a power basis like this, that this data would be random, right? The chance of that is 0, right?
Yeah, and we have, I run this through StatPlus, and it produces, I'm not a statistician, but it produces a lot of other statistical results, including rejecting the null hypothesis for various tests and evaluating, the normality or the degree of skew on the residuals, and telling you what the error bar is on the slope. And the error bars are quite small.
Right.
Yeah.
I think, just if people don't understand this, it's really, I just want to slow down even one thing here. Can you just tell what a logarithm is for people who don't understand logarithms? Because, I was explaining this yesterday, and I realized that, the person I was explaining it doesn't understand logarithms. So can you explain what this logarithm is in base 10 here? Or what that means?
So let's do it on the right-hand chart, the log chart.
Okay.
And it starts at 10 cents. And then you go up to the next one that's annotated as $1. Then it goes to 10. Then it goes to 100. Then it goes to 1,000. Then it goes to 10,000. Then it goes to 100,000, and it goes to 1,000,000, where we're kind of on a trajectory towards. So it goes from under $1 to $100,000. So that is what 5 orders of magnitude, 5 factors of 10 multiplied 1 by each other. So the log base 10.
The man just said Bitcoin is basically going to $1 million, guaranteed.
It's 0. There.
Right.
That's the log. $10, the log would be 1 in log base 10, and 100 is log base is 2.
Correct.
And so you can translate that directly over to the other. The curves shown on the left, and you'll see the numbers that are actually the logs, 5 and 4 and 3 and 2 corresponding to 100,000, 10,000, 1,000.
Thanks a lot. I think I just want to be completely clear on that. Let's go to the next slide.
Yes. Okay. So, before we get too excited, we do have to curb our enthusiasm a little bit. This is more physical than a model like stock to flow, because stock to flow, he said he found a power law. And I've done fits, and you do find a power law, and you can't actually reject it, but it's going sooner than the general power law model, because the stock to flow itself is already an exponential. It's increasing by a factor of 2 every 4 years. So it's a power law of an exponential, and it diverges very, very, extremely fast.
Right.
Now, what I'm charting here is the slope of the power law fit.
Okay.
Over time. So if you start at only 3 years of age and only use the old data in the first year, interestingly, the slope.
Ooh, y'all got. Ooh, I hope y'all catching what this professor is saying right now, boy. Woo! This is fire. This is fire. Some of y'all may not have been in school in a long time, so you might seem like you're a bit lost, but I know you're smart enough to get what this man is saying, because the same math he's showing is the same math that Michael Saylor gets. He's basically saying that you're going to have crazy ass dips and troughs, but at the end of the day, the system just it's going higher, man. It's going higher. Hold on, man. Now he's talking about the dips. Let's just keep going.
Hope was about 5.5. It's about what it is today.
Right.
But then as you went to 4, you know, you had a depression, you had this cycle, and it dropped down to 3, and then it shot up. You know, when you had a big run up, it shot up to 6, and then it settled down. But ever since about year 8, it's been at about 5 or above, and it's become quite stable as you added more and more data to it. So that's
One thing I would like to stop you. One thing I would like to stop you, Stephen, is you mentioned exponential versus power law, and you know, just again, because people confuse those terms often. Why don't you explain the difference between a power growth versus an exponential growth?
Sure. Well, the normal exponential is just e to the x, right? So that just says as x grows, you multiply by that factor of e 2.78128 each time, or it could be an exponential of 10, right? It could be 10 to the x. And it just has a curve that, you know, if we went back to the prior slide, it rises much more steeply than the power law does in the long run.
Right. So it's basically like the difference between 2 to the power t and, say, t to the power 2, you know, or 5 to the power t and t to the power 5. These things look similar. They both have an exponent, but it's the question whether the exponent's fixed and then the thing under it is variable, or whether the thing moves in the exponent, right? So 2 to the power x is like, you know, doubling every it's a doubling, right? So this is like the grain of rice on the chessboard, and it just grows astronomically big, right? And
I was almost going to show that.
Oh, okay, cool. So so that was the, you know, that's just, you know, so you were saying the you know, the stock to flow is actually kind of exponential, right? Because, you know, the halvening, it drops by half every 4 years. So the reverse of that is the stock to flow goes up by a factor of 2 every 2 years, basically.
Every 4 years,
Yes,
but then it was a power law of that, so it was 2 cubed, so it was a factor of 8. And eventually, you know, you exceed all wealth on the planet, right?
Right.
Even a power law will do that, but it does it more gradually. So that's going to take us to X curve. And I'm going to talk about how it grows right now. Can we go back for just a second?
Sure, absolutely.
Okay, so with a power law, the expected gain, look, an exponential is compound annual growth rate.
Right.
So in finance terms, it's just compound annual growth rate, right? So if you grow at 50% forever, that's an exponential.
Right.
With a power law, you get a gradual flattening of returns of the expectation value of the fair value. So if we look 1 year forward with a K index 5.4 power law of where we are today, we would expect 39% for the next block year and 37% for the year after that. And gradually decreasing. It's just B plus 1 over B to the K. Or for you, Fred, the instantaneous growth is K over B, but you have to compound that.
Okay. I thought it was a little, this is a little less than I would have thought. I thought it was more, almost closer to 100%, but okay.
It's not.
So basically it's 40% right now is kind of the power law, right? Which is still enormous, right? Obviously that's
enormous, and we can outperform that by a factor 2 or a factor 3 because we're in the favorable part of the cycle and we've got this flood of ETF money.
Hold on.
And
did y'all hear that? He's saying the expected fair gain value using the power laws are 39% for the next block year, right? Which is this year, and then 37% for the year after. But we can outperform that by a factor of 2 or 3. God. My God. Hold on, man. What's a factor? Oh, my God. Oh. What's 39 by a factor of 3, man? What's 39 by a factor? Therefore, it's the prime of 38 can be expressed as 3. We can outperform it. 1, 3, 3. All right, I'm gonna have to do that on my own time because it's giving me some errors. This is crazy.
The standard deviation in log terms is 0.315 across the whole span of data, and that's a multiplicative factor of just over 2. Now it's settled down a bit, so the last 4 years it's more like a factor 1.8. So next slide.
Perfect. Okay, next slide versus gold. Okay.
Yeah, so here I am showing an exponential model in green against gold, and I'm showing a parallel model in gray against gold. And the blue jagged line is the BTC price, Bitcoin price denominated in gold ounces.
And
as
here we can see
it's-
very clearly the sort of the flattening out of the power law versus the exponential, which is just boom. Yeah.
Right. And actually, when I first started doing this, the exponential gave a slightly better fit, but now the power law gives somewhat better statistics. You cannot reject, you cannot falsify the exponential yet. The exponential has a 69% compounded annual growth rate and a slightly smaller R squared. The power law is to the 4.7th power. Gold has gone up a little bit, and the R squared is 0.87. And it's gone from less than 0.1 ounce to now a kilogram.
Right. So the takeaway from this slide is Bitcoin is outperforming gold pretty much on the power law, and really there's not a lot of reason for people to own gold at this point versus Bitcoin.
It's fucking insane.
No, it's crushing it.
Okay.
And, well, look, it's on a trajectory.
Insane. My God. Oh my God. Based on what this professor's just put out here, everybody doesn't have enough Bitcoin. Everybody doesn't have enough Bitcoin. That's crazy, man. This is crazy right now. He's putting together the data in a mathematical model that, like, looking at charts, that's why I got so much respect for these guys who are really good at math. Both of these guys have PhDs in mathematics. I have so much respect for both of these men because they're able to put the numbers together in a way that it explains it so much better than just guys like me who aren't that great at math, who just can use technical analysis. The technical analysis doesn't show you this. It can't tell you what he just told you. That, like, Bitcoin was once a grain, literally a couple of grains of gold, to now it's a kilo, several kilos. And that you could have predicted this over time using a power law model. And he's predicting the future of it. Man, all right, man, let me just stop the video. It's just this is blowing my mind right now. I'm sorry most of you guys aren't in here to see it, but
Certainly
in
to
due
take
time.
out the market cap of all central bank gold, which is about 2.5 trillion or so.
Mhm.
And we would believe eventually to take out the entire market cap of gold.
Okay. Perfect.
Oh,
All right.
Next
So the
slide.
next slide.
Oh.
Okay.
Did y'all hear that? Hold on, man. Did y'all hear that? I gotta play
Central
that again.
bank gold, which is about 2.5 trillion or so.
Mhm.
And no, it's crushing it.
Okay. So the takeaway from this slide is Bitcoin is outperforming gold pretty much on the power law, and really there's not a lot of reason for people to own gold at this point versus Bitcoin.
No, it's crushing it.
Oh.
Okay.
And well, look, it's on a trajectory, certainly to take out the market cap of all central bank gold, which is about 2.5 trillion or so.
Oh.
Mhm.
And we would believe eventually to take out the entire market cap of gold.
Oh.
Perfect. All right.
Next
So the
slide.
next slide.
My
Okay.
God.
So this is a bit more complex. This is a S-curve model.
All right.
And Fred had shown another model, and I had looked at that one. I didn't like it because it didn't go through the 0-0.
No,
It went
you have to
zero,
shift
zero
it.
time.
You have to shift it.
Yeah,
There's a shift
yeah, I
parameter.
know.
Yeah.
But I played with it, shifted, and it still
Yeah.
didn't give that good a fit.
No.
So I stumbled across the Weibull
Oh wow. Okay.
cumulative distribution function, and it has this very nice property
Okay.
that you can do a linear regression, but what you have to do is you have to take the log twice.
Ah.
So it's a double log transform.
Okay.
And the function looks like 1 minus exponential minus t over characteristic times c raised to k. And guess what? K is this same power law index we're going to find out.
Oh wow.
Now, this is a normalized expression the way I've written it. But to fit it to the data, you really need 3 parameters. You need a characteristic timescale c,
Okay.
which goes into the exponential. You need a scale factor k, and that turns out to be like a power law index. And then you need an asymptotic value. What is it normalized by? And that asymptotic value could be an ultimate price or could be an ultimate market cap. I've mostly done my regressions in ultimate market cap because it made it easier to kind of think about.
Okay.
Now, this particular plot is for a $30 trillion
Crazy,
ultimate
man.
market cap.
Okay.
And the way you should think about that is kind of in real value terms. In other words, what's 30 trillion today relative to, say, our national debt or the M2 supply or all global wealth, which is about 30 times higher at 900 trillion.
Right.
And this would exceed M2 in the United States etc. It would double gold.
Right.
Um,
Double
and as
gold
you-
and equal to the debt of the U.S. Okay.
Yeah.
Roughly.
Yeah,
Okay.
roughly to today's debt.
Yep.
And as you can see, it's a very nice linear fit in
Wow,
this
look at this.
thing, which is why is this double log transform?
Mm-hmm.
Now, in the inset, you can see the shape function of how the shape looks like. And it turns out that the green line is the one with K equal to 5. That's the one that's steep. So
Okay.
in relative terms, it rises quite quickly. And, we're certainly seeing that. Bitcoin's been going up quite quickly for the past 15 years.
Mm-hmm.
Next slide explains this a bit more.
Okay, good.
Okay, so Fred's going to want to know this. How do you do the math? So what you do is you take the first log, and so now you have the log of 1 minus f equals the expression that was in the exponential.
Mm-hmm.
And then you multiply that by -1, and you take the log of it.
Said Michael Black, you said, well, for people that are not getting it, you just explain it in simple terms for them. Yeah. My stream is on a little bit of a delay, so sorry, but yeah, man. I mean, this is just incredible amount of information that's being delivered here. He's getting a little bit deep for most people, but you're catching it. Most people, hopefully, in the chat room are catching it. But absolutely, man. Let's get
Then
started.
that's the double log. And then you get K times the log of T over C.
Right.
So now it's got a form of y equals ax plus b. You substitute y for the double log term.
Okay.
And that was what I was graphing. That was what was
see.
shown on the prior graph. And then you identify ax plus b. And so x becomes log t.
Right.
And you set that to log t. And a becomes k, which was like a power law index or a scale factor.
Mm-hmm.
And b becomes minus k log of this c, which is the characteristic time scale.
Right.
And then you can linearly regress that. You can do it in Excel.
Okay, great.
I use
Perfect. Yeah.
stat plus. So we're regressing a double log function of the market cap versus the log of time.
Okay.
And still to an asymptotic value. So what I do is I run a series of models and I pick different asymptotic market caps. And since I don't know what it should be, I do it at 1 trillion, 3 trillion, 10 trillion, 30 trillion, 100 trillion. Well, I already had to throw away 1 trillion, right?
Okay. Why?
So-
Because we're past 1 trillion.
We're past
it
1
already,
trillion,
right.
2 or 3 years ago. So here,
Okay.
this chart shows the key parameters. And the key parameters are the K shape, which is kind of how rapidly it rises, and C, which is the time scale. So you can see I've got asymptotic market caps of 3, 10, 30, and 100 trillion, and I've also included the parallel model. Well, the first thing you notice is that the K shape is the same for all of these.
Wow, that's
It's equal
amazing.
to the power law model. And the one that has the highest R squared and the highest S statistic.
This man said
is 100
Bitcoin's
trillion.
going to 3 trillion by
And
2026.
Those are the two that have the best R squared and the best F.
Mhm.
Now,
I mean, they're close,
and
though. They're all pretty close, to be
They're all
honest.
close. They're all very good fits.
10 trillion by 2030.
So we have to wait and see. What it tells us, though, is that we're still well before the need. And
Oh, Lord.
if you basically expand, take the linear expansion of this exponential term, you get f equals 1 minus t over c to the k equals t over c to the k. So it's just a power law.
Right.
With the same k. So it's
Right.
basically a market cap going as the 6th power of time. And as long as power law holds, we're not close to the knee at HC. And the knee for any k is equal to 63% of the asymptotic value because it's just 1 minus 1 over e being the base natural.
And so this Weibull distribution in kind of the very early phase that we would be in kind of currently, right? It's almost the same. It's very similar to a power law in terms of its shape. Is that accurate?
To first order, it is a power law. It's exactly.
Oh, to the first. So it's only the second order that it.
So
it
he
changes.
has he has
Right.
Bitcoin
Perfect.
hit 96K.
So that's exactly, that was my first.
96K in 2026. Now he did say we can outrun these numbers, right? We can outrun these numbers, but he's got 96,000 at 2026, which is fine with me. I mean, that's 20K away. I want to believe we've got a lot more of that to go, but I'm more than happy to, we could do debit spreads underneath 75,000. I'll do it for the rest of the year. Fuck that shit. I'll do it. I'm with it. I'm with it. 2030, 310. Oh my God. 310,000 at 2030. You said you almost bought a grand in 2011, bro. You know how rich you would be? Do you know how wealthy? That's multi-generational wealth. Those guys who got it in 2011, you holding it to understand 2041, What's that? 17 years from now? 17 years from now, so I'll be in my 50s. Oh my God, 3.1 million? Gonna be here. Oh my God. That's what I'll be trying to tell people, like, bro, your grandkids will hate you. Your grandkids will hate you like nothing ever if you don't get you a little bit of this. They will hate you. Do you understand? They will swear the devil on you. They will hate they will not even want to see your face if you don't get this right. If you don't get this right. And again, I'd rather Bitcoin go to zero and then us look back on this and be a complete, like, it was a great time we had. It was what it was. Then for it to keep going and me not participate. Because I've missed out on shit by not participating. You know what I'm saying? I've missed out on a lot of shit by not participating in the stock game. Not even Bitcoin. I'm just saying in the stock game. You know, sometimes I look at my old man. I'm like, man, you showed up in America in 1988. You brought us to America in 95. From 88 to 95, did nobody talk to you about the stock market? Nobody told you about like Microsoft and Apple and you know what, you know what I'm saying? But like I you grow up and then you realize, like, you just got to give your parents grace, right? You give your parents grace. But I honestly feel like the generations to come will not give us that grace because we had the information. You understand? Like, we don't, like, I can look at my father and I can have the excuse, like, you're an immigrant coming to America, you're trying to make ends meet, you're working dead-end jobs, you're just trying to do whatever you can to save money to bring your family to America, but like, okay, no internet, right? No chat rooms, no, like, no Facebook, no nothing like that, right? So I get that. I get that. But like, what's going to be my excuse to my great grandkids, to my grandkids, if I miss out on Bitcoin? Like, what the fuck is my excuse? That I didn't have $10 a month, $50 a month, $100 a month to set aside? Like, there's no excuse. There's no excuse. You know what I'm saying? Like, there's just no excuse. Like, what's going to be the excuse? When they can no longer afford to buy a home. Like, you're not even going to be able to buy a home unless you get this shit. Like, unless you, like, and again, it's not going to be the only thing running, right? There are other assets. There's stock, right? I mean, the price of go look up the price of a Berkshire Hathaway stock right now. Like, it's crazy. You know? Let's keep it moving, man. I'm just, oh, Lord.
My first complaint about the power law is, this thing keeps on going up forever, and then this is an adaptation of that where it's not going up forever, Laura, as Michael Saylor says. Okay.
Well, because I was worried about that. No, it can go up forever. It can go up. Eventually, it can go up at 7% forever, right?
Right. I mean, it could go up because the denominator of the dollar, or whatever we're measuring it is going down. But ultimately, there's, it seems like you wouldn't have to say it, but Bitcoin can't be worth more than the entire wealth of the world, most probably.
Right.
Right. There does seem to be some limitation there. Okay. Kelly criteria.
$1 trillion. Okay. Kelly criteria.
Yeah, Kelly criteria.
Okay.
One of my favorite things in math, by the way. I love this.
Good.
Yeah.
There's a huge volume, and I've read like half the papers in the volume, including several of Kelly's original papers, and several of Thorpe's papers, and even some of the somewhat dissenting views. But basically, it's mathematically proven that if you maximize log wealth with the Kelly criteria, it maximizes the growth of your log wealth. Right. And so F is an optimal allocation. Now, it gets difficult to calculate for a portfolio because you've got a lot of assets in the portfolio. So I've done the simple thing, which is a 2-asset portfolio with just Bitcoin or US dollar cash.
Okay.
And if you wanted, you could use T-bills and say, okay, 5% or something. But it doesn't make that much difference because Bitcoin's performing so well.
Okay.
And then I did this over a 5-year time scale prior to August 2023. And I did it with different windows. So the point here is that the longer your window is, and what you do with the Kelly criterion is, you have to continually rebalance your portfolio so that you're always at the optimal frontier. And that frontier is defined by that equation in bold, F equals P minus Q over B.
Right.
Now, P is your percentage of wins. Q is just 1 minus P. It's your percentage of losses. And B is the average win size divided by the average loss size. And that tells you what your optimal fraction or holding is in this case, Bitcoin.
Right.
You're assuming that the dollar is sort of the stable thing. Bitcoin's the one that has a lot of volatility.
Right.
Okay, so for daily, let's look at daily. I had 931 samples that were positive. I had 896 that are negative. So I have 51% positive, or wins, 49% losses. The sum of all the wins is 2285%. The sum of all the losses is minus 2,000%. The average win is plus 2.5. The average loss is minus 2.3. And so the B here is just 1.08.
Okay.
And so then if you're going to rebalance every day, if you're a trader,
right.
you're going to only want to hold like 5%.
This is the mess way.
If you hold 6%, you're going to
day trading don't make sense.
As much money as if you hold 5.7%.
Right.
Now, but if you go to weekly, your winning probability goes to 53%.
All you Bitcoin traders should see that daily shit.
Your average loss is
I
minus
know
6.
these motherfuckers ain't making no money.
And your BE now is a little higher at 1.8, and now you can hold twice as much. You can hold 14%. If you only make a decision to rebalance on a weekly. It took me a long time to discover this because I was just kind of working in the monthly space.
Right.
And a little bit in the quarterly space. And then I looked at the yearly stuff. I said, what's going on? It's too high. So the monthly, the average gain is much higher now, 4.8, with a ratio of 1.66. So you should hold 22% as your optimal F. And then if you only go quarterly, it's 35% of your portfolio should be in Bitcoin. Now, you don't have a lot of data points there, right? It's only 19. If you do it yearly, you've only got 15 data points. So your statistics aren't that great. But this is what it suggests.
Right.
I'm hesitant to show the annual numbers, but if you just annually rebalance, it would call for around 44 to 70% in your portfolio.
Oh my God.
If you took an all-time window, the returns were really high early on. So should you include those? Probably not. You should look at the last 5 years, and then you get something like a 44%.
Okay.
So that's your new 60-40, Fred.
Okay. So 40%, 60%
40 to 70% of your wealth should be in Bitcoin.
Or anything denominated in fiat. It's all the same, right? Almost any stock, bond, the currency, it's all like fiat.
It's all fiat, right?
It's all fiat.
Mm-hmm.
Hold on. He said stock, bond, it's all fiat. Hold on. Let me hear that again real quick. I don't want to go that far back. Let me see.
60-40, Fred.
Okay. So 40%, 60% cash, 40% Bitcoin. There we go.
Or anything denominated in fiat. It's all the same, right? So almost any stock, bond, the currency, it's all like fiat.
It's all fiat.
Okay.
It's all fiat.
Mm-hmm.
So stay 60-40. Okay, I get it. So 60 could be anything, stock, bond, whatever it is he said, and then 40% got to be the Bitcoin. Got it.
So 60% fiat, 40% Bitcoin.
And that includes real estate.
Oh, I forget. You have to throw in real estate too. Yeah. Okay.
All right.
Okay.
Next slide.
All right. Okay. So I would just say this is a remarkable. It is very unusual to have done this thing daily, weekly, monthly, quarterly. I think this is a great result actually. Great. Let's look at this slide.
Okay. Now, a lot of people typically wanted to model price and market cap using utility. Mm-hmm. And as we know, the thing that got everybody into trouble in this space, or at least in the crypto space, was they chased utility.
Mm-hmm.
And what we have is the premier asset on the planet, the finest, hardest asset ever created by mankind.
Mm-hmm.
Harder than anything created by nature, right?
Right.
And so, I believe that the underlying fundamentals are scarcity and security.
Right.
Not utility. Because if you imagine you have vessels and they're storing value and then you go use something, it dissipates value. The faster we spend fiat, the more prices rise, the more inflation gets driven. In monetary terms, this is the velocity of money, right?
Mm-hmm. Yep.
Yeah. So fiat is designed for utility first. Bitcoin is designed for security and scarcity. And a need that we didn't have for long-term value. And I did regressions on how we doing on time frame.
We're just fine. No problem at all. Okay. Keep on going.
Okay. So I did regressions for utility, scarcity, and security.
Okay.
And basically, I regressed price against the address count. And this is log price versus log address. And I use that as a proxy for utility.
Okay.
And then I regressed log price against log of the inflation and the supply, which is just the inverse of the stock to flow.
Well, okay. So this thing is interesting. The fact that you got almost 2 there, right?
Yes.
Which is, if you look at Giovanni's latest stuff, he sort of says addresses are growing at t to the cubed and price is growing at t to the 6. Let's just or 5.5 or whatever. But it's roughly there's a 2x difference in a squared function. That would sort of indicate to me a little bit like Metcalfe's law, right? Which is, the number of addresses can be thought of as the number of nodes on the network, and the price is kind of measuring the square of the number of nodes in the network. Would you agree with that or no?
Yeah, I agree. This is basically showing Metcalfe's law.
Okay, so it's okay.
Yeah,
we weren't crazy. Okay, so
Yeah.
the F test is 373, good but not great.
Yeah.
Our
So the
spread's
next one-
89. Yeah.
Yeah. The next one's scarcity. It's the same as the stock to flow. So the power law index is 3, except
Okay.
it's -3 because I'm using the inflation and the supply.
Okay. Right.
And then the last one is security. And there I use the difficulty. You could use hash rate, but just to kind of smooth things out, I use log P versus log D.
Oh.
And
this one. Yeah. Oh wait.
yeah, so
This one. Yeah.
yeah, the third one. So that had, amongst the 3, that had the best R squared and the best F test, and it was like the square root of, the security measure.
Right. So I think Giovanni sort of also came out. One of the other things I remember what he said, oh, this has a better fit than price, right? And you're finding the exact same thing. Using a
No,
slightly different
that's
measure
right.
of security, but you're saying this fits better, right? Is security fits better, right?
Right.
Okay. Interesting.
Then the last one is just the Lindy model. And when I did this comparison, this was actually done a couple of years ago, this particular one. And so I got a 5.65 at that time. And it actually has the best R squared in the F test. So I think it kind of subsumes all of these things into a simpler model. So we're going back to the Feynman quote, right? The simple model is working better for whatever reason.
Okay. So basically it's working because it's been working for a while. The restaurant's been open for 15, 16 years, and therefore it's gonna stay open.
And everything, organizes around that. So
Right.
the price organizes the miners, right?
Right.
And you have the Metcalfe's law going on, and the feedback and the hash rate with the difficulty. So I've got this little double feedback loop up there. So next slide.
Oh yeah, let's go over the double feedback there.
Okay.
So the halvings increase, time increases scarcity, which raises the price, which increases the hash rate and increases the security. Okay, so that's that. Okay, cool. Next slide. The last slide, I guess. No, yeah, that's it. So
That's it. Yeah.
Yeah, that's it.
I've got a couple in the appendix. I don't know if we need to.
No,
do
let's
those.
let's just go to a video. I want to just ask you a few questions. Okay, sort of your, how do we? Okay, so how do we take all this stuff into consideration? And it seems almost inevitable, if I have to look at this, that we're going. I keep on going. What's the ultimate? We're definitely going to Bitcoin 1 million, in my opinion. Right? It's
wow.
Do we get beyond that? And it sort of would seem like, according to the power law, that might take. Let's just say on the outside, it might take a decade, right? On the outside. But it could be quite a bit faster than a decade. David Bailey, the
10 years to
head of
Bitcoin 1
Magazine,
million.
said it might happen this year. I don't know. Who knows? But things could go completely crazy. But if we had to pick a time, would you agree a decade seems kind of a rough thing? Maybe a little earlier for a million.
Yeah. Well, the 30 trillion model, which is the closest.
Yeah. Okay. Yeah.
That's $1 million at year 27, and we're at year 16, so that's 11 years from now.
Okay.
But
11
all
years.
you need to do is get a small excursion above that, right? A factor 2 would put you at.
Get your
Right. So that's kind of the that's the goal. It's going to take us. People should be a little patient because everybody's like. I was like, look, we could get to 1 million in a decade.
Nigga, I need
Immediately
to
people are
stream
like,
every
"It's too
fucking
barren."
day, bro.
And, it's like the power
I need
law
to
is
stream
it's not
every
an
day.
exponential thing. We're not going to Bitcoin, 100 million
Y'all,
anytime soon.
Hey, let me tell you something. You white
it may
folks
never
ain't gonna have
happen,
to get
right? It may
rich
never
off.
happen. So
Y'all ain't about to get rich
so
without
that's the
me,
first
man.
thing is you got to be patient, but
You
still
white
that's an
folks ain't
enormous,
about to get rich without me,
increase
man.
from here, right? That's a 20.
I'm
15x
in
increase
every
from here,
corner.
and that's
I think you
under
tweeted
every
out today something like
link. I'm
hyper-Bitcoinization
looking,
is
man.
when central banks start loading up on it.
Y'all ain't about to
You
get rich without
I
me.
did, yeah.
And I agree. And
No, sir. Y'all ain't gonna have me
I don't think it's gonna
outside
happen with
looking
the
up.
big ones first. It's going to happen with
Oh,
the
I
few
love
little
them
ones
white
first,
folks
right?
way up there.
It's not going to be the ECB
No.
and the Fed or the Bank of Japan first. They're going to be laggards. But once it starts, it becomes a snowball effect.
I'm watching everything.
And so the
y'all
question
doing,
is,
man.
how much reserves do they need? If you take global M2, it's 100 trillion.
Yeah.
That's the global money supply.
So and I think if you look at another way to look at this is I think it was 1970, the market cap of gold was about the same as the market cap of the stock market, right? The U.S. stock market. So you have sort of gold stock market even, right? Now the stock market is multiple times as big as gold, right? The global stock market. It's maybe 10 times as big as gold, right? So could we go back to a situation where the global stock markets could be the same as Bitcoin? Yeah, I think it's possible, right? And it may be likely, right? And that would sort of put us in the maybe we get to 100 trillion. You know what I mean? So it's not crazy.
Yeah.
It's not crazy to think that an asset like Bitcoin could be at even to all of the stock markets combined.
This is crazy, man.
I think we're watching it start to happen in real time. We've seen it take out Buffett.
Sorry
We've seen
for
it
this
take out
noise, but yeah, keep on going.
We've seen it take out Zuckerberg.
Yeah.
Right.
It took out silver.
Yep.
Right.
And it's now the 8th under of market capitalization in the world.
Yeah. Sorry about that. Okay. So it's
and it's climbing that list, and it's not going to be that long before it's the 5th.
Okay, and
Yeah.
so last thing is self-custody versus these ETFs. Okay,
Took out
you're
Musk,
I assume a
took out
self-custody guy
Silverberg.
from way back when. Are you telling
Zuckerberg.
friends, that people that you know, family members, people that you know, to get into Bitcoin? What are you telling them right now? First of all, are you saying it's a good time that they should still get into Bitcoin at Bitcoin 73,000? Should they dollar cost average? How should they get in? What should they do?
They should dollar cost average. Now, mathematically, buying all at once is
DCA,
actually the best
man,
strategy, but
DCA.
Psychologically, it's not for new people.
Okay.
So dollar cost average is probably the psychologically best recommendation.
Okay.
I had somebody ask me just this week. He said, "Well, where are we? The price is actually even a little bit above your model. What do you think?" I said, "Well, in logarithmic terms, it's not that much.
There it is
If
in the
the dollar
chat.
costs slightly less, you should keep on DCAing." So DCA and HODL, I have my own idea about when this cycle might peak. I don't think the cycle's eliminated. I think it's being damped, and we'll have to monitor the flows. Who knows?
Let me ask you this on the cycle side. So let's suppose we have a banger year, right, and it exceeds all expectations, and we get to something like 400,000 or 500,000 in Bitcoin. Do you think that you should use these kind of models, and not necessarily your model or Giovanni, but any type of model? Do you think it makes sense to portfolio adjust based on that, and potentially take some off at 500,000 with the idea of potentially getting back in later down the road, or do you just HODL?
Well, people have to choose their time frame. Is their time frame a quarter? Is it a year? Is it a cycle? Is it a decade?
Let's say it's a decade. If it's a decade,
well, if it's a decade, you would HODL through.
You just
HODL through.
Yeah.
But the way I'm managing it to the Kelly criterion. That's my view.
Okay. So somewhere between 5% if you're just like a day trader, and and somewhere into the 40 to 70% if you're have more of an annual kind of rebalancing.
I'm a Kelly annual guy personally, because we start running out of statistics once we've only got four data points otherwise. So.
Okay. Yeah. Okay. So I love this Kelly thing. I think this is really great advice. I think everything you've said is amazing.
Absolutely amazing.
I'm going to put the link to your Money or Debt Twitter account. Is there any other account you want to share, like website, or can everybody find you through the Twitter?
OrionX.net.
Okay, OrionX.net.
Twitter
is
fine.
Okay. Stephen, it was great talking to you, man. I really enjoyed it, and I'm sure our viewers. What's one of the great things I think I found about this Twitter is that the more technical we get, the more people are actually into the content. So they like this in-depth content.
Yeah, we do.
It's not just about memes and quantum cats or whatever. They want they'd like to understand. So I think there's this thirst for knowledge.
Absolutely, real shit, man.
That's great.
Real shit. Yeah, man. Follow Fred Krueger. I've been really liking following his content on YouTube. On Twitter. So definitely follow him, man. He's always bringing these guests on, but this is probably the best guest I've ever seen him bring on. This is the best. That's the best presentation on Bitcoin I've ever seen. That's the best I've ever seen. How does this guy only have 5,000 followers on Twitter? How does he have only 5,000 followers on Twitter? That's going to go to a couple. That's going to soar after this video. How does he have only 5,000 followers? That's crazy. That's crazy, man. Wow. I'm so happy I was able to do that in front of you guys. I'm so happy I was able to do that in front of you guys. I'm going to keep the stream going here. Let's go ahead and keep it going. The market's closed right now. I'm just trying to find something I can do because I want to keep the stream going 24/7 if I can, because I'm trying to get this page back popping again, because right now YouTube is basically thinking like I'm not really for real when it comes to my page. So it's just not giving me the kind of play that I need to really keep my shit popping. You know what I'm saying? So I'm not sure what or why this is doing that. Let me see what I can do to keep this shit popping, and I'll be back here in a little bit, but I'm going to put something on. keep this thing popping. Let me see here. Oh, I got all my damn information showing. Hold on. What else here? Yeah, so definitely check out that link to that video, guys, and check it out, because that band was dropping some real heat. Like, for real, he was dropping some bombs right there. He was really dropping some bombs right there, man. I have all of Anton Creel's videos. I mean, people used to like him a lot, but like now, I mean, it's pretty much like, nobody really fuck with his content like that no more. Anton Creel. Bitcoin taking over the world. Yes, Jeff. Bitcoin's taking over the world, man. Shout out Jeff Santil in the building. You know what I'm saying? Bitcoin taking over the world, man. It's the last hope, really. It's the last hope for a dignity of retirement. I tell everybody, man, look, you got an old man, put your old man into Bitcoin, man. Tell him, hey, take 1, 2, 3%. You know, the man said 43%. I don't know if I can convince my old man to put 43% into Bitcoin. That's going to be I don't know about that. I'm going to do it. Damn near 80% as it is right now. But because I'm willing to take the L. You know what I'm saying? I'm willing to take the L if it all falls apart. But convincing a 67-year-old man to put 43% of everything he's earned in the Bitcoin, I think that's a stretch. That's a stretch right now, for at least for my old man. It's just not gonna happen. I can already hear his voice now. It ain't gonna happen. You know. But if we can convince him to put 1 or 2%, maybe, I think that's a possibility. You know, that's definitely a possibility. And maybe it takes 1 or 2% for them to see how it runs, for them to eventually, give in. To eventually for them to give in on what it does. You're saying who? Summarization. Yeah, I'm trying to look for there's a really good course that I downloaded on financial statement analysis using ChatGPT. I don't know if you guys care about that stuff. Maybe it might be a little bit too deep for what, but I'm trying to get something that you guys would be interested in watching while I go get something and come back, because I'm starving. But I'm going to keep the channel streaming, because I don't want to stop streaming. And I'll be back to stream. I will not stop streaming, man. I refuse to stop streaming. I literally refuse to stop streaming, because that's how I came up. And I came up as a streamer. That's why I'm not like even mad you guys aren't watching my videos, because I know like that's not how I came up. You know what I mean? I didn't come up with most of you guys posting videos. My videos suck ass, and I get it. Like, I know my videos suck ass. Like, my editing is really bad. I don't edit for shit. Everybody's got cool intros and all of that shit. I don't have none of that shit. I don't have any. I don't have these cool ass intros and fucking helicopters zooming in on buildings and all that shit. I don't have none of that. Where the hell is that damn? I got so many damn hard drives because I use them as a USB disk. So these are a bunch of. I use these instead of because we got a thrift store here. They basically got these for like 99 cents, and some of these are like a terabyte, and some of them are 7,200 RPM. You know, I just use them as USB disk and I save stuff on them. At the thrift store, they just dump them there. I need to be reselling them because they had a whole basket full of them over there. But I can't remember which hard drive I got. I got a ton of trading videos on one particular hard drive. I think this is it, but I can't remember. Yeah, so I'm just kicking it with you guys, man. Nothing serious. I've been on for 3 hours. We've broken down a lot of shit, a lot of different stocks, a lot of different linguistic programming. I used to be really crazy about NLP. I think if I gave it more of a shot, it would still work, but I just never committed to it as long because, you know, at that time, I just wasn't really all in. When I would download a course, I wouldn't finish the course. But now, like, you know, if I download a course now, like, I'm finishing that shit. Like, you know, and there's so many of these websites where you can get courses for free and shit like that. And by the way, if you got my course in 2019, 2020, 2021, of course, my new course is free. Just log in and check it out. Fuck, where are all my fucking trading videos at? Oh shit, they were in that other one, weren't they? Fuck. Oh shit. I may not have those. Motherfucking. Yeah, don't mind me, guys. I'm over here. Fuck. Yes. So pumping a stock, I think he was. Well, I'm not sure what you were talking about. A dose of East Coast. I'm lost, but I know it's the delay. I want to make sure my next stream doesn't have a delay too. That's freaking irritating. That's freaking irritating. Gold mastery will probably be a professional Forex trader. Nobody wants to see how to be a professional Forex trader. Artificial intelligence, NLP. Dude, I don't have no trading videos? That's fucking insane. I have the Becoming Limitless, the Silver Method. Option Striker. Fuck, that's crazy. Yeah, I'm just looking for a video to play, man. So I can take a fucking dump and not just have the screen just sit here. And I used to have a shitload of trading courses. And yeah, I can't fucking find them. You know, when it's been a long time since I've been like, you know, deep diving on trading courses. But if you want my website where I downloaded all these courses are like you know, $3, $4, $5,000, and I get them for free, dude. Like, there's a website, and like this guy's like uploaded everything on there. Like, he hasn't uploaded my shit, thank God. But I mean, guys who I thought, you know, hey, I'm interested in seeing what his shit is, you know. I just download their shit all for free, bro. Like, I don't pay for none of that shit. You know, you guys remember when Tim Sykes was going to try to sue me and everything like that? Because I had every single Tim Sykes video. I had all his shit. And that's the thing. He was trying to come after me. I'm like, dude, I didn't even get the shit from. It's not like I ripped it. I didn't buy your shit and rip it. Like, that shit was like available. Like, that shit was all over the place at the time. You know? That shit was all over the place at the time. Damn, I thought I uninstalled WinZip. I hate WinZip, man. I thought I uninstalled WinZip. No more WinZip. Get rid of WinZip now. Uninstall that shit. What do I think about EV and what? EV and Tesla stock? Is that what you're saying? Oh, no, he said, please don't mention Tesla. Hilarious. I like EV. You know, I like the idea is good. I think we're too early right now in the onboarding phase of EV is just not where it needs to be right now. I mean, the way the Democrats are doing isn't right. And I don't want to make this conversation political, but we're not doing it the way the Democrats aren't doing it the way it needs to be done. You don't just kick people off one standard and try to force them into another standard. Right now, it's too expensive if you have an EV and something goes wrong with your vehicle and it's not protected, it's not covered. It's almost impossible for you to afford service on the vehicle. What the fuck? It says I'm running a WinZip thing right now? No, I don't think so. Yeah, so files here. All right, let me see if I can extract these. Can I extract these? Extract to a specified folder. Let's get these to the desktop. Okay. All right, let's see. Virtual camera. Yeah, guys. Virtual camera, new thing. Yeah, guys, I'm just trying to set something up here, man. I apologize. Just trying not to leave you guys bored here while I go freaking take a fucking dump.
Hi, I'm Alex Deploy, and a warm welcome to In this introduction lecture, we're going to have a look at the various ways that you can use the magic multiple moving average.
Yeah, this guy's talking about magic this and magic that. God, I can't believe I deleted that shit. Let me see here. God. Yeah, man. Mastering RSI. Okay, yeah, here it is. Here's one of them at least. Mastering RSI. Where's Yeah, man, I'm sorry, guys. This is just really frustrating because I'm trying to figure out where the hell did all my videos go. Let me see, what's this? Here's one of them for now, I guess.
And good afternoon, here we go. First lesson officially has started. We're gonna cover RSI and we're gonna cover fundamental basics. Now, as I've explained last time, what RSI is and how it can be used for, let's say, quick trading, medium trading, and high trading, as in daily, hourly, weekly, and monthly. What we're gonna do right now, guys, we're gonna start our shortest trend, which means we're gonna look at stocks within 1 month of data. So when you set up your chart, as I have it over here, you want to have 1 month of data, which is on the bottom over here, roughly, and then it's going to ask you what increments you want to use, and you want to use hourly, right? So every one of these ticks is 1 hour approximately, right? So obviously there's not, you can't see 24 ticks over here, but that's how the chart is going to be set up. Okay, so that's the first thing you want to do, and don't get discouraged right away. If you don't know how to do this, you simply email me and I'm going to send you chart information if you happen to use stockcharts.com. If not, I'll still help you so you can set up your chart. Once you set it up once, that's it, guys. You forget it and you always use that chart the way it's set up perfectly. Okay, so as we have mentioned before, we're going to use RSI many different ways. I'm going to be covering 3 main principles, and then depending on what your style of investing it is, meaning if you want to earn a lot of money in about a month, if you have a lot of time obviously as well, or if you want to be a gradual earning income, let's say a few trades a month, or if you want to go long trend. We're going to cover all 3 aspects. Okay, this lesson we're going to cover short-term trading, hence 1 month of that. All right, so a key thing with RSI is you want to draw your resistance line. What is a resistance line? Resistance line is a line that touches at least 2 points. You need minimum of 2 points to form a line. I'm going to draw you an example right here. So I've covered a portion of the screen that I'm going to share a little bit after, but For now, I'm going to draw a resistance line. Okay, we're going to try to be as accurate as possible over here. Now, here's a tricky question. I'm going to throw it at you right away. You can draw a resistance line like this. You can draw a resistance line like this. It doesn't really matter. This one probably makes a little more sense because it's touching more points, right? Where this one is touching 1, 2, breaking on a third. Here we're breaking on a fourth. It doesn't matter, guys, as long as you can spot a line. What you don't want to be doing is this. Drawing something like all the way out here, where in this example it would make sense because something happened with Tesla. I'm going to show you a little bit later, but you want to draw your resistance line on an angle, and that's the key thing. All right, what you don't want to do is, once again, do something like this. This does not make any sense, so do not be drawing lines like that. To keep things very, very simple, we're going to draw a line right over here. Okay, let's go like this. Boom, and then we're going to draw a straight line. Okay, so let me explain a few things. When you draw a line on an angle like this, this represents your resistance. All right, as you can see, I'm going to change the color. Every time it touched it, it didn't go through, nothing happened. We had sideways trading, and you don't want to enter a stock with sideways trading. All right, here we had a pullback. All right, and here, this is where we actually broke, was right here. We breached our resistance line. Now, the straight line, which you see right here, that becomes your support. So you can see right here, it breached right through it, bounced off the support, and went up. All right, so what actually happened? So at this point, we would enter the trade right over here. So let's say roughly, let's call it 205, 207. All right, so I'm gonna remove the hidden screen, and then basically look what happened. All right, we had a major reversal. Okay, so this was our entry point right here, and look, let's just say for hell of it right here. So we went from 207 to 232 roughly within a matter, let's say, of 8 days. That's 120% profit. That's alone just by using one indicator, one indicator. And it only makes sense because look, this is your monthly setup right here. You can only draw so many lines. That would make sense. This does not make sense. This does not make sense. All right, this does not make sense. What makes sense is a perfect line that touches a couple of times. All right, and then the best part is if you were to test that line, you can see that nothing is happening. It's only once the pattern is breached, that's when we have the upward trend. All right, guys, so that's the beautiful part of just one indicator of one setup. Okay, let's go to the next one. Let's go to Facebook. I'm gonna pull up my screen over here so you can see nicely. All right, so same thing, guys. Let's take a second. Maybe
this guy's really good.
Display and then see, where would be my resistance?
And I'm not stealing his shit.
Right.
He's actually
so
like
you can
dead.
Kind of
so
play with it, because after you do this a couple of times, your eyes is going to get trained to the point where you're going to spot it without even drawing a line, right? So
I just got his best stuff.
It's too crazy to be a resistance line. It's too kind of angly, right? This is also not a resistance line, right? It's a little too much. You're not earning a profit. Okay, so let's actually draw a real resistance line. Okay, so it goes from right here to roughly about over here. Now let's prove to ourselves that is a resistance line. Okay, we had a test over here. Oh, look at that, a failed point. We had an indirect test here. We had a pretty strong failed point, and then we had a perfect test. Nothing happened, failed point. Okay, so what happened here? So let's say, all right, you know what? I trust your system. I'm gonna draw my line right here, so I can get myself an entry point. Okay, so $80.46. Let me now reveal the screen. Ta-da! Look at that, guys. You just found out a perfect entry point based on the resistance. So let's say roughly like this, straight line all the way down. Okay, and there we go. And then I'll teach you when to exit. You can let's say you can exit at, just for right now, for quick practice, at the oversold limit, which will be right here. So you went from $80.46 to $84.50. Now, to you, that might not seem a big profit. Hey, you just moved 5%. But you predicted a move within 2 days from the 20th, and let's say you sell it on the 22nd. Within 2 days, you predicted a stock move of 5%. Your option will go up by 80% within just 2 days. And all you had to do was follow the pattern. Very, very simple. Okay, let's keep on going. The more we train, the better we're gonna get. All right, guys, same thing over here. You wanna go with the pattern that makes sense. So let me draw the line over here. So here we go, roughly. Okay, so sometimes you're gonna have a very explosive move, and I'll tell you a little tip why I think explosive moves happen. So, but let's first test our resistance line. Okay, well, here's a test, nothing happened. Here's a test, whoa, we got a failed point. Okay, now we get a breach. Interesting. So I'm gonna enter my trade right here. So let's say this is thicker right here. Okay, so we're looking at about, let's say 106.50. All right, let me reveal the screen. And boom, guys, look what happened. So you entered at 106.50. Okay, so roughly like this. All right, and let's say you exit at your point of oversold limit, so somewhere over here, let's say. Okay, so you went, and this is where you would collect your profit. So in a matter of 1, 2, 3, 4, 5 days, based on this trend, you would earn yourself a solid 45 to 50% profit. Very safe, very, very safe, because you realize there's a pattern over there. Okay, now let's look at some higher profits. All right, I'm gonna fix my screen once again. All right, so this one is a very nice example because it's going to be very, very explosive, and better yet, I'm going to show you another way that you can earn a profit twice within a month. Okay, so let's draw ourselves a resistance line once again, and then we'll test it out. Here we go, right here. Okay, so we have one test over here, and you can see nothing happened. Pull back. All right, we had another direct test, nothing happened. Sideways trading. Here we go. I'm going to enter over here, so let me find my point. Roughly at, let's say, 32.50. Okay, I'm going to reveal the screen. Look at that, guys. Beautiful, beautiful uptrend. So this, even if you exited at this point, you would have made yourself 160% profit. Better yet, look at this right now, guys.
Like,
not only
when I first started learning what he was doing,
there's another pattern developing.
it's so simple, and you think like, oh, it's so ridiculous and it's so easy, but it makes perfect sense. And on the chart, you can see it like life and day. Now, you know, man, there's so many ways to make money in the market, but I mean, this is just one of those things where sometimes I do like lean on, particularly these stocks that have sold off quite aggressively. These are a way to play those.
Look at that. So we had a test over here, we had a pullback, and now we're having almost looked like it breached. And then look at that, if you were to draw a very thin line, you would have caught this profit, and who knows, maybe an upward trend profit. So there's a pattern after pattern after pattern. Now, when you set up your chart for 1 month, it doesn't mean that every stock is going to give you a pattern of entry, but what you can do slowly is you're building up yourself a watch list. So let's say it's April 15th, and you're like, oh, okay, well, I got one. Now I have a resistance line. All I need is to have a third point where it's going to break through. So you place this play on your watch list, and then later on, when you get to 17th, 18th, 20th, oh, here we go, we breached. I'm going to enter, and then you reap the reward of waiting. And then over time, you'll develop yourself 4, 5, 10, 15 plays on watch list. You simply check it once in the morning, and off you go. And let's do one more play, guys. Okay, we're going to go with the BTU. I don't know why my screen is not set up. There we go. All right, so exactly, let's do exact same thing. Let's draw ourselves a resistance line. Let's test it out. Okay, so here we go, right here, right there. Let's test it out. Okay, so we had a test here. Nothing happened, pullback. Nothing happened, another big pullback. Here we go. We got a breach. Okay, well, you know what? I'm going to invest right here. Let me draw a straight line. So let's say $4.80. Okay, and reveal. Look at that. perfect upward trend. You went from 480 to 550. If you had an option, within 4 days, you would have made yourself 120% profit. Now, that is if you purchase an option in that same month. If you purchase an option for next month, that means you have more time before it expires, which means your profits will be less. Overall, you would get about 85% profit. But hey, you know what? That's fine. But we're teaching you on a short-term trend how you can use to your advantage a 1 month worth of data. The next lesson, we're going to go into 8 months worth of data. Now, that doesn't mean you have to wait 8 months, but you would have to wait probably, I'd say, about 5, 10 to 25 days to earn a profit. Okay, so this summarizes our short-term trending. I hope this was educational and made sense. What I want you to do now, guys, is use either stock charts or some sort of a system where you can put this data onto it, and then basically give me 2 stocks. They don't have to be developing plays. They can be, like I just showed you, developed plays. And you exercise what I've just shown you, where you draw a resistance line, and I want you to show me direct tests where it failed and actual tests where it passed. Email me those 2 plays. So take a snapshot and email them as a JPEG to me. I will review it, and then we'll have a little back and forth. If you have any questions, if you did not understand something, that's where your mentorship program kicks in. So that's it for now, guys. We had our first official lesson, and the best way you're gonna know that this system works, play with it. This graph is your playground. Make sure you use it. Make sure you try every little thing and nick off it, because you know what? One day you'll be doing this for the living, or as a side profit to complement your earnings. All right, guys, I'm gonna head out. So make sure you email me if you have any sort of questions. Lesson part 2 coming up.
All right, great stuff, man. Great stuff. Great stuff. It's a really good little lesson there. I think 2 more of his videos. CYTK. No, I don't think this is one. I think this is the more advanced one. Let me see.
Let's look at the CYTK. Right through this area, we see dodges.
Yeah, that's definitely not what I was looking at. And then we saw the short term. Let's look at now long term.
And we're back, guys, for the 3rd lesson, and thank you very much. I've been receiving a number of emails and thank you notes. For some of you crazy investors, you guys are just using RSI to start earning profits. Thank you for that, but also be very cautious. There's much more to learn, much more, at least safety points to learn that we have to cover. And at least if you can do something, test it out with paper trades. You know, I'm very happy that you're earning a profit, but then again, guys, I caution you, there's so much more to learn, and then you will realize, oops, that could have been a big mistake. But test it out with paper trades, and then when you do see something that goes wrong, you can always email me and say, hey man, what happened here? Now I'm going to teach you probably the coolest thing, the easiest trick to recognize entry and exit. Entry is going to be super easy. You might think, oh my god, like, wow, really? Just this move alone? Plus, in this segment, I'm going to show you also when to exit. So this is for a long-term trading. And long-term, I mean a year and a half. But this is how you can earn safe income over course of time. Now, this might not be for all of you, but you know what? There's a lot of investors that wish to have a safer approach with their investments. Now, you can use option trading, but this is more aiming towards the stock itself. But you can also apply for the options. All right. So the way you want to set up this chart is going to be for 32 months. Okay, not 34, not 36, 32 months. And the type of data is going to be weekly data. All right. So the only thing we're going to look for is entry point and exit point. Okay, entry point. When do you enter? Before I've shown you, use your resistance line. Here, resistance line can be used as well. I'm going to show you a couple of ways. Easiest way, 50 RSI, guys. This is your life and death line. Okay, life and death. entry point. Look at that. Right here. This is your entry point. 50 RSI line. Once it crosses the 50, that's when you enter. Okay? So what happens? You enter here.
I would have made millions
And
if I would have learned
boom.
this 10 years ago.
Look at the uptrend. Look at that. We went from $20 to, let's say, the peak. And now the question is, Nem, where is the peak? When do I enter? When do I exit? You would have entered here, and this is where you draw your support line. Look at that. You bounced off support once, twice, breached the support. Okay? This is your exit point. There's so much to learn from this graph alone, guys. I'm trying to simplify, trying to keep this very, very simple, but I almost feel like I want to share a lot more information with this alone. So let's keep things very simple for now. You enter when the 50 is breached at a 20.
On the weekly
You enter
chart.
when your support line is breached. 190. How much profit did you make? You went from 20 to 190 in a course of from November, let's say from November to November, a year. Okay? Now you do the math. Beautiful, right? Second thing I'm going to show you guys. Look at this line. You have established, this is your support line. This is a simple mathematics. Your support line is drawn here. You draw a straight line, and then look at this support line. Isn't this a support line for an entire graph for the future to come? The future might be 5 years. Look at that, bounce, bounce, bounce. All right? How do you find out next explosive play for Tesla? Going back to the basics. Now this is very interesting. We have almost a double top, triple top, quadruple top. They're not exactly in a straight line. But isn't Tesla setting up for one of the most explosive plays? Not only did it breach the 50, so this will be a nice entry point, but we're also testing an entire 3 years worth of data. There was a pullback here, and a test here. Now, there might be a pullback. I'm not sure. Support line held. We're testing over here. Look how much information you can learn from just one graph alone. But like I said, let's keep things very simple. Entry, exit. Now, let's see, does this theory apply on the other stocks? Okay, let's go Apple. When do you enter and when do you exit? All right, so as you can see over here, we have what I call kiss the 50, what means it touches it and it goes back up. Okay, so let's say you entered right here. Okay, boom, look at that, guys, upward trend. Then when do you exit? All right, let's draw our support line. Look at that. Tested it once, twice, 3 times. This is why this move was explosive. Is not only was this your support line, but this was your entry point. Tested it, and it failed right here. Okay, so we went from, let's say, $73 to $115. 80% profit over course of about a year. Okay, entry and exit. Keeping it very, very simple. Okay, let's go to the next example. Right here, guys. You will enter, there we go. Enter at a 50, and the reason I'm showing you this here we don't have a lot of data. We have probably about two months of data. But there's a lot of new stocks coming out, and sometimes you might be eager to jump on a bandwagon, but you still want to know when is the right time to enter. I mean, if you look over here, he didn't go through 50. He didn't go through 50. The moment it goes through 50, that's when you want to enter. Okay. When do you want to exit? Well, let's draw our support line. Look at that. Isn't this a beautiful support line? He touched it, he touched it, he touched it, and still keeps on going. So if you had entered here, I would not exit. I would not exit until this line is breached. Eventually it will be breached. It might be somewhere over there. So you went from $23 to $48. You doubled your money right there. Beautiful. Let's keep on going. Let's go Bubba. All right, so let's say you're eager and you want to enter a trade. How do you know when to exit? Same thing, guys. If it crosses below the 50, you're exiting right there. Reason I don't like this, and this is a key thing you want to learn. This IPO opened up, so there's negative data here. We have no data. So it started on a 60, it tested the 50, bounced back up, and it went below 50. This is something you want to stay away from, okay? This is negative loss, all right? Negative, negative, negative. Stay away from it, not something you want to enter, okay? This is fine when it starts below the 50 and moves back up. When it starts above 50 and goes down, stay away from it, all right? Facebook, same thing, guys, all right? Why do I keep on pressing this? All right, enter at 50. Look at that, let's say $25, 26. All right, so where do I exit? Well, draw your support line. All right, now you don't have to be too accurate. Let's say you draw it like this right here. There you go. Tested it, entrance and exit. So you went from 26 to 68. All right, easy year and a half. No, actually less than a year. You have doubled your money. Actually, more than doubled your money. So this is a little bit of a safer approach. You definitely know when to enter. Very easy to know when to exit. Even though there was a pullback here, you're like, hey, you know what? I'm way above my support line. Pull back here, way above the support line. You know what? This is getting a little tricky. I'm gonna exit. All right. And then from here, you can draw a straight line. All right. And this is all the tests that's been going on. This is sideways trading. This is what you want to stay away from. Again, this is going to be advanced lessons. But if you ever come to this scenario, stay away from it. Look at that. Nothing's happening. You want to know a clean entry and a clean exit. Very, very simple. All right. LinkedIn. Same thing, guys. This is beautiful. You want to wait. The longer it marinates below the 50 and then it goes right through, that's when you enter. Okay, so that's 160. All right, let's draw our support line. We're right at the support line. So isn't that beautiful? You would have kept on riding the trade. 160, 252. Very, very simple. All right, another one, and the last one. It's going to be very good example. Okay, couple of ways you can play this play. All right, right here, entry point, you're looking at about a 138. Draw your support line. Look at that, how many times it was tested. Exit right here. So you went from 138 to 270. Okay, is this the only entry point? There's always going to be an entry point, guys. All right, same thing here. All right, came below. I have about 230. Draw the support line. There we go. Look at that. It tested it once. It passed. So what did the stock do? Continue going up. Tested it twice. A little bit of sideways trading. It failed. Now that's where you want to exit. Look at that big failure point right there. You would have went from 230 to 360. What more do you want? This is an easiest way, guys, to, if you want to start up, let's say you got about $2,000 and you want to double and triple to, let's say, 5, 7, or 8,000. This is a good way to start. It does take a little bit longer, less risk, solid plays over time. Play with this, okay? Now what I want you guys to do is choose 2 stocks where you actually have tested this out, draw your resistance and support line, hence entry and exit point. Send it to me for review. Let's have some fun. All right, guys, have a good day. Lesson 3 coming up. 4 coming up.
Oh shit. Jay said, where can I find some of these videos? Just online, man, over the years, bro. Like that dude is dead. I was looking for him because I loved his information. I was just like, God damn, that information is so good. And, you know, these are just random videos I just saw over the life of, you know, of trading and stuff. So crazy. Crazy, crazy, crazy. You know, Twitter is a good place to find these videos. I mean, not Twitter. What you would call it? Pirate Bay, message boards. Man, just randomly surfing the internet. You know what I'm saying? You're gonna find these kind of videos. And email me too. I'll send you some links as well. I'll be getting a lot of my videos and shit. We getting a ton of videos. What the fuck?
On any scene you want for your particular stream or recording. Okay, so we're going to be using this scene to set up the video playlist today, but keep in mind that you can actually set the playlist on any scene you want for your particular stream or recording. You can have the videos play full screen, or just you can shrink them down to fit a certain size as well, which we'll be doing here today. So go to Add Source, click on Find More Sources, go to the plugin store here, simply type in Video Playlist.
Okay, there we go. Because I want to play like a bunch of trainings. So like I can just have the stream running and just install a bunch of playlists for you guys to digest. You guys like Anton Creel? Some people like his shit, some people don't. You know, those of you guys who are still in the chat fucking with me, help me trying to get this channel back up, man. I don't know what the fuck I gotta do to get this channel back popping again. I mean, my thing is like, should I just make a bunch of penny stock videos? I fucking hate penny stocks, but I mean, if I gotta go back to short-term trading, even if it's on some paper trading type shit just to get my channel popping again, I will. I'll do it. Even if it's just to get the channel popping again, I'll do it because I'll just have my own way of trading outside of this, and then I'll just be making a bunch of small cap videos. I think maybe that's what I got to do, bro, because like 99% of my audience was small cap. So it's just like, it's just not anything that I do that's not small cap. It's just like, y'all not feeling it, man. That shit is so fucking frustrating.
Hello and welcome to the Piranha Profits professional trading course, and welcome to the world of professional trading. I'm Adam Koo and I'll be your coach on your journey to building a profitable trading business. So I believe you're listening to this because you realize that learning how to trade is really the only skill that can guarantee you an income for the rest of your life. Because nowadays, if you learn a skill like engineering or accountancy or programming, I mean, sure, that's a skill. But that skill can't guarantee us a job in 5 to 10 years. Because when we work for someone else with those skills, Eventually, when we get senior enough, we get, too expensive to be kept, right? Our salary is too high, and we can be replaced by someone, younger, cheaper, and faster, and even in the future, artificial intelligence. But when you can trade the financial markets anywhere in the world, as long as you've got a laptop, an internet connection, you're in business for yourself. You have an avenue to create income for the rest of your life, and that's true freedom and security. So with that, let's get started to learn about the business of professional trading. So how do you make money in the trading business? Well, trading is like any other business. In any business, you make money by buying low and selling high, or selling high and then buying low. For example, if you're in the restaurant business, you're buying ingredients at a low price, right, and selling the food at a higher price. And the difference is your gross profit. And of course, you have to deduct your operating expenses like rental and salary to get your net profit, right? Now, in business, you can also sell something to your customer, collect the money up front, and then make the product, which costs you money, and deliver the product. So in other words, you could always sell first, sell high, and make low, deliver the product, okay? So the same thing goes in trading business. The only difference is that you're not selling and buying physical assets, right? You're selling and buying financial assets like stocks and ETFs and currencies, okay? Now, in the world of financial assets or stocks, for example, there are only three things that a stock can do, a stock price can do. It can either go up, it can go down, and it can go sideways, all right? So we're going to learn in this course how to determine the probability of the price direction. Now, there's no guarantee and you can't get it right all the time, so it's just a probability, but it's all we need to make consistent profits, right? So for example, if you determine that this stock, Home Depot, has the probability of the price going up over time in the short term, you make money by buying low and selling high, or buying high and selling higher, right? We call this going long on the stock, right? So when you hear the word going long, it doesn't mean that you're holding for the long term. It simply means you're buying at a lower price, you're selling at a higher price, and you're making the profit from the difference, okay? So for example, say the price was originally at $120 per share. So you believe that it has the probability of going up, okay? So what do? You buy at $120, okay? So when you buy, it's a debit, all right? So it's debit $120 because you have to pay $120.
Man. It's
right?
really frustrating with that,
Now, say the price goes up as you anticipate to $150, and you say, fine, I'm going to sell it to take my profit. So you sell it at $150. So when you sell it, it's a credit.
Like if I gotta
money
get back
comes
to
back
doing
of
small caps, I'll do it,
$150.
man. Because
So what's the difference? The difference is $30. That's your gross profit. Like in the restaurant
my
business,
audience
right?
is just not fucking with this.
The difference between the ingredients and selling
I'm
the
still
food.
doing them,
Okay.
which is
Now,
crazy
of course,
because,
you have
like,
to
they're
deduct
winning
your
plays.
rentals, your overheads. So in the trading business, the only
guys are not
overheads
making
is
money.
commissions,
They're
right?
not making money,
So
but
you
if
have
I
to use
put
a stockbroker
my 5 top
to
small
enter and
caps
exit
right
the
now,
markets, and a stockbroker will charge a
5 top
commission.
penny stocks right now.
So you have to find the right stockbroker because commissions can
Easily
range
manipulated
anywhere
by, like,
from
a guy with, like,
$1
a decent
to $10 per
mailing
transaction.
list.
So usually the brokers I use are $1 to $3, which is a lot more manageable. Okay, so if you take $30 minus $3, right, that's a $27 net profit. So what if we determine that the probability is for the price of the asset to go down in value? The price is going to go down. So the way we make money is by going short, all right, or what people call short selling. So in this case, we sell high and we buy low, right? Just like a business where you sell to the customer the product, you collect the cash, and then you make the product at a lower cost, and you make the difference, right? So you do the same thing in the stock market. So for example, Twitter is at, say, $30, right? And you know, or you think that the price is going to go down. So what you do is you click sell, and you sell it at $30, right? Now, some of you may be wondering, how do I sell something which I don't have, right? Well, in the financial world, when you sell something you don't have, it's called a short sell, or you're going short. So what happens is the broker will lend you the shares to sell, right? And this lending process is a split second, it's instantaneous, right? Now, not all shares can be bought to sell, but most of the shares that we trade will be shortable in that way, okay? So let me explain again. So you click sell, the broker lends you the shares, you borrow the shares and you sell it, and you get a credit of $30 per share. Okay? Now, can you take this money and run? No, because you borrowed the shares to sell. So you have to return the shares, right? So how do you return the shares when you sold it? Well, you got to buy it back, right? So what you want to do is you want to buy it back at a lower price. So you wait for the price to come down to, say, $18. And what do? You go into the market and you buy it at $18. Okay, so that will cost you $18. But remember, you already have a credit of $30. You borrowed the shares, you sold it, you got a credit of $30. Now you buy it back for $18.
Make money.
Okay, so what's your net profit or your gross profit is $22 in profit. Okay,
you can do
so of course the broker will not lend you the shares for free. There is a borrowing fee that you have to pay, which is about 2 to 3% a year. Now we're not going to borrow it for a year. We're going to only borrow it and sell it and buy it back within a few days or very most a few months. So the cost of borrowing is quite negligible. Okay? Now you also have to deduct, that's right, commissions to the broker, right, whenever you sell and buy.
And I was
so $22 deducting your commissions and your borrowing fee, maybe you're left with $19. Okay, for example. Your net profit could be, for example, $19
tonight and all
per
that other stuff.
share.
Like they're
So if you
to that
had shorted 10 shares, you would have made $190.
So now that I think about it, I don't want to go
if
back
you had
to that
shorted
shit, this is
100 shares,
the shit I gotta create a whole
you'd have
new
made
fucking audience to-
$1,900.
so be it.
Now, some of you may have some questions like, okay, if I borrow the shares and sell it,
frustrating
is
as
there a
fuck to
time
realize.
limit where I have to buy it back and return the shares? No, there isn't, right? By the way,
I
I'm
might
talking about
make
the
this a
US
crypto
markets here
channel,
and most major markets, right? US, Singapore, and Hong Kong.
I love my
There's
stocks,
no time
you know what
limit.
I'm
You
saying?
could borrow and sell and
No,
buy
just
it
make
back
this an option
10 years
stream.
later.
Yeah, I'll just keep this
But of
making
course,
an
we wouldn't
option
do that
stream, that's
because
all.
the longer you borrow the shares,
fuck with me,
the more
people don't,
interest you have to
so.
pay to the lender, who's the broker. Okay. Now, the other question people would have would be, must I have capital in my account in order to perform a short sale? Of course, you need to. To perform a short sale, you have to open what is known as a margin account. All right, margin account, and we'll talk about this more on the lesson under stockbrokers, which is lesson number 9. So you have to open a margin account, and usually what happens if you are selling short, say 100 shares, in this case, of $30, so you are selling short 3,000, right? So in other words, you're borrowing $3,000 worth of shares and you're selling it for 3,000. Okay. Now you have to put some collateral in case you end up losing money. Remember, in any trade you could lose money because if you are selling at 30 and if it goes up to 32 or 33, you got to buy back at a higher price. You're losing money, right? So you have to put a collateral with the broker to ensure that if you lose money, you can make good on that loss. Okay?
No money in
So
penny stocks
usually, if
anymore.
you're selling short
Yeah, it's just dried up, man.
$3,000 worth of shares, you need
stocks
at
dried
least
up. That's why I moved on,
1,500 of capital in your account
like
to begin the process, or rather
running out of shit to
50%
say,
of the
you know, then,
amount
like,
that you're
everyone was a
shorting,
pump. There
right?
was
Which is
nothing that was, like,
1,500.
generically
So that's how
moving.
short selling works. So you can see that in the
It's got
business of
frustrating, man.
trading, we don't really care where the market goes, right? If the market goes up, we make money by going long, buying low and selling high. When the market goes down, we make money by going short, selling high and buying back low. And that is what makes the trading business recession proof. I mean, the whole market can collapse and we are still making money. All right. So there's no such thing as a good or bad market. All right. You make money regardless of the price direction, as long as you get the direction right. So how do you get it right? By studying technical analysis, by studying probability, which is what we're going to be learning in the lessons to come. So if you've always wanted to be an entrepreneur, to be in business for yourself, trading is one of the best businesses to be in for a couple of reasons. Number one, it's really flexible. All right. Now, if you start any other business like a boutique or restaurant, you have to work for what? 8, 10, 12 hours a day. But in the trading business, you can make a very good income by working no more than 1 to 2 hours a day. And I'm going to show you the routine and the process in the lessons to come. Next, you can work from anywhere in the world, right? From your bedroom to lying on the beach, right? Or sitting in a cafe, right? I don't know about you, but I hate waking up early in the morning, and I hate, fighting the jam to work and fighting the jam back. When trading, you don't have to do that, right? Again, anywhere in the world, you could be trading while you're traveling, right, with your family. Next, no employees, no politics to worry about. You
I
have to
love
manage
that.
people, right? Hiring and firing. I don't like that, okay? Next, no rentals, right? You don't have to rent a shop to do it. All you got to do is to pay commissions to the broker, which is minimal rental to be in the trading business. Next, no competitors. Sure, there are many traders around. But what I love about this business is that, see, if I teach you how to trade and you make money, I don't make less money, all right? So it's not a competition, so-called, right? So when I teach you all my skills, you can make money, I can make money, we can all make money together. And those people who are losing money are the ones with no skills, with no business plan, all right? So that's the great thing about it. We can cooperate and make money together, okay? Next, no products or inventory. Unlike any other business, you don't have to buy and store inventory. Because again, we're trading financial assets. There's no physical assets, so-called. We're trading numbers, okay? Next, recession proof, right? People are always concerned, right, about the next recession. Will I lose my job? What's going to happen? But again, in trading, we make money going long, going short. We really don't care where the market's going, as long as we can read the trend of the market. Next, low startup capital. Nowadays, in most businesses, you need at least 50 grand, 100 grand, 200,000 to start a business, right? To pay the rentals, renovation, hire employees. Not in trading. In trading, you could start with as little as, 2,000 to 3,000 US dollars, all right? To whatever, you can start with $1 million, right? So it's very flexible. Finally, it's one of the lowest risk businesses you can be in.
Absolutely.
See, many amateurs think that, hey, trading is risky.
Trading doesn't have
anything
to
is
be risky at all.
if you do not know what you're doing. Climbing a mountain is risky. Driving a car is risky. Starting a restaurant is risky, right? If you don't know what you're doing. But if you know what you're doing, trading has got the lowest risk as a business. Why? See, if you start a restaurant or again a shop and it doesn't work out, how much do you lose? You lose everything. You lose 100% of what you sunk in, right? But in the trading business, when you trade, you only risk a small percentage of your capital on any trade, which I always recommend to start with 1% risk, right? So even if you get, for example, 5 losses in a row, or say even 10 losses in a row, that's 10 losses times 1%. The worst that can happen is you lose 10% of your capital temporarily, because eventually you will make it back if you continue trading with the right system that gives you a positive statistical expectancy in the market and edge. The other thing is this. In trading, you always want to start with a demo account, which means you don't put in real money, all right? The broker will give you, say, 100,000 of virtual cash. So you practice with that. And only when you can make money consistently with demo virtual money do you put real money in. It's kind of like a pilot, right? Before you actually fly the plane, you get in the simulator and I make all the mistakes you can make, because you will make mistakes. Right? You can crash 100 times, no one dies, right? Only when you get it right do you fly that plane. And you can do that in the trading business. In no other business can you do that. Can you realistically test your business model without risk? Right? You can't start a restaurant and say, you know what, I'm going to start a demo restaurant with demo customers and demo food, and if it works, I continue with real money. You can't do that, but you can do that with a trading business. Now, the good news is that anybody can be successful as a trader. You don't have to be a specific age or gender or background. I've seen people who are old, who are young, who are former housewives, former bankers, former medical doctors become very successful in the trading business. So what do you need? What you need is a hunger to succeed, a strong desire, a commitment to work really hard, okay? As well as a willingness to learn and master these skills, and the ability to really open your mind and to change your mindset. In this great book, Market Wizards, written by Jack Schwager, he interviewed some of the best traders in the world. And these guys are making phenomenal amounts of money, right? Turning a few $1,000s to millions of dollars, many of them from their home, right? And he interviewed them to find out what they all have in common. And he found that they had they all had three qualities that made them really successful. The first quality that they had was they all had a winning system or winning strategy with a positive statistical expectancy or an edge in the markets. What does it mean? It means that no strategy can win on every trade. But when your system has a positive statistical expectancy, it means that over a number of trades, you will always be profitable. Why? Because you will win more than you lose, although you can't win all the time, right? Your average wins are bigger than your average losses, and that is what leads to consistent profits. Now, bear in mind that although having a winning strategy and system is really important, it's critical, but it is only 10% of what makes a successful trader. Why is that so? Because what he found was that all these successful traders had a fantastic winning system, but their approach to the market, their strategy was completely different. You know, for some of them, it was like night and day. So let me give you an example, right? So for example, in terms of instruments, it was very different. Some of them, they were trading stocks, right? Like for me, I'm primarily a stock trader. That's where I make most of my money. But some of them would be primarily trading currencies, right? Forex, right? Some of them be trading futures, some trading options, bonds, right? So back to the restaurant metaphor. If you want to start a restaurant, you can't ask, hey, what's the best restaurant that's going to make, good profits? Is it a Japanese restaurant, American style diner? Is it an Indian restaurant, Chinese restaurant? The answer is this. You can be very profitable in any kind of restaurant, whether Japanese or American. You just have to be really good in that style of cooking. Okay? So there's no best instrument. People always ask me, Adam, is it better to make money in stocks or Forex? And I said, there's no better instrument. You can make money in any instrument as long as you master that instrument. And every instrument has its pros and cons, has its own characteristics. So you have to find an instrument that so-called matches your personality in a way, right? And personally, for me, I find that stocks are a lot easier because it's easier to read the trends. The trends are more reliable. Whereas in currency trading, the trends are not as reliable. But the good thing is that currencies are 24-hour market. So there are more trading opportunities. Whereas the stock market is only open, from 9:30 a.m. to 4 p.m. Now, futures, on the other hand, is also a 24-hour market if you trade futures, right? Problem with futures is that there's an expiry date. So you have to keep on, rolling over your futures contracts, closing the current month and opening a new month if you're holding for a certain period of time, all right? Some people make a lot of money on options, right? Personally, I don't really fancy options because options tend to work well for a non-directional method. When you're net seller of options, you use things like iron condors and credit spreads, okay? Options are not profitable when you use them for directional trading. That means when you buy a call thinking the price is going to go up, all right, or buying a put thinking the price is going to go down. Normally you will lose money when you are net buy or sell of options, right? So that's why I found my own journey. So for the purpose of this course, we're going to focus primarily on stock trading, right? As well as using CFDs or contract for differences. I will also be launching a future program on currency trading as well. But for this one, the main focus again is on stock trading, right? The next thing is on time frames. If you study very successful traders, they all trade on different time frames. So it's all a matter of preference. There's no right or wrong, okay? Generally, there are 4 time frames you can trade in. Okay, the first one would be known as position trading, also known as long-term investing. So if you look at someone like Warren Buffett, his time frame is in years. When he buys a stock, he's going to hold it for 5, 10, 15, 20 years. He's taking a long-term position. So that's called position trading. And normally for position traders, they look at daily or weekly or monthly candles in reading the stock chart. Or they may not even read stock charts at all, right? They focus purely on the fundamental approach where they study the fundamentals of the company. They're not concerned with the daily fluctuations in the price, right? And the holding period, again, is months or years. So that's long-term time frame. Okay, so that's one style. It's a Warren Buffett style. Okay, and then another style would be known as swing trading, which is one of my major styles. So swing trading is one where when we study the charts, we're looking at daily candles. Okay, and typically our holding period is in days, right? We buy and sell within 2, 5, 6, 7 days as a swing trader. Okay, typically you do anywhere from 10 to 20 trades a month. Okay, the next style would be day trading. All right, so day traders they buy and sell within 24 hours. All right, could be within 5 hours, within an hour, half an hour. Okay, and they normally look at the minute candles and the hourly candles. Okay, so I'm a day trader as well, but I normally trade the first hour of the market open, and that's where I make most of my money. All right, I don't trade the rest of the day, not as profitable. Right, and then you also have got scalping. Scalpers, they buy and sell within minutes, sometimes even within seconds. Right, that's right. So they look at minute candles and sometimes even second candles. Okay, so once again, people may ask, hey, what's the best time frame? Daily candles or minute candles or hourly candles? And the answer is there's no right or wrong. Okay, there's no one style. There are many styles, and you can do well in any style as long as you focus on that style that suits your personality. So it's kind of like, let me use a sporting metaphor, right? Say ping pong is a game, or table tennis is a game where you have to move really fast, right? Golf is one where you take your time, look at the ball, take the right stance, take a swing, practice swing, right? So slow and steady, okay? And it takes someone like a Tiger Woods in his heyday when he did really well in golf, right? He's a champion golfer. And if you were to ask him to play ping pong or table tennis, would he do well? Maybe not, right? If you get a champion Chinese ping pong player and ask him to play golf, he may not play golf really well because it doesn't suit their temperament, okay? So if you're someone who likes to take it slow and easy, all right, you should be a long-term investor, right? A position trader. If you're someone who likes to move really fast, right, buy and sell really fast, and you're really good at calculating mental mathematics, then scalping is your thing, right? If you're kind of like in the middle, all right, I don't wait too long, but I don't want to watch the market every day, okay, then you'd be more of a swing trader, okay? So in this trading course, you're going to be learning a whole range of strategies. Now, I'm not going to cover position trading in this course. This course will be focused more on swing trading and day trading, for a bit of scalping as well. All right. Next thing is methods and styles. And again, different traders who are just as successful have very, very different styles. Some people are purely fundamentalists, right? So they make decisions based on studying the fundamentals of a company, right? The profit and loss statement, the balance sheet. Some study the macro trends like interest rates and GDP and blah, 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 whatever it is, right? And some traders focus on technical analysis, reading chart patterns, okay, candlesticks, support and resistance, trend lines, okay? And again, there's no right or wrong, okay? You have to find a style that suits you, all right? And my preference has always been technical analysis. Now, I have to say this, when I first started at 18 years old, I've been trading for more than 24, 25 years, right? I first started as a fundamental investor, right? I was a position trader. I used to hold my shares for months and years. And when you have more of a long-term style, you focus more on fundamentals. You don't care about the short-term price trends. And I made pretty good money. In fact, I made my first million as a long-term investor. But then I saw other people were able to make a lot more money, a lot faster, using shorter time frames, okay, and using technical analysis. So I would say kind of like about 12 years ago, I shifted from fundamental analysis to now purely technical analysis, from position trading to now swing trading and day trading, all right? And it suits my personality, it suits my time, and I'm able to generate a lot more profits. So I'm going to be focusing mainly on that in this professional trading course. And again, there are some people, you talk to them and they're great traders and they say, you know what, I'm a trend follower. So what does that mean? That means to say they buy on the uptrend, they sell on the downtrend, right? That's called trend following or continuation trading. Now, on the other hand, there are also people who make a lot of money doing counter trend trading, right? They do the complete opposite, right? Where they buy on downtrends when it's really undervalued, when it's oversold, all right? And they sell on uptrends when it's overbought, when it's too expensive. And they too can be really successful, right? So again, there's no one way. There are many ways. You just have to know for each way what is the key to master that strategy. And I'm just going to show you a few charts to illustrate my point a bit more, okay? So this, for example, is a trend following style where we follow the trend of the market. So in this case, you can see that the price is on a clear uptrend, all right? So I'm going to use this to draw, right? That's the price. You can see it's on an uptrend, like so, right? An uptrend is defined as, you know, higher highs and higher lows. You're going to learn this on the lesson on technical analysis, right? And you're also going to learn that on an uptrend, the price that you see, these candlestick patterns you see there, right? It's above the moving averages, which is this blue line, the green line, the red line. These are the moving averages. So when the price is above the moving averages, it's a clear uptrend, okay? So people who are following the trend will buy on the uptrend, and the best time to buy is when the price makes a temporary dip on the uptrend or retracement, okay? So we call this a impulse, retracement, buy, continue the trend, right? So we call that a retracement or a dip on the uptrend. So you buy the dip on the uptrend, right? If in this case the trend is going down, it's a downtrend, you can see the price is below the moving averages, and the price is, you know, doing this, right? The price is making lower highs and lower lows, right? There's a downtrend, right? So on a downtrend, what do? You sell, you short, because you follow the trend, okay? And the best time to sell short is when the price makes a temporary retracement or rally to the moving average, right? So it goes up, you sell, profit as it comes down, okay? The other thing could be the price is in a consolidation, right? Going sideways, right? Hitting a resistance, a resistance, a resistance, right? So it's having a resistance. And the moment the price breaks out of that resistance, you buy on the breakout. We call this breakout trading, okay? Some people, they don't buy on the breakout. They wait for the breakout to retrace, come back to the previous resistance that has become support, and they buy as the trend continues. All right. Now, if you're a bit confused right now, don't worry. I'm going to cover all this in detail under technical analysis. I'm just giving you a little taste about the different styles of when to enter a trade. Right. So in this case, it's a trend following style. In this case, for example, this is a counter trend trading style, which we will learn as well. So in counter trend trading, you are buying against the trend. Okay, so in this case, you can see that the stock is on a downtrend, right? It's going down, up, down, right? It's on a downtrend, and we buy right when it's at the bottom of the downtrend. When it's oversold, we buy for this quick bounce up, right? And we quickly exit over here before the trend continues down. That's called counter trend trading, okay? Or in this case, the trend's going up. It's going up, retraces, and goes up all the way to a high when it's overbought. Okay, when it's really expensive, you see a certain candlestick pattern, you say, okay, it's going to retrace, you do a short sell. Okay, you sell on the uptrend, it comes down, you're making money, and you quickly buy it back to cover your short position before the trend continues. Right? So see, very different methods, very different strategies. Okay, so that makes up a winning system. So in this course, I'm going to show you a whole series of winning systems. Some of them are trend following, some of them are counter trend, okay? But all the systems you're going to learn in this course have a very high positive statistical expectancy. In other words, they will always generate profits when you trade it consistently. Now, the other thing that makes up a trader's success is 30% of the equation. And it's the trader's ability to manage their money effectively or to manage their risk effectively. And we call that position sizing. So what do all great traders have in common? they know how to size the position of their trades. So they know mathematically exactly how many shares to buy, how many shares to sell short. Why? Because no matter how good your system is, you will not get winning trades all the time. And that is why you must have the discipline to risk only a small percentage of your capital. So that in the event that when you get it wrong, and you will at times, in the event that you get a drawdown or series of losses, it will not wipe you out. You're able to have enough to stay in the game to continue to eventually make that money back and a whole lot more. Right? So you find that most amateurs fail in trading. Why? They blow up their accounts. They lose all their money. Why? Because they don't have a system for managing their money. Right? They don't calculate the number of shares to buy based on a specific formula. When they feel confident, they buy more. They don't feel confident, they buy less, right? And by doing that, you will not get consistent results. So position sizing really is a very important part of the system that you'll be learning to ensure that when you win more than when you lose, okay? So that makes up 40% of your success. The whopping 60%, the main contribution of a trader's success is what we call having the right psychology, okay, or the right emotional discipline. So what is having the right psychology means? It means you must have the mindset to consistently execute the trading system and position sizing system consistently without deviation. All right, and to do that, you must have emotional discipline. Right, you must have that mindset of discipline, motivation, focus on determination. Right. Now, why? Because if you don't have the ability to manage yourself, right, and you have emotions like fear, you may not take a trade when it comes because of a previous loss. Or you may have this thing called greed, where you overstay a trade and a profit turns to a loss, or you shift your target price too much, okay? Or you are impatient and you jump in when there's no clear signal to buy and sell. So all these things are what cause traders to not make money consistently. All right. So in this professional trading course, you're going to learn how to put in these three qualities within you, right? You're going to learn, once again, great winning systems with high statistical edges. You're going to learn how to manage your money with position sizing. And most importantly, you're going to learn how to develop the winning psychology of a professional trader. So let's get started.
All right, so yeah, I hope you like that, man. Adam Koo is the man. Shout out to Adam Koo. He's got a YouTube channel as well. That's his whole course. That course that I just showed you guys, that course is like $4,000. Oh, well, $499. I think it's $499 or $4,000. One of those two. But I just showed you the first instance of that, and man, it's such a great course. So we about to show you guys that in here in just a minute. Just bear with me here. Add, and then the final one here. Trading the range, what? Placing orders, scanning, Thinkorswim scripts. Yes, deep stuff, man. Deep stuff, guys. Brief moment here. All right.
All right, so now let me take you through the professional stock trading course curriculum that we'll be going through in the next couple of weeks and even months to come. So the professional stock trading course is divided into two levels, level 1 and level 2. Level 1 is really about the fundamentals, the basics of professional trading. You'll also be learning one of my most powerful swing trading techniques known as the bounce strategy. In level 2, we focus on advanced swing trading techniques, including counter trend trading, as well as intraday scalping techniques, where you make profits within a matter of minutes a day. So let's begin with level 1. So in level 1, there'll be altogether 8 lessons. So each lesson is divided into parts, and each part could last anywhere from 20 minutes to 40 minutes. So it could be about an hour or 2 hours, or even 3 hours per lesson. So the lesson begins with lesson 1, which is the introduction to professional trading, what we're going through right now, as well as
Yeah, I fucks with Adam
what's the
Koo
entire
heavy,
course
man.
curriculum all
I
about,
got
how
all
to
his
prepare
courses.
for it.
I got his stock
Lesson
course.
2,
I got
we'll be
his.
going into really
I
the
got all his
secret
courses.
of
All of them.
achieving consistent trading profits. And this is all about understanding probability theory, all about understanding statistical expectancy. How do you basically trade like a casino and develop a trading system or identify a trading system with a positive expectancy in the markets? And I'll be showing you a range of trading systems that you know that if you continually trade these systems, you will always end up with profits at the end of the week or the month. In lesson 3, you'll be learning about how to get an edge in the markets. And the way we get an edge is through technical analysis. So you'll be learning about how do you master technical analysis, level 1. You'll be learning about what we call Dow theory and really the principles underlying what drives technical analysis. You'll be learning about a very important topic, how do you identify trends? The trend is your friend. So how do you identify the short term, the medium term, and the long term trends in the market? How do you identify support and resistance levels accurately to understand imbalance between demand and supply and demand zones in the market to know where price is likely to reverse or continue its direction? You also learn about how to master moving averages. How do you use the different kinds of moving averages for different time frames? Using moving averages to determine the trend, overbought and oversold conditions, and how do you use it in order to identify new trend setups? Lesson 4, we're going to part 2 of technical analysis. We're learning all about the different indicators you can use to fine-tune your entry. We'll be learning about trend following indicators and oscillators that are used to identify overbought, oversold conditions, strong trend momentums. One of the most important parts of that lesson would be learning price action, which is learning how to read candlestick patterns
Just chilling, man.
to tell us the sentiment on that day. Is
Again, for guys who are just coming in here, man, shout out to all the old people.
And even more important, how do you
Been here for
anticipate
years
trend
watching this right
changes
now.
with
I'm really
divergence?
just having the
Not only
stream
will I teach you how to
run all
identify
day.
a change in trend,
YouTube, I think,
but how
thinks
do
my
you
channel's
anticipate
dead,
a
man.
change
So I'm
in
going to be
trend
running this
even
stream
before it
for like
happens? By
hours
looking
on
for
end
divergence patterns
while I get
between
some work
price
done.
trends and indicator trends. Next, we're learning about how do you analyze the market and the
So I got this
sector.
Adam Koo course.
Okay, 75% of a stock's
I'll be
movement
running.
comes from the sector in which it's in and the overall market. How do you know which sectors are in momentum, which sectors are in rotation? Because when you identify a sector that's in rotation, money is flowing into that sector, a rising tide lifts all boats. High chance that stock's going to move up. You can buy the right stock with the great setup in the wrong sector, you're going to lose money. So how do you identify the right sectors? Lesson 5 is all about position sizing. How do you calculate how many shares to buy, how many shares to sell, right? How do you manage your money, manage your risk? And you'll be learning about how to automate your trading business with order management techniques, all right? So we place our orders in before the market opens for swing trading techniques. When the market opens, you don't have to be there, right? The broker will execute your orders based on your intended entry and exit signal. So your entire business is automated. You just have to spend less than 2 hours or even less than an hour a day to really get a full-time income from trading. And next, you'll be learning about how to leverage using margin and CFDs. So you can take on, for example, a $20,000 position with only $2,000. So that frees up your cash, it magnifies your returns even further. In lesson 6, we put it all together, the fundamentals together, technical analysis, position sizing, support resistance, where you're going to learn my most powerful swing trading system known as the bounce system.
Michael, this is not a video. This is a trading course, bro. This is not a video.
Trend following system. So you're going to learn about
I can give you a link to Adam Ku's trading course.
Patterns.
But
How
this
do
is
you know when
not,
a
this is
price
not
is
a
going to
video you
bounce
can
off a
download
trend line
off the
or
internet.
moving average? By identifying those price action signals. You're learning specific entry and exit rules for the bounce strategy, both on a long setup and a short setup. How do you identify uptrend wave patterns and uptrend down wave patterns? How do you manage your trade once it's in? How do you know when to sell? How do you add more shares? And very importantly, you'll be learning how to screen for specific trade setups every day using
This is
a
the
stock
Iron
screener
Striker course
with
right there.
written scripts that I'll be giving to you.
But
And
it's
how
a
do you
trading
identify
course.
high momentum
$3,000.
Again, there are many people who look at chart
You're
patterns,
watching it right now for free.
indicators, candlesticks. They buy according to the patterns, and the stock doesn't
Over
move up.
41 hours
Why?
long.
It goes down instead. Well, like I said, one reason is because you bought a
This is the
good
best
stock in a
of the
wrong
best
sector,
of Adam
in the
Ku
wrong
right
market.
here.
So you have to look at a sector and market
I
analysis.
got part
But at
1
the
and
same
part 2. This
time,
is part 2.
you can have the best chart patterns.
Part 1
but
is a
if
little
it's
bit
on a
too
low
foundational for
momentum
most of you
stock,
guys.
the stock's not going
Way
to move.
too basic.
Your stock has got to have high momentum. So how do you identify momentum? You'll be learning all about that by looking at relative strength.
I think
Looking
this is
at
part
the share flow,
part 2. Hold
the
on.
share volume. So all these things are really important in identifying what to buy, when to buy, and when to
Is this
sell.
part 1 or part 2? I mean, I got both of them.
So what's really cool is you're getting all these scripts that I've written, right? So for every specific strategy you learn, you will get these scripts that will help you to identify and to screen these specific trade setups every day. Because there are thousands of stocks in the market, 7,000 stocks. So on any single day, which
All
are the
his
stocks that
videos
are
are out
following
there if you
those
guys look.
specific
I
patterns?
can't give you the
price action
direct
patterns,
link to
the
them, but
indicator patterns, that
they're
you
not
know the
very hard
price
to
of the
find,
stock's
though.
going to move up or move down. So these screening scripts are going to help you to screen these
These guys
setups
made
in
millions
literally
upon
minutes a
millions
day.
upon millions of dollars.
So in the program, you've
Selling
given all these
courses.
scripts. You can download it and you can upload it into your screener, and it will screen for you within a matter of minutes. Next, trading systems performance. I can assure you that every trading system you will learn in this program has been proven to have a high statistical positive expectancy in the markets. And what that means is this: not every trade will be a winner. But I can assure you that if you keep trading the system, you have more winners than losers. And an average winner is going to be more than the average loser. And that gives you a statistical edge in the market, a positive expectancy. So over a large sample of trades, you will always be profitable. So this is an example of the trading records that I have of my systems. And over here, you can see two systems, the impulse pullback system, and this is the strategy, and the bounce system. So in level 1 of the course, you'll be learning the bounce system.
Bitcoin doing good,
And in level
Litecoin
2,
doing a little
you'll be
bit
learning
better.
the impulse pullback system and a whole lot
Unrealized
of other
profit
counter-trend trading
41.71. I was
systems,
struggling a
plus
little
the
bit.
intraday trading system.
I was at 2,600
So
not too
this
long
was
ago.
one of my latest trade logs from April of
I'm
2017.
up almost $2,000.
And you can see typically in a month, you have got about 20 trades or more. Okay, these are the tickers. These are the positions. Some of them are long and some are short. And this is the specific strategy, all right? Impulse pullback, bounce, so on and so forth. And that's the result. So 2.5
14 days into the month, looking for $7,000
So
a
what
month.
is an R? An R is your
7
risk
to
per trade.
15,000 is my goal.
So for
every
example,
month.
if you are risking
Non-directional trading strategy.
1% of your capital on a trade, 1 R is 1%. So when you have a losing trade, you lose minus 1 R, which means you lose 1% of your capital. That's what happens when you have a losing trade like so, right? When you have a winning trade, you get, for example, 2.5 R of a win. So that means you get a return of 2.5% return on your capital. All right, so we measure our performance in terms of R. Now, traders who are more experienced and more confident, they may risk 2% of their capital on each trade. So if you risk 2% of your capital and you have a loss, that's right, you lose 2%. But when you have a win, you win 2.5R, which means you win 5% return on your capital. See how this works, right? So you can see that over a series of trades, you're going to have winning trades, break-even trades, losing trades. What's important is if you keep trading the system over a large number of trades, you have a lot more winners than losers. So for example, on this particular month, you can see for the bounce strategy, they were altogether 21 or rather 16 trades that were done, and there was a total of 21 hour of profits. Okay, so the expected profit for this month was 1.3R. So what does this mean? So if you take 21R, 21 divided by 16, that's 1.31, which means on average, when you have a win, you win 2.5R. When you lose 1R. But on average, each trade you place will make you 1.31R. Right? For example, in this month, you can see there were 9 winning trades, 4 losing trades, 69%
What's up, Frankie
win rate.
Bat?
So let me give you an example. If you have got, if for example, you take 20 trades a month, and you have a win rate
For those of you
of,
guys coming
now,
in,
let's
man,
say
YouTube
69%
thinks my
win rate
channel
for
is
this month,
dead,
but
so
let's
I'm
be
just
really
running a
conservative. Let's just take a win
24-hour
rate of
live
50%,
stream.
okay? So with a 50% win rate, you're winning 10
kick YouTube
trades,
into gear a little bit.
10 winners, and you are losing 10 trades, 10 losers, right? So each time when you lose,
So if you guys would do me a favor, if you're going to go to bed,
say 1% or 1
something
hour.
like that,
So
just leave
your loss is
your
10%
channel,
of your
leave
capital
YouTube
on
on
your
with me
losing
running.
trades.
I
Okay?
appreciate it.
Now when you win, you're winning at least 2R.
Because I'm trying to get back at the live
Or
streaming here.
2.5 in this case, but let's just take 2 for easy calculation, right? So each time you win, you're winning 2% return of your capital. So your total return from your wins is 20%. So 20% from the wins minus 10% from the loss, your net profit after wins and losses is 10% return a month. Okay? So if you can get just 10% return a month in a year times 12 is over 120% return
Facts.
a year. You're doubling your capital every single year.
That's
in fact,
all you're looking
it is
for is
more than doubling
10%.
because of the compounding effect. And again, I'm being really conservative here because you should in essence get more than a 50% win rate, and you should sometimes aim for more than 1:2 risk to return ratio. So that's how powerful these trading systems are. And again, in level 1, you're learning the bounce system, the first trading system that I'll be teaching you, right? Now, lesson 7 is one of the most important lessons. It's on psychology of winning traders, okay? And I can tell you that psychology makes up more than 60% of your success. You know, there could be 10 traders and you can teach them all the same trading systems, give them the same charting software, using the same broker, but they produce very different results. Why? Because they have different psychology. And psychology affects your emotions, your discipline, your self-motivation, your ability to execute trades without discrepancy, execute trades without deviation. And only when you can execute trades with a focused, disciplined frame of mind will you get the highest return from the trading system. So you'll be learning in this lesson how winning traders think differently from losing traders. How to manage and overcome negative emotions that will happen in trading. Things like fear, greed, uncertainty, frustration, self-doubt. How do you overcome all those things? How do you manage temporary drawdowns? Remember that no matter how good a trader you are, you can't have wins all the time. It's impossible.
That's
A
true.
win is like a sale in a business. A loss is like a cost of goods sold. So you need sales minus cost gives you net profit. So as you trade, and for example, you start with
only on the desktop though. I
$1,000
mean, I don't
and you grew
expect somebody to run their
$1,000 to
phone
say $1,000 to
all night.
say
I mean,
$20,000.
if you
Guess
got a
what?
laptop or a
Your
desktop, man,
capital will not
I
increase in a straight
appreciate
line.
y'all,
It's not
man.
linear. You know, it will go through ups and downs. All right, you'll be
Just trying
going
to
through
boost
ups and
my
downs this way, like that. So
my
there'll be
channel up.
winning trades,
I've been
losing
putting
trades,
so
winning
much
trades,
work into
losing
this
trades.
channel. It's
So
just
what we call
when I
these
post
are
something, I feel like the
drawdowns, right? When your
algorithm
capital
doesn't
goes down
think
in
like
losing
I'm
trades. So how do
alive.
you manage those drawdowns? so that it doesn't affect your psychology. And
Yeah,
how
I
do
know
you
I was gone
program
for a minute,
yourself
but
with
damn.
NLP, neuro-linguistic programming, to become a winning trader? Okay. Lesson 8, how do you develop a trading plan? A business always needs a business plan. If you view trading as a business, you need a trading plan. So a trading plan tells you exactly when to buy and when to sell. You've got to follow your plan to the T. You learn how to develop a daily trading routine that takes just less than 1 to 2 hours a day. How do you manage a trading journal to track your trades, your progress, so you improve each and every day? And how do you use the right stockbroker to give you the best commissions and the best service? And so level 1 will give you everything you need to start making money right away once you begin to execute and practice these strategies. And with that, let's move on to level 2 of the course. Once you have completed the professional stock trading course level 1, you can proceed on to level 2. And level
All
2
right,
is
man.
where I
I
will
don't want you.
reveal
Okay,
my
he's gonna
most
go over.
powerful
I don't
advanced
remember it being
strategies
that
to
long
take
with
money
the
from the
intro. God
markets
damn,
every
Adam.
single day, every single week, every single month. So in level 2, there are altogether 5 lessons. And within these 5
Oh
lessons, you're going
man,
to be learning
about to go over the
3 more
whole.
swing trading strategies and an intraday
Let me
scalping
see.
strategy, as well as advanced technical analysis mastering tools. So in lesson 1, you're going to learn stock swing trading strategy 2, known as the gun system. If you place
Okay, all right, yeah, we gonna get
for the
started now.
casino, they will have got a first known as the gun system. Gun as the gun. If you place one bet, you bet one game, your chance of winning is 50-50. We got that, right? We got that. Okay. But if you play 100 games, what is your chance of making money at the end of 100 games? Is it still 50-50? Is it more than 50-50? Or is it less than 50-50? Think about it for a while. Most people, when I ask them this question, they say, hey, it's maybe more than 50-50. And the answer is wrong. If you play this game 100 times, your chance of making money is 99.999%. In other words, it's almost 100% sure guarantee you will make money. Why? Well, it's because of this formula. Let's take a look at this formula. In statistics, whenever you're playing a game of chance, you have to calculate your expected profit from any kind of game. And the formula goes this way. Your expected profit per toss is the percentage win of the game multiplied by the average win, deducting the percentage loss, multiplying by the average loss. So in this game, what is your chance of winning? 50-50, right? So your percentage win is 50%. What's your average win? $2. So put in $2. What is your percentage loss? 50% as well. What is your average loss? $1. Okay, great. So you do the math. 50% times $2 is $1. 50% times $1 is 50 cents. So $1 minus 50 cents is 50 cents. Okay, so what does this mean? This means that when you play this coin toss game, on any toss, it could be a win of $2, it could be a loss of $1. You never know when the win will come or the loss will come. But if you play this game over a large sample of 100 trades, on average, you will make 50 cents per toss. Now, is this a positive expected profit? Yes, it is. As long as the expected profit is positive, you are sure that if you keep on playing, you will always make money at the end of the day. Okay? So in other words, if you play 100 games, right, or 100 tosses, your expected profit is 100 times 50 cents. So it's $50. Okay? That's a 50% return on capital. Now, I suggest that you do this to convince yourself, right? Grab a coin. I'm not kidding, I'm serious, right? Grab a coin, and I'll need to toss the coin 100 times. Okay? Now, each time you get a heads, record down plus $2. When you get a tails, record down minus $1. Do that 100 times and add up the total. Now, I can guarantee you that at the end of the day, you will get a positive result. Now, will you definitely get $50? Of course not, there's no guarantee. Why? Because if you toss it 100 times, you may not get 50 hits or 50 tails. It's not that perfect, right? You may get 40 hits and 60 tails, or 60 tails and 40 hits, right? So you may not get exactly $50, but you will get somewhere around $50. You may get $60, $70, $40, $30, but you will definitely make money. Again, do this exercise, toss the coin, record down the result, and see for yourself that you will always make money at the end of 100 tosses. Another way of looking at it would be to look at it visually. For example, out of 100 tosses, you will get 50 hits, and each hit is a win, and you get 50 tails, which is a loss. All right. So each time you lose $1. So 50 times $1, that is minus $50. Right? And each time when you win $2. So 50 multiplied by $2, you get $100. So 100 minus 50 is $50. You see how that logic works? Great. So again, like I mentioned, if you toss 100 coins or 100 tosses, you don't always get 50 hits and 50 tails. Could you get, again, 60 tails and 40 hits? Is that possible? Sure, of course, right? So what if you got 60 tails or 60 losses and 40 hits? 40 wins. Let's take a look, right? So 40 and 60, right? So 60 losses, let me just change the color a bit, okay? So each time you lose $1. So $1 multiplied by 60 is minus $60. And each time you win $2. So $2 times 40 is $80. And 80 minus 60 is $20. So that's the beauty of this system, right? Where even if you get a lot more losses than wins, you are still ending up with a profit result. What's the secret? The secret is that your average win, in this case $2, is bigger than your average loss.
Correct.
And that is the most important secret in having a profitable trading business. So how do you apply this to the world of trading? How do we ensure our average win is more than our average loss? Well, let's take a look. So in trading, the first thing that you want to do is you only take trades where you have got a high probability of success.
I'll be trying to tell them that. Man.
Now, every day,
They don't want to
the
listen to me, Adam.
market can either go up or go down. Right? The price can either go up or go down. It's 50-50. So if you were to enter the market randomly and buying or selling randomly, your chance of being right is 50-50. Okay? But if you use technical analysis where you buy with the trend, for example, right? Or you buy when it's oversold and it's going to reverse back to the moving average, you are getting a slightly better than 50-50 chance. So that is our edge over the market. The second thing we do is to fix the amount that we can lose per trade. See, in the coin toss game, when you lose $1, right? So how do we ensure that in the world of trading, we only lose a fixed small percentage amount? By setting a stop loss, okay? And we must ensure that the stop loss is placed in an area where we only lose 1% of our capital. You're going to learn exactly how to do this on the lesson on position sizing. Next, you only take a trade when there's a risk to return ratio of 1:2 or more. In other words, you only take a trade when there's a chance of winning double what you're risking. So you're risking $1 to make 2 or $10 to make $20. And if you do this, you have the same result as the coin toss game or as the casino. And we have a positive expectancy. Alright, so to summarize, this is the business plan of a profitable trading business. Whenever we enter a trade, we call that the entry price. And we have a fixed stop loss price where we exit with a loss. And with a fixed profit target where we exit with a profit. All this has to be preset before you place a trade. You will learn exactly how to do this under placing orders and position sizing, as well as the specific strategies. So again, what is your chance of winning in a certain trade? It's not 100%. Again, you can use the most magical indicators. You can't get it right all the time, but you can get it right at least 50 to 60% of the time, or even higher. I'm being really conservative here. All right, some of the great traders are able to get it right 70% of the time. But let's just conservatively look at a 50 to 60% win rate. And 40 to 50% of the time, it's going to be a losing trade. Now, but the big difference is that when you have a loss, you're only losing 1% of your capital, for example. And when you are winning, you're winning at least 2% of your capital or more. So when you do this, let's take a look at the results. For example, on a given month, if you take 20 trades and you have a 60% win rate, you're risking 1% to make 2%. So this translates to 12 wins and 8 losses for that month. Now, each time you lose 1%. So that's minus 8%. And each time you win 2%. That's a 24% win. So what's your net profit for that month? 16%. That's pretty good, given a 60% win rate. Okay. Now, what if you're right only half the time, but you maintain your risk to return ratio of 1:2? You will get 10 losses and 10 wins. And again, each loss translates to minus 1%, that's minus 10%. Each win is 2%, so it's 20%. So your net profit is 10% a month. Again, could you get a higher return? Of course you could. One way to get a higher return is to increase your win rate. Now, this comes with experience. This comes with...
Just to pause it here real quick, like I love him on this strategy, but I pulled back a little bit just because, you know, your technical analysis has to be spot on, you know, to get that good initially. It happens though. I mean, you can do it.
Practice. Okay, but at the same time, you can also increase your win rate by eventually, when you get more confident, increasing your risk per trade. Okay, so if you're risking, sorry, it should be 1%. All right, my mistake. You're risking 1% to 2%. Right? So eventually, if you're more confident, you can risk 2% a trade. So in this case, when you win 4%. When you lose 2%. All right? Now, what if you have a month where you're only right 40% of the time? So out of 10 trades, you're losing 6, you're winning 4. Now, some people think that's a bad month, right? Well, if you think about it, you're winning 8 and losing 12. And again, if you maintain a risk to return ratio of 1:2, and you're risking 1%, that's minus 1 times 12 is minus 12%. 8 times 2% is 16%. Your net profit is still 4% return a month. And times 12, that's more than 48% return a year. Compounded is even more than that, and it's better than what people get in their fixed deposits, right? So you can see in trading, you can generate much higher returns than in any other investment. But you've got to have the consistent discipline to keep risking the same amount and taking profit at double your risk. And that's the key to consistent success. So again, let's go back to that formula, which you've learned. So again, one of the most important formulas in trading, and in fact, any game of randomness, if you will, is this profit formula. Okay, please remember this formula and use it. Your expected profit per trade is equal to your win rate
I'm gonna order me a pizza,
multiplied by your average win minus your losing rate multiplied by your average loss. So again, in this case, imagine starting with a capital of $10,000, risking 1% of that in each trade. That's risking $100. And when you have a winning trade, you win $200 or double your risk. So what's your expected profit in this scenario?
I can't even brighten
So
myself
assuming
up.
you've got a win rate of 55%
It's dark in here.
and a losing rate of 45%. So 55% of the time you'll make $200,
I'll just let it
and
die.
45% of the time you will lose $100. So if you do the math, that's $65 per trade. So in the long run, every trade that you place, you're making $65. Now, of course, this is a simplified amount. In reality, it's going to be increasing, because as you trade, your
And Adam,
capital
most
will
traders
grow
are
from
not starting with
10,000 to
10 grand. I'll
50
tell you that
when
much.
you
I know
compound.
I didn't.
This is assuming that the capital remains the same, right? So in reality, it should be a lot higher than that. So what that means is that if you do an average of 10 trades a month, that's $65 times 10 is $650 per month. And that's a 6.5% return on your capital per month. All right. And you can see how money compounds at 6.5%. 10,000 will compound to 21,000 in 12 months. And again, I'm being really conservative here because when you get more experience, you get more than a 55% win rate.
Way
when you
more
get more
money than that,
experience,
man.
you can risk more than
Give
1%.
me 10 grand right now, I'm
you can
making
risk
1,000 a
2% to a
month.
maximum of 3%
if I had
risk
to
per
go
trade.
back
And when you do that, you can see your capital will
10 grand, you can
compound
make
a
1,000 a
lot
month on
faster.
10 grand, easy.
So this concludes this
I'll
lesson.
go
So
to
I'm going to
Nvidia
leave you
right
with
now
this
and sell
important quote on the trader's
fucking
mindset.
750
Here's
against
the winning
700.
trader's
I mean,
mindset. The most profitable
you know
realization
it's
to a
going to be above
trader,
700
and
every
some
month.
people never realize this their entire life. Okay, they go around in circles. So it's good that you get started realizing this right now. So the profitable realization to a trader is when they can begin to view each occurrence in their trading as a random series of events. Remember, every time you place a trade, it's a random outcome. It's kind of like tossing a coin.
It really
right?
is.
It's a random outcome. It's only the outcome over a larger statistical set, which means over 50 trades, 100 trades, that result in consistent and predictable profits. At the micro level, which means at the trade by trade level, at the toss by toss level, the outcome of trading is random and unpredictable. Okay? Like, here's an example. If you toss a coin 10 times, will you get 5 hits and 5 tails? No. You could get 9 tails and 1 hit, or 1 hit, or 9 tails and 1 hit, or 9 hits and 1 tail. So although the coin is a 50-50 chance, but in a small sample, it's random. In other words, there's a bit of luck involved in the short term. The same thing with trading. You can trade a strategy with a 60 to 70% win rate, but in any 10 trades, you could get 9 losses out of 10, or 9 wins out of 10. Okay, so don't be concerned about the short-term results of trading, because at the macro level, which means over a large number of trades, if you trade consistently, the outcome is predictable when you have a statistical edge. It's the same thing with the casino. Bring the casino back for one last metaphor, right? In any given day, the casino could lose money. On any single number of hands they play, the casino could lose money if the winner has a lot of luck on that day. Okay, but over a month, for example, over a year, the casino knows, hey, no worries, mate. I will always make money at the end of the day. There's a very famous story about a casino in Macau run by Stanley Ho, who is one of the Hong Kong casino tycoons, right? And one day there was a player that came to his casino, and the player was on a winning streak, and this player was really wealthy as well. And the player made something like about 50 million Hong Kong dollars from the casino. And so the casino lost a lot of money. And people asked the owner, Mr. Stanley Ho, they said, hey, this guy just made 50 million from your casino. Are you worried about him? And Stanley said this, I'm not worried about him. I'm just worried that he won't come back. Because he knows that if he comes back, I will always make back his money. So have that same mindset in trading. That if you go through at times a losing streak, it's fine. But as long as you stay in the game and you keep playing the game with the same consistency, just like Stanley Ho, you will always make money at the end of the day. And I can say this from personal experience. So with that, we conclude lesson 2. I'll see you in the next lesson on technical analysis.
Good video, good video.
Hi guys, welcome to lesson 3 on technical analysis. In the previous lesson, you learned about the importance of having an edge in the markets. Just like the casinos have an edge over the players, and that's how their business model generates profits consistently.
Always have an edge.
So in our trading business, how do we get this edge in the market? Well, we get it through technical analysis. And technical analysis helps us to anticipate the probability of a price movement. Now, every single day, the market price can either go up or go down. So if you were to toss a coin every day, and if you get a heads, you go long, and tails, you go short, in the long run, you're going to be right half the time, right? Because it's random. So we want to be right more than half the time. Just like the casino is right 52% more than the player, for example, 5% edge in the market. So we do that by studying technical analysis. And technical analysis is really about the study of collective emotional patterns that are captured on stock price charts. See, you got to understand that in the short term, and when I say short term in this context, I'm saying less than 3 years, right? In the short term, the stock market is not always rational. In fact, the stock market is irrational very often. In the short term, the stock market is emotional. Prices go up and down every single day, but it doesn't mean that the company has changed, right? The company is making the same profits, having the same directors, having the same service and product. So what makes the price go up and down every single day? 5% up, 5% down, so on and so forth. It is not logic, it is emotions. So in technical analysis, we are kind of like being a psychologist. As a psychologist, you're studying your patient, right? And how do you anticipate your patient's emotions and how they're likely to behave? Well, you look at their facial expression, you look at their body language, right? So when you look at a stock chart, it's kind of like looking at the body language, the facial expression of that stock. All right. So from there, we can tell what are the emotions driving this stock. Is the market more and more bullish on this stock, which means more optimistic, or is the market very pessimistic on this stock, bearish? Okay. And again, if it's bullish, the probability is that the price will go up more likely than going down. And when the market is bearish, the price will go down more likely than going up. Again, it's not a guarantee. Just because I can study my client and say, oh, he looks angry, I think he's going to lash out. It doesn't mean he's going to lash out. It's just a probability. Now, all we need to do is be right more than random chance. We don't have to be right all the time. In fact, it's impossible to predict with certainty. All we need is a statistical edge in the markets. So take a look at this example. This is Domino's Pizza, for example. And it was selling at $14 right over here. Okay? And what happened? Within a span of 4 months or 3 months, it went from $14 to $7. How did it happen? Right? Now, in 3 months, did the company change? No, it sold the same number of pizzas. It made the same profits, right? Same customers. But how did the value of the company drop by 50%? Now, let me tell you something crazy, right? It has got nothing to do with the company. If you remember this date, 2008, September, October, November, that was the great financial crisis, right? When Lehman Brothers collapsed, AIG almost went bankrupt. And people panicked. They say, oh my God, it's the end of the stock market, you'll never recover. And because of the panic and the fear, people sold. So when you got more sellers and no one dares to buy, what happens? The price collapses from $14 to $7. Now you may say, hey, that's a great opportunity, right? That's cheap because the company is selling at half price. But what would have happened if you bought at $7? 1 month later, it went to $2.80. Right? So you can see that again in the short term, the stock market is irrational. It is illogical. It's purely emotional. And so many people, not knowing this, when they come to the stock market, they don't get it. They say, I don't understand. I bought this company. It's a good company. Why did the price go down by 50%? Or why is this a lousy company is losing money, the price went up by 80%?
Facts.
Because it's got nothing to do with logic. It's got to do with emotions. And once you understand that, you can begin to make money more consistently in the short term. And again, we study emotions by studying price patterns, collective psychology. So imagine, wouldn't it be great if you could kind of like read the emotions of the market and learn to be able to, for example, sell at $12 over here, right? And when it collapsed, bought it back at $3, you would have made a lot of money, right? Or you could have bought it back at $4 or $3 and held it to $14 and avoided this crash. Could we do that? Absolutely. And I'm going to teach you how to read price patterns on charts, how to read trends, in order to time your entry with the greatest precision. So let's begin this lesson. Now, before we go into the specific strategies, let's understand the fundamental principles behind technical analysis. And the first principle, the most important principle to understand, is that market prices, stock prices, discount all known information. So the market discounts everything. All information, past, current, and even future information is reflected in current prices. That is why in the short term, as a short-term trader, reading economic news, fundamental news, like balance sheets, income statements, GDP, unemployment is a complete waste of time. Why? Because market price is the leading indicator to all this fundamental data. And by the time you read this fundamental data, it's too late. The price has already moved in that intended direction, and you're always late to the party. Let me give you an example. Prior to the 2016 US election between Donald Trump and Hillary Clinton, Caterpillar's stock price was going down. As you know, Caterpillar is in construction, right? So the price was going down. Now, what happened was the moment Trump won the election, Donald Trump won the election, and the news was announced, within a split second, Caterpillar's share price jumped up by 10% immediately. Why? Because Donald Trump had promised that if he won the election, he's gonna, build a wall. He's gonna go into a lot of infrastructure spending. Government gonna spend on building bridges and infrastructure, right? So the moment Trump won, the market anticipated that Caterpillar, being a construction company, would get all these construction orders from the infrastructure building, and as a result, the share price went up 10% in anticipation that it will happen. So this information that is going to happen in the future has been priced into the stock immediately today. Now, I got a question for you. Has the government actually spent on infrastructure? No, not yet. Has Caterpillar actually gotten those orders? Not yet. But the share price already anticipates that it will get the orders. All right? Now, by the time the government really spends on infrastructure, by the time that Caterpillar really does the work and shows the profits increasing in its books, by that time the share price would have already risen. And if you were to buy the share price based on looking at this great fundamental data, you are always the last one to the party. And that's why most people who buy based on fundamental data, income statements, balance sheets, and all that, find that the moment they buy, the price drops. Okay? Because that good news, if you will, has been priced into the stock even before it happened. So relying on fundamental news always causes you to react too late. Let me give you another example from a macro perspective. Okay? This is how the stock market cycle, shown with the red line, corresponds to the economic cycle, shown by the green line. You can see the stock market cycle, which is determined by stock prices, does not move together with the economic cycle, which is measured using GDP. In fact, the stock market leads the economy by 6 to 9 months. So the stock market is a leading indicator of the economy. So here's an example. Back in October 2007, the stock market, which is again the red line, was at a high, was at an all-time high. The Dow Jones was at 14,000 points, all right, at this point of time. And so that was the, as you can see, market top. Okay. Now, the moment the financial crisis hit, what happened? The stock market reversed into a downtrend. So prices started coming down. So over here, you can see the stock price coming down, right? Now, here's the interesting thing. Notice that as the stock price is coming down, the economic GDP cycle is still going up, right? Why? Because the stock market anticipates that the economy will contract even before it happens. The stock market leads the economy by 6 to 9 months. So people who read the economic data, they say, hey, you know what, the economy is doing well, factory orders are rising, exports are growing, and they read this data that, hey, economy is growing, what do? They buy more stock. As they buy more stock, they find that by buying the stock, it's going down. Say, hey, how come I'm losing money when the economy is doing well. All right. Now, by the time the economy over here, by the time the economy starts to contract, GDP starts to fall, what happens? By that time, you can see that the stock price, the red line, has dropped by 70% to the bottom. So people who rely on reading the economic data and saying that, hey, the economy is doing badly, I better sell the stock. By the time they sell, what's happening? They're selling close to the bottom and they've lost 70% of their money most of the time. All right. Conversely, you can see over here, this was the market bottom. And this was February 2009. So the market bottomed here and it started reversing trend. It started going on an uptrend over here, right? So notice as the stock market is going up, what's happening to the economy? That's right, the economy is still going down. The economy is in full recession, right? So many people at that point of time, they will not dare to invest in the stock market because they say, hey, how can I invest when it's a recession? Times are bad, right? I better not buy. And they don't understand that the stock market is really moving up because the market, again, leads the economy by 6 to 9 months.
If you go to
market
FXI,
anticipates that the economy will recover even before it recovers. Okay? So what do most people do? Most people, they will wait for the economy to recover. Can you see this early recovery, right? They will wait for it to recover. And the moment they see that, hey, the economy is recovering, and they say, I better invest in the stock market. Now, what happens by the time? By the time they invest, they would be buying near the top, right? So that is why in most people lose money in the stock market because they buy at the top over here and they sell at the bottom over here, okay? Because they're looking at the wrong thing. They're looking at the economic data. They're looking at the fundamentals, which always cause them to act too late. So remember, your entry and exit decisions must always be based on the price action, where the price is moving. And we studied that using technical analysis. The second principle of technical analysis is about probability and not prediction. Many people, when they learn technical analysis, they use it to attempt to predict the direction of the stock price. They say, okay, based on this indicator, based on this signal, the price is going to go up, the price is going to go down. And that's completely the wrong way to use this technique. Because remember that no one can predict the future.
Not prediction.
The future is random. Okay, the future price is driven by demand and supply, which is driven by emotions. Okay, now no one can predict people's emotions the next day. But what we can do is we can find not predicting with certainty, but it is used to anticipate the probability of future price movements. So there's a big difference between prediction and probability. Prediction means you're saying, hey, it is sure to go up. And if it doesn't go up, I'm wrong, right? And that's the wrong way of looking at it. Probability means it is more likely to go up than it is to come down. Now, it doesn't mean that it's going to go up now. It means that over a large number of trades, over time, you'll be right more often than you're wrong. But on this particular scenario, you may not be right. Just like the casino model, right? The casino knows that over many plays, they're going to make money from the player. But for any single bet, they do not know whether it's going to be a winning bet or losing bet. And when you have this philosophy behind the strategy, you will not be disappointed when you have a losing trade. Instead, you see it as part of a larger statistical process of having an edge and being right at the end of the day. Okay? Remember, having just a slight edge over the market will make you immensely profitable. So
Correct.
technical analysis, which is this entire lesson, lesson 3 and lesson 4, we're going to be learning the different parts of technical analysis. The first thing would be identifying trends, one of the most important things. We'll be learning about support and resistance levels, which are supply and demand zones that help us to anticipate where price is likely to reverse. Next, we'll be learning about moving averages, technical indicators, candlesticks, price action, and as well as other indicators to add on to the mix. So let's get started with identifying trends. One of the first things you have to do when you look at a stock chart is to determine the current price trend. So if you look at stock prices on a chart, notice they don't move completely randomly. They move in cycles or trends. For example, if you take a look at Apple over this period of time, this is kind of like 2, 4, 6, 8. It's about a year, right? And you notice that over this period of time, from November to somewhere in late January, it was on a downtrend, right? It was on a clear downtrend. Evidenced by the fact that you can see the price is making lower highs, right? Lower highs. And making lower lows. In fact, that's the definition of a downtrend: lower highs or lower peaks and lower lows. Now over here you can see that it attempted to make a higher high, right? So some people may have thought, hey, could that have been a change in trend? But although it made a higher high, it went back to make a lower low. So that that was not a change in trend. All right, so this is a period of a downtrend.
All right, sorry about that, guys. My bad, man. I'm over here rambling. I wasn't even on. But yeah, here's Bitcoin USDT. Just to put a quick stop to that video. Yeah, man, that's where we are right now, man. Here's your entries, right? That 50 RSI cross. I talk a lot about that, man. This is just a beautiful entry. Look at this on the weekly. Back here in September of last year at 26. Here's another beautiful entry here going back to last year, January at 19,570. Beautiful entry there across. So I mean, look, no doubt we're high up there, but in the grand scheme of things, this is a supply side issue, right? I mean, we've got 9 funds that cumulative are purchasing anywhere between 600 to 900 million dollars worth of Bitcoin every single day at this point. Every single day, with 90% of the supply pretty much already out there. What we need to do is just kind of continue to convince people to hold on to their Bitcoin, because we want to see supply dry up completely. Now, overwhelming majority of it doesn't move, but that's the only barrier to us already being at $150,000. The fact that there are some people out there who, need to sell, right? I'd love it if everybody who bought just held on, but unfortunately, that's not the case. But the halving is definitely going to help, right? The halving is definitely going to help, and continued appreciation and also other funds jumping in. We haven't even gotten to the point where insurance companies are not in yet, right? The insurance companies haven't even jumped in yet, right? The insurance companies can start buying Bitcoin to secure against their liabilities. I don't know why we don't have one single bright CEO of an insurance company who could have jumped on this like a Michael Saylor did. Your insurance company would be triple AAAA. You know what I'm saying? Why don't we see the kind of boldness throughout these different industries here in America? It's always got to be just that one guy who's just yeah, I'm gonna take this fucking life by the balls, and then everybody else just sits back. It's just so annoying. We have one Michael Saylor, one guy, and all these other companies. Apple owns Bitcoin on the balance sheet, but they've got 10,000 coins. It's just, you know what I'm saying? It's just what the fuck are y'all doing? What are y'all sitting back for? But at the same time, this is the blessing for you to continue to be, dollar cost averaging into Bitcoin while you still can, while you can still put $200 in and get an ROI, right? Because once Bitcoin goes to 250,000, 300,000, your $200 will do nothing for you. Okay? Do nothing for you in the grand scheme of things. That's why dollar cost averaging now, every time you get paid, just $50, $100, anything you can before this thing doubles and triples and quadruples, right? So I'm excited about it. Look, Bitcoin's in the bull market. I don't know how long this bull's going to last, but I'll tell you one thing right now. This is the bull market that has me thinking about this asset class much differently. Because once the bull market is over, whatever it sells off at, I'm going to be just, if we make another trip back down to let's say 49, when the Bitcoin, bull market is over, I'm going ham, bro. I'm going ham. And I don't even know if we're ever going to even get back to those levels. But look at the people who sold out today, right? Somebody, V, you mentioned that earlier. Think about the people who sold out today. Think about the people who sold out today at 68,000, and we're at 72. You know what I'm saying? Imagine you sold out at 68,000 today. You got shooken out because you were down fucking $30 or whatever the fuck it is. Because you guys know how it was. You think about some of the trades you sold out too early on. It was because you were down. You weren't even down no fucking real money. It was just oh my God, I'm down 150 or I'm down 1,000 or I'm down. And then what happens? As soon as you fucking close the trade, the market started going, the right way. But man, it is what it is, bro. It is what it is. Bitcoin is doing its own thing right now. But there are a bunch of other great trades to be making right now. Microsoft looks really good. Microsoft breaking above that 1418 level. I was like, is Microsoft going to get a new high this month? And it did with today's price action. I mean, this was a beautiful day for Microsoft. Opened another position selling those 380 calls. Selling 380 against 385 or whatever it was. But anyway, I'm all the way back over here. You know what I'm saying? Just having that debit spread is showing you that Microsoft's going to be staying above those levels for at least, the next month and a half to maybe 2 months. You know, Microsoft looking for new highs here. Apple is another one that's still got a lot of weakness here, and I'm not touching Apple until we start to see this possibly above the 50 RSI here. I don't even want to call support here because I think there is quite a bit of support here going back to 2023 and 2022. Actually, 2021, here's their 2021 support. You know, I've saw some people on Twitter talking about this 120, 155 level, and it's interesting. You know, it's interesting, but do I take the trade now and wait for the market to sell off into 155? I don't want to deal with that stress. Or does it bounce from here? I don't know. I don't know. I just would love to see some more good news about Apple. You know, I'd love to see some more good news about Apple. And we just don't have a lot of good news about Apple right now. Matter of fact, I'm going to set an alert here. I'd set an alert here when it crosses above this line. All right. We'll set an alert for that. Because if it crosses above here, I'd definitely be interested if it crosses back above 178. But, yeah. Yeah, I don't think. I mean, I don't think so. That's why I said I honestly think that 155 is where you get another chance at it. But I don't even want to risk. I wouldn't even risk buying puts or anything like that on there. You know, this is the company is in the queues, man. I mean, there's a lot of passive investing going on in Apple. A lot of people who are just blindly buying shares in it every single month, and then you know, it's not a shit company. You know what I'm saying? So this is the point where you just want to let it hit your support and resistance levels, and once it does, you go in accordingly. What else? NVIDIA. I mentioned NVIDIA right now. I'm selling the 780s against the 770s on this one. So I'm doing really good in NVIDIA right now. Again, this is a stock that's going to hold 800. I think it's going to hold the 850s for a very long time. And, I'd love to be proven wrong, but I just don't think it's going to get, I don't think we're going to see 750 in NVIDIA anytime soon. So that's kind of why I'm there. And it's been a moneymaker for a long time. If you look at the weeklies on NVIDIA, it's been an incredible weekly trade here. So, people have been asking, like, when is NVIDIA going to lose on the weeklies? We haven't had a losing week yet on NVIDIA on the weekly. Eventually, I think you're going to get a losing week here soon. This might be developing right now. As you can see, RSI is almost 90 in NVIDIA. So, this might be the losing week, but that's fine. I just think this is an opportunity now for you to reassess and, sell some spreads out of the money here and be able to collect, some coin on some areas we know NVIDIA is not going to see again. SMCI is another one. I wish the options here were way more liquid than they are. But this is another one that's just like doing so well. And, you just have to be smart about where you position yourself here. Again, just staying out of the money, collecting, just the easy capital. I'm the type of guy, I don't mind putting up 6 for 1. If the trade is 90% probability of profit, I'm going to put up 9 to make 1. Like, I'm just that type of dude because I know I'm going to get my money back on a trade like that. On a thematic, particularly when you're talking about a thematic trade like SMCI. Another one I'm really liking right now, Robinhood, man. Robinhood looks amazing right now. This is a company that's just, doing everything right. They crossed over some, multi-year resistance levels here recently. I think this is a stock that can hit 25 very easily. Again, taking the opportunity to sell some out of the money spreads on this one because I think this is headed to 25 here. It's been cheap for a very, very long time. These longs have been waiting for this move for a really, really long time, and it's finally happening. So shout out to all the Robinhood traders here. I think they're going to do really well here. And it stays up there for some time. Yeah. What else I was looking at here? PayPal, you know, we're waiting. PayPal is one of those ones where it's just like, is it ever going to happen? Is it ever going to happen? And I think it might be happening here soon, guys. PayPal, it's looking very interesting here. It's above my RSI levels here on the weekly that I really, really like. The monthly chart still looks easy, but it's getting there. All right, it's getting there. Let's put that 10 moving average back on there. All right, so we just crossed above it. This is what I like to see. I like to see stocks that are above that 10-month moving average. And it's been a long time since PayPal has closed, right? Closed above the 10-month moving average. You got to go back to May. Actually, this is July of 2023 to see that. And then it failed. It came right back below it. So, you know, I'm going to be watching PayPal day to day here, but this is one that, like, if you get it right, you're going to make a lot of money on, man, because this is a stock that can fly when it wants to fly, and it's very liquid, got great options, and it's one that I'm definitely paying attention to, and it should be on your radar. Like, it should be definitely on your radar, PayPal, right now. Okay. Before I go back to the video. BlackRock, what they're doing right now, I mean, they're a monster right now with everything that they got going on. BlackRock, they're going to make a lot of money on these ETFs. This particular ETF that they're going to make a lot of money on it. The stock hasn't been the prettiest looking, but I think just keep it on their radar. Today wasn't the most beautiful day because the market in general sold off, but it had been doing relatively well these last couple weeks. So it'd been a really nice trade to, again, put some debit spreads underneath the price action. This pullback is really interesting. We'll go back to the daily chart. 50, put my 50s back on there. So it's, look, this is kind of where you want to be. So, again, I'm paying attention. I'm not ready yet to go into this. And boy, look how tight these bands are right here. Boy, that's tight, man. That's some really tight bands, but really interesting to see what happens here on in BlackRock. But seeing, hey, can we get back to those higher levels? But if we're talking about rates going back down, then I don't want to be in the bank stocks if we're talking about cheaper rates. Okay. Yeah, let's look at Costco. All right, COST. Let's look at Costco. Again, another company that's just doing everything right now. Gosh, man. I mean, you're overbought here, so even on these I mean, look at that. I mean, just doing everything right. I hate personally going into Costco just because it's just so much of a hustle and bustle kind of feel. I prefer Sam's Club because it's way more relaxed than Costco. But I think if you're hanging in here, I think just keep doing what you're doing, man. I mean, it looks great. I hate the fact that some people got in there at the 750s and 700. They're wondering, like, what the fuck just happened? But, I think he's still hanging on tight here. That earnings, I mean, reported estimate. Okay, so they missed. They missed on revenue. Ooh. Wow, okay. Now that they missed on revenue. Okay, well, I mean, that's going to do something a little bit that's going to dampen a little bit of expectations there on some high prices, on some higher prices there. Now that I just saw that, if this is right, because again, go ahead and check on like Market Beat or Yahoo Finance and see what some of these people are saying. You also have to be very careful of the analysts. If they haven't already came out and said something, you'll start to see them, do recommendations where it's like, oh, well, everything's good. It's a buy. And they're really just trying to sell into dumb money who think like, oh, yeah, it's sold off. But so be careful with that. Let me actually revise my opinion here on this one and actually just say let's see what happens. Okay. Let's see what happens. Can you hold 700? Can you hold 700? Let's see. Let's see if you can hold 700. Okay. But again, look at my favorite moving averages here on Costco. I mean, just beautiful. Every time you want to, that's exactly where you want to come in at on this. All right. You never want to trade the sideways movement, but just, oh my God, this is beautiful. This has been absolutely beautiful since last year. Wow. What a trade, man. What a trade. You know, I don't pay attention to a lot of these stocks that are not affiliated with any kind of technology or tech play, but it just goes to show like these companies still do really well. You know, boring companies still make great stocks. You know, when I say boring, I just mean because, you know, shopping at the supermarket hasn't changed in almost 65 years. We literally have the same process. The carts, the scanning, like literally nothing has changed in 60 years when we talk about supermarkets. And to see Costco doing what they're doing is amazing. It's amazing. Yeah. Um, we're not at the part yet where we're going to see Bitcoin start to eat at MasterCard and Visa. We're not even there yet, but there will be a time where, you know, Bitcoin becomes a huge problem for Visa and MasterCard and Discover. We're not there yet. We're not even close to that yet, but that's going to be a conversation because if you're taking Bitcoin or you're taking cryptocurrency, not Bitcoin, because people aren't going to sell their Bitcoin at a certain price. But if you're taking other cryptocurrencies like, you know, Litecoin or any of these other ones that really want to be used for day-to-day living, like you're not going to want to be charged a fee on that. And there are going to be so many open source companies that are going to be waiting to provide you with the kind of services to take those payments with no processing fees that companies like Visa and MasterCard and Discover make. So we're still, again, years away from that, but I want to put that in your mind, like that's going to be an issue one day. It's going to be an issue one day. All right. I don't think Visa and MasterCard are going to be around another 20 years. I just don't see it. I don't understand why would if Visa and MasterCard are around 20 years from now, I think that's a real problem. I think that's a problem. That's a sign we haven't effectively spread the message of DeFi as strongly as we should have. All right. Tesla, I don't know if anybody here trades Tesla, but Tesla is finally being looked at what it is. You know, a car company. Okay. All right. I love the fact that, you know, 80% of the car is actually computer, which is great because you get to be able to buy Teslas that are a year old at half the MSRP that they sold. They walked off the manufacturing line with. I mean, you're seeing Teslas going for $35,000. I mean, these are Teslas with, you know, 30 or 40,000 miles on the odometer, right? Let me see here. I took a picture of one that I was looking at because I was like, damn, I might want to cop me one if this is going to be that cheap. You know, if this is going to be that cheap, where's the picture of that Tesla I took a picture of that Hertz was selling? All right. I mean, here it is right here. All right. This is let me see here. This Hertz was selling this 29825 2022 Model 3 base, 34,000 miles on it for $30,000. This is cheaper. This is cheaper than than a Honda Accord. This is cheaper than a Honda Accord. Now you're not going to get the same level of reliability, but bro, if Tesla is going to be one of these companies where in 3 years you start seeing their cars available for, you know, 20,000, 18,000, just because the technology has depreciated that much, you know, I could see a lot of people getting into Teslas, man. I can see a lot of people getting into Teslas. You know, I don't know where the reliability is. I got to learn a little bit more about the reliability of those Tesla vehicles, right? And I figure in 3 years you're going to have more opportunities to do things with the batteries and all of that stuff. But I think they can be a big, big car company, man. If those cars really depreciate like that. Always some sort of naked component on Tesla. Okay. I run spreads with naked. Oh, okay, naked components on Tesla. All right, that's what's up. Yeah, and I've never, I think I've traded it once or twice, and never really was able to understand its supply demand pattern. But a lot of people love this stock. It's been a great stock for a long time, and a lot of people made money. There's actually a group called Tesla Millionaires, right? But it looks like things have been not so good for the stock, at least lately. All right, look at these lower highs here. Wow. I mean, it's so indicative. I think you can just really just trying to draw a line and see where these things move. Where's the weekly on Tesla? Oh man, look at that. I mean, this stock is clearly beat up. Clearly beat up. The RSI levels tell you right there. This stock is clearly beat up. Clearly beat up. All right. So I'm gonna buy me a pizza, guys. Shout out to everybody who's still in here and joining me and letting their computer run. I appreciate anybody. Yeah, like I said, if you're gonna go do whatever you're gonna do, just please just let your desktop put me on mute. Just have me on the channel, on a tab on your browser somewhere on the side, and just let it run. I appreciate it. So this YouTube understands my engagement is here. I'm real. I'm back. I'm streaming. I'm live. I'm active. So it can boost me. Press like on this video too if you can. Press like on this video too if you can. I appreciate it. We'll get back to Mr. Adam Koo's lesson here. Okay, we'll get back to Mr. Adam Koo's lesson here. Let me give me something to eat.
And in February, the price was pretty much going sideways. It was in what we call a consolidation pattern, where the price was kind of like making the same level of highs, same highs and same lows. It was moving sideways, directionless. And in March, you can see that it started a new uptrend. Again, how do you know? Evidenced by the fact that you see the price making higher highs or higher peaks, right? And higher lows. So it's really important to know right now what's the current trend. So for example, if we were right now in April, you would see that Apple is on a very clear uptrend, making higher highs and higher lows. So why is this important? Because this is the law of the trend. An established trend in price is statistically more likely to continue from one interval to the next than it is to reverse. So what does this mean? This means that when a stock is on an uptrend, the probability is that prices will continue moving higher. It's like kind of like a river current, right? You always want to swim with the current. You never want to swim against the current. And it's like one of Newton's law, Newton's first law. An object in motion will continue in that motion until acted on by a physical force. So until the trend changes, you have to stay long on an uptrend. You want to buy and hold on the uptrend. At the same time, on a downtrend, the probability is that prices will keep going lower. And again, it's kind of like a river current. In this case, the river is flowing south. You never want to buy, you never want to hold when the price is on a downtrend. Because no matter how cheap it looks on a downtrend, cheap will get cheaper, low will get lower, right? And you never know how low it can go, because remember, the market is not logical. The market is emotional in the short term. So you never want to catch a falling knife holding on a downtrend. Swimming against the current, you're more likely to drown. You always want to wait for a downtrend to reverse into an uptrend before buying or holding a stock. So once you're able to identify a new trend and identify the reversal of a trend, that's how you profit tremendously from it. So let's take a look in greater detail what the different trends are all about, and let's define them. So the first kind of trend is known as, once again, an uptrend. So how do you define an uptrend? It's defined specifically as higher highs and higher lows. So once again, you can see Boeing's on an uptrend. over this period. It makes higher highs, right, and higher lows. So on an uptrend, prices still come down. They still retrace or they dip. But every time it retraces, it goes higher. Retraces, it goes higher. Retraces, it goes higher. On an uptrend, what does it tell us about the market? What does it tell us about the stock? It tells us that the market is bullish or the market is optimistic. So it is bullish, again, prices will continue going higher. So what do you want to do on an uptrend? What do you want to do on an uptrend? Well, most of the time you want to buy on the uptrend, right? So when is the best time to buy on the uptrend? Would it be best to buy, for example, over here at A or buy over here at B? The answer, B, right? Why? Because remember that when you buy, you always want to buy at the lowest price. So you always want to buy at the lowest price of the uptrend. Once again, would you rather buy at A or would you rather buy at B? And once again, the answer should be B, right? Because you always want to buy at the lowest price to make the greatest profit when it goes up. Okay, so in other words, we always want to buy when the price makes a temporary dip on the uptrend. We call this a dip. Dip, right? We call this a dip. Now, we also call this a retracement. So notice that prices don't go up in a straight line. They move in waves, right? So we call this the impulsive wave, and we call this the retracement, right? Impulse, retracement, impulse, retracement, impulse, retracement, and that pattern continues. Think of it like breathing, right? So you got to breathe out. You can't breathe out forever, all right? You got to breathe back in and breathe out again, breathe in, breathe out again. So you always want to buy on the breathe in, on the retracement. So let's take a look at this next on the chart. So there you go. You always want to buy the dip of the uptrend. Okay? Now, at the same time, are there people who sell the stock on an uptrend? Yes. When the uptrend is too overextended, when the price has gone too high and they expect it to dip or to retrace back to the mean. So again, the price goes up and it's overextended, we anticipate it's going to, that's right, retrace. Extend, retrace, extend, retrace. So over here is where people or traders are likely to sell, because they think that once you have breathed out too much, you gotta breathe in, right? So anticipating that they gotta breathe in, the price is gonna come down temporarily, what do? They sell over here. Now they either sell to take profits from buying here, or they do a short sell, right? They sell short. So they profit as it comes back down. But notice that by doing this, you're actually doing what we call a counter trend trade. You're trading against the trend. So it's a bit risky, isn't it? That's right. So if you do a short sell over here, you have to quickly ensure that you buy back the shares to take your profit before the uptrend continues. So in other words, on an uptrend, you either go long during the dip of the uptrend. In other words, you buy on the dip of the uptrend, and we call this trading with the trend, or we call this trend following. Okay, or you go short, right? You sell short during the top of the uptrend over here, the top of the uptrend, anticipating that it will revert back to the mean before continuing going higher. We call this a counter trend trade. So usually if you are more of a medium to a long-term investor, right, you definitely want to buy with the trend. You definitely want to follow the trend. But if you are a very short-term trader, you're kind of like a hit and run, you're in and out within a few days, or sometimes even a few hours, then you could likely just as much buy at the dip of the uptrend and quickly sell before the retracement, or you sell at the top of the uptrend and you buy back at the retracement level. So next question would be this: how would you know that it is at the bottom of the dip? All right, like for example, it goes up and the price is coming down, coming down, coming down, coming down, right? And you say, okay, buy over here now. How would you know that's the bottom, right? What if you bought over here and it kept going down? And you say, oh my God, right? It's reversing to a downtrend. How would you know, right? At the same time, how would you know this is the top, right? What if you thought, hey, that's high enough, that's the top, and I'm going to short sell, and it keeps going higher? Then you're screwed, right? So how would you know? So one way is to use moving averages, candlestick patterns, as well as technical indicators to kind of help us to determine if the price has dipped enough or is extended enough. So right now we're going to look at, very quickly, a quick word on moving averages. So once again, we either buy the dip or we short the top of the uptrend. Now what's important is that when the price retraces on a dip, okay, it has to hit a level of support. The support level could be a trend line, which you're going to learn in a short while, or it could be a moving average. And only when it hits a level of support and it bounces off the support do we enter the trade. So you never anticipate or you never guess that it's going to continue. You wait for confirmation that it's going to continue after it has hit a level of support and bounced off that level. So let's take a look at how we could use moving averages for this. So this is the same stock. Now, in this case, we have put in the moving averages, which is the blue line, the 50 moving average, the brown line, which is the 100 moving average, the green line, the 150 moving average, and the 200 moving average. In the next part of this lesson, I'm going to teach you about moving averages in greater detail. But for now, just understand that these colored lines are moving averages that you can place into your chart. All right? And notice that on a very clear uptrend, the price tends to retrace and bounce off the moving average very consistently. Can you see that? So the price goes up, comes down, boom, hits the moving average, which is a support, bounces off, and continues the trend, comes back down again. In this case, it doesn't reach the moving average, but it bounces up again, and this time it touches the moving average again, goes up, touches it again, goes up. In fact, one of my strategies in buying the dip is to buy when it bounces off the moving average. It is called the bounce strategy. Okay. At the same time, we know that it's ready to come back down when the price gets too far away from the moving average. When it's kind of like a rubber band, when you stretch it too far from the center, it's going to bound to snap back pretty soon, right? So moving averages help us to anticipate where's the price. Is it too far up or is it ready to reverse? Let's take a closer look at downtrends. So a downtrend happens when price is making lower highs and lower lows. All right, you can see this is a very clear downtrend on ECT. Over this period, you can see the highs over here. These are the highs, right? So once again, price is making lower highs and lower lows. Like so. So that's a really clear downtrend. Now, this is a lower high. Now you may notice that, hey, this is making a higher high than this. So this was an attempted change in trend. But did it make a lower high? Or rather, did it make a higher low? No. So although it made a higher high, but it made eventually a lower low. So it was not a successful trend reversal. And so the downtrend continues. So on a downtrend, probability is that prices will go lower because the market is bearish. The market is pessimistic. Okay. So what do you want to do on a downtrend? Again, there are two things you can do. Number one, follow the trend. And if you follow the trend, you want to sell on a downtrend. Or we call it, you want to go short, right? You short on a downtrend. Now, when is the best time to sell? Do you want to sell at, for example, A, right? Or sell at B. Okay, so you probably say, hey, sell at A, right? Because as a seller, you always want to sell at the highest price possible. So you sell high, you buy back low. Okay, at the same time, would you want to sell at A or sell at B? So once again, you want to sell at A, right? So you always want to sell at the highest point of a downtrend. And we call that a rally. So what we call this? We call this a rally down, rally down, rally down, rally down. So a rally is a short-term upward retracement. And you always want to sell at the rallies, right? You always want to short at the rallies of a downtrend. Okay? Now at the same time, on a downtrend, notice that prices don't just go down, right? They will retrace back up. All right? Again, back to our breathing metaphor. Okay? Breathes out, breathes in, breathes out, breathes in, breathes out. Okay? So what happens if it goes too low and it's overextended to the downside? All right? So you're breathing out. What has to happen? You got to eventually retrace before continuing the downtrend. Okay, so what some traders do is once they recognize that the price has gone down too fast and too much, they will buy when it's oversold. Again, when the rubber band is stretched too much to the downside, they buy in anticipation it's going to snap back up, and they make a quick profit as it goes up. But you got to quickly sell over here to exit your long position before the downtrend continues. All right, so similarly with the uptrend, on a downtrend we can short on the rally, and by doing that we are following the trend. We are doing trend trading, trend following. Or we could also buy at the bottom of the downtrend, anticipating the rally before the continuation, and that is called a counter trend trade, because again we are buying against the trend. We are buying against the trend. So once again, most beginners, it is actually simpler to follow the trend, so you sell in downtrend. But if you're more of a swing trader, a day trader, you're getting in and out really fast, then you could also buy at the bottom of the downtrend and get a quick profit as it rallies up. So once again, how would you know that the price is at the top of the uptrend? Okay, how would you know? I mean, the price could go up and you say, oh, it's high enough, I'm going to sell, and what happens? That's right, it keeps going up, right? And you say, oh my God, I'm screwed, right? So you never want to guess that the price is going to continue. You must wait for confirmation. So similarly, when the price goes up, you want the price to hit a level of resistance that it cannot break. For example, it's a trend line that you will learn in a while, or a moving average. And when it hits that resistance, only when it comes down do we sell and capture the downward move. So take a look at the next chart with the moving averages. And again, the moving averages act as very strong resistance. So you have got the blue, the brown, the green, and the red. And all these are different moving averages that you will learn in a short while. So notice the price retraces, hits the moving average, which is a resistance, and boom, comes back down again. Goes up, hits the moving average, comes back down again. Goes up, hits the moving average, goes back down again. So it's a very, very predictable pattern when you see a very clear downtrend. You always want to sell the moment the rally finds resistance at a moving average or a trend line. Similarly, how do we know that the price has gone down far enough that it's overstretched and likely to reverse back up? Again, we take reference to the moving averages. When the price goes too far from the moving average, it's like a rubber band, right, being overstretched, and likelihood is going to reverse back to the moving average. And that's when we buy. So we'll include other things like Bollinger Bands, which you'll learn in a while, candlestick patterns to better anticipate when the price has reached its bottom. Finally, let's look at consolidation patterns. So prices can move on an uptrend, they can move on a downtrend, and finally they can move sideways or directionless in a consolidation. So notice in a consolidation, the price can't move beyond a certain price level and it can't move below a certain price level. For example, over here you can see that price is attempting to go up, and what happens? The moment it hits $49, it reverses down. And it attempts to go up again, hits that same price level or similar to that level, that area, and price reverses back down again. Goes up again, boom, comes down again. Goes up again, boom, comes down again. So what does that tell you? It tells you that at $49 or $50 thereabouts, there are many sellers that are waiting there. Sellers are waiting there, and the moment the price reaches that level, they start selling like crazy. So what it tells you is that $49 in that area, supply exceeds demand, okay? Or we call it a supply zone or a resistance level. Now, remember, resistance levels is never an exact line. It's more like a zone and area, beyond which the price just can't seem to clear because there's excess supply that exceeds demand and pushes the price down again. Now, at the same time, when the price wants to go down, it can't go down beyond a certain level. All right, price goes down, goes down, goes down, goes down, and the moment it reaches $37, what happens? Boom! Buyers rush in and push the price up. When it comes to 37, or again close to that area, buyers rush in and push the price up. Push the price up, push the price up. So what does it tell you? It tells you that at $37, people psychologically think that it's cheap. So buyers are all queuing up, waiting to buy. The moment price comes to a level, buyers rush in and demand exceeds supply, and it pushes the price up again. And that's the psychology behind resistance and support levels. It's demand and supply imbalances, right? So again, at support levels, demand exceeds supply. At resistance, supply exceeds demand. And very often in the consolidation, it is stuck between these two levels where it makes same highs and same lows. Okay, same highs and same lows. And usually we require it to be tested at least 3 times to be a significant resistance or support level. So that's 1, that's 2, and that's 3. Okay, that's 1, that's 2, that's 3. So at least 3 tests for it to be significant. So in a consolidation, do you want to buy? Do you want to sell? Well, in general, the answer is no, because you don't want to be stuck going sideways for, who knows how long, right? So what happens is, if I can draw on this chart, for example, price is going on an uptrend in this way, going up, going up. And after a while, what happens? It goes into a consolidation, right? Makes same highs and same lows, like that. So what happens after consolidation? It's kind of like this person is running a marathon, okay? And then after a while, he has to rest, right? To consolidate, go sideways. And what happens after consolidation? Well, 2 things can happen. The price can either break out of that previous resistance and continue the uptrend, or the price can break below that support level and reverse into a downtrend. Now, you never know what's going to happen until it happens, okay? So traders always want to wait for a break above the resistance before buying, going long and riding the trend up. Or they wait for a break below the support to start selling short and to ride the trend down. And before it happens, you do not want to do anything. Now, having said that, sometimes if the range between support and resistance is wide enough, you could make money by buying at the support level when it bounces off, selling at the resistance, buying back near the support, selling at the resistance, and continue this process. So this technique is called trading the range. Trading the range, right? Buy, sell, buy, sell, buy, sell. But the range has to be wide enough. Now, some of you may be asking, how do I know if it's wide enough? Well, here's a little thing that traders look at. For example, over here when I see, for example, the price is coming down, right? And it is hitting the support level that has been tested before, okay? So what traders usually do is they also look for some kind of candlestick pattern that confirms a reversal. That would be ideal, okay? Or they can use Bollinger Bands to see that it has the price hit the lower Bollinger Band. So that adds to the probability. So in this case, for example, after it bounces off $37 and you decide to, for example, buy over here. And let's imagine you buy at, say, $38. Okay, anticipating the price to run up to 49. So what's your profit potential? 49 minus 38 is $11. So you have got a potential profit of $11 if the price goes back to resistance, right? So that's your potential return. Now, is it worth the risk? Well, it depends, right? So where do you put your stop loss? So usually you want to place the stop loss below that support level. Okay, it depends on how conservative you are. You may say, okay, I'm going to place it maybe a couple of cents below this support level. So this support is at, say, 36.80. All right, you may want to place your stop loss slightly below that. You've got to give some buffer because remember it's a zone. Okay. Now, if you want to be really conservative, you may say, okay, I'll put my stop loss at, for example, $36. Okay, because sometimes the price may not exactly touch and go off. It can sometimes, that's right, it can sometimes break below it slightly and run up again. So you got to give a bit of buffer. And to be safe, usually we give the buffer based on the stock's ATR, or average true range. I'll talk more about it on the lesson on technical indicators. So ATR is known as average true range. It represents the average range of the candles of this particular stock. What's the average volatility? Okay, so for example, for Las Vegas Sands, you could calculate that the ATR is, for example, $1. So that means on an average day, Las Vegas Sands moves by $1 in volatility. And any charting software will have an indicator known as ATR that you can place it in. It will calculate the ATR for you. And I'll show it to you again on the lesson of technical indicators. Okay, so let's imagine that we place our stop loss about one average true range ATR below the support. So our stop loss is at $36, for example, stop loss. And our entry price is at 38, E for entry. And our target price is at 49. So if we are wrong on the trade, or it's a losing trade, how much do we lose? We lose $38 minus $36. So we are risking $2 on this trade. And we are potentially making $11. So that is a 1:2. That's right, more than 1:5 risk to return ratio. Okay, so that's a great trade probability. Remember, we always want to take trades when the risk to return ratio is at least 1:2. So we always risk 1 to make at least 2 or more. And if you do that, recall that you can be right half the time or even right 40% of the time and you're still profitable. That's the key to it. So here's an example of a stock, Yahoo, that was in consolidation for a couple of months, in fact, more than a year, right? So clear consolidation, you can see a very clear level of resistance over here. The price was making same highs at $16.30, could not break. It was a very strong resistance. And again, a very strong level of support over here. And eventually, in November, it broke out of that consolidation. And the moment price breaks out with a high level of volume, and again, we have to confirm it with moving averages as well. We'll see it in a while. Boom, it starts a new uptrend. So that was a great time to have gone long on Yahoo. Here's an example of a breakdown pattern. Okay, Nokia was in a consolidation again for a couple of months, right? There's a resistance level over there, could not break the resistance, could not break the support as well. Very strong support. Now, eventually it broke the support level in May. Okay, once it broke the support, boom, collapsed all the way down. So that's a good time to have gone short on Nokia. So that concludes this section on trends. Okay, in the next session, we're going to be looking at support and resistance levels. So let's take a closer look at support and resistance levels. Let's begin with resistance levels or zones. Now, when you first look at a chart, you have to see if there are any potential resistance levels or zones. So what does it mean? A resistance is when you take a look at a chart and notice that there are certain price points where the price tends to converge. In other words, notice the price going up, reaching a certain level, and then reversing back down again. And it keeps repeating that process. Price goes up, reaches that same level, converges there, reverses back down again. So for example, if you take a look at Boeing over this period of time, notice that price goes up to about $95 and then reverses back down again. Goes back up again to that same level, $95, and reverses back down again. And once again, goes back to 95, reverses back down again. Goes back up there, reverses back down again. So it seems that at $95, there's something that seems to be preventing the stock from moving further up. And what it is would be more supply than demand. In other words, many sellers are waiting there so that the moment the price reaches that level, they tend to come in and they overwhelm the buyers and reverse the price down again. So whenever you see the price hitting a certain level 3 times or more, it is a significant resistance level. And we can draw a line connecting these points on the chart, and we call that a resistance level. Now, a few things you have to understand. And the first thing is that we call it a resistance level or a zone. Although we draw a line, but it's not technically a line. Why? Because in reality, price doesn't go exactly to a line and come back down again. For example, if this happens to be a resistance level, okay, the price would sometimes go up, touch that level and come back down. It may go up and sometimes it goes beyond that level slightly and comes back down. Or sometimes it may go near to that level, hardly touching and coming back down. And goes up again. So, in other words, it's not exactly like a brick wall, right, where the price would hit that wall exactly and come down. Think of it more like a fence, where the price hits the fence stretches a bit sometimes, right, and it bounces back off again. So it's more like a zone rather than a line, so to speak. Okay, so in looking at resistance, we have to give buffer. That sometimes it may go a bit beyond that line that we draw, or in fact it may sometimes fall a bit short of that line. Okay, so how would we draw a level of resistance? So what you do is, again, look at the price candles, and if you notice the candle going up, coming down, going up again, coming down, going up again, coming down, okay, and you notice, hey, it tends to be stopping at this level of 87. Now, question is, where do we draw the line? Do we draw the line at the extreme point, say at here where it touches 1 point, or do we draw it here? Now again, this line is supposed to be straight, right? So forgive my drawing. So A or B, where do we draw the line? Okay, so personally I will tend to draw it at B. Why? Because I want to draw the line where it touches as many price points as possible. I'm drawing the line of best fit. So this line is touching 4 price points, whereas line A only touches 1 price point. So line B is more significant. The more points it touches, the more significant it is. So I repeat again, a resistance line that you draw has to touch at least 3 points for it to be a significant resistance level. Now, if you see 2 points and you connect 2 points together, that could be a probationary resistance level. Okay, but it's got to touch the 3rd time for it to be a confirmed resistance level. So why do we want to draw these lines on a chart? Well, because they tell us that supply exceeds demand at those levels. So here's the thing. When a stock price fails to break a resistance level, it tends to create bearish momentum. So because of that, we avoid buying stocks when they're moving towards a resistance level. Alright, so let me repeat that again. Before you want to enter a long trade, before you buy, you always check, hey, is there a resistance above my entry price, my intended entry price? If there's a resistance, don't enter the trade, because the probability is that the price is going to go up, hit that resistance level, and come back down again. Now, again, it's not a guarantee, but it's a probability. So if there's a higher probability that price can't break through a price level, why do I want to enter the trade? All right, so that's resistance. Now, next thing, when a stock price is able to eventually break above a resistance level, especially a strong one, it creates bullish momentum. For example, in this case, Walt Disney found very strong resistance at 35.30, right? So it found resistance, 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 resistance. So this level was tested 1, 2, 3, 4, 5 times. That's a strong resistance level. And again, the stronger the resistance, the stronger will the stock run if it breaks that resistance level. Okay? So eventually in November, what happened? That's right, the price broke above that resistance level. In other words, there was enough demand, enough buyers to overcome the very strong sellers that were waiting there. Okay? So the moment you see a price breaking out of a strong resistance level, there's a high probability that the price will run. Think of it as a person stuck in jail, right? So he attempts to run out of jail and he gets stopped by the guards, gets stopped by the guards, right? And eventually what happens when he's able to break free or break out of that gate? That's right, he runs for his life, right? So again, many traders look to buy when a price breaks above a resistance level. We call this trading on a breakout. Now again, in reality, it's not always so simple. Sometimes the price may break out of that resistance level and come back down again. And we call that a false breakout. And false breakouts happen frequently in trading to fake out amateurs. Alright? So I'll be sharing with you in the lessons to come how to identify false breakouts. Okay? Because they do happen at times. So that's one thing to take note of. Avoid buying when it's below a resistance level. You only want to enter when it's broken above a resistance. Alright? And there are clear skies ahead. Now, similarly for support zones, you have to identify them on the chart. So what you want to do is to look at the chart and notice that when price comes down, does it reach a certain level and reverse back up again? And does that pattern repeat at a certain price level? So in this case, it does, right? Notice price, in fact, gapping down violently and going to $66 and reversing back up. Then coming back down again, reaching that same level, reversing back up again. Coming down to that level and reversing back up again. So what does it tell you? It tells you that obviously at $66 or between $66 to $67, there are very strong buyers waiting to buy when it reaches that level. So demand exceeds supply at that level. It's overhang of demand. So when you see that, and you can see that the price touches a point at least 3 times, that's a significant support level. And we can draw a line connecting those 3 points like so. There you go, right? So if you've got 2 points, you can connect a line, but it's not significant. It's a probationary line. It's got to connect at least 3 times. And like what I mentioned earlier on, support levels are not like brick walls. Okay, it doesn't hit exactly that level and bounce off all the time. Sometimes it goes through that for a while, it falls short. Just like a fence. So once again, let me just illustrate. If I've got a line over here, that's supposed to be a support level, all right? Supposed to be straight, right? Price comes down, and again, it may touch that level, go up. Sometimes it may touch and go out a bit, and sometimes it doesn't even touch. Okay, so you got to give a bit of buffer again above and beyond that line. It's a zone. All right, and again, how do you draw the line? You draw it where it touches as many points as possible. You draw the line of best fit. Now again, why is it important to identify support levels? Because if you are selling short, right, you're shorting the market, shorting the stock, you do not want to short just above a support level. Because if you short it, what happens, right? It goes down, hits that level and bounces back up again, and you're losing money. Okay? Because when a stock bounces off a support level, it creates bullish momentum. It tends to rise back up again. So avoid selling short when the price is near a support zone or support level. Now what happens if price is able to eventually break a support level? Right, so price hits $33, right, and reverses, hits it, reverses again, reverses. So there are very strong buyers at $33. As you can see, very strong buyers over there. It touches many times, very significant line. So eventually what happened? It breaks, which means suddenly the sellers overwhelm the buyers, right? There are not enough buyers to absorb the sellers wanting to sell. And the moment it breaks, what do you think people do? People panic, say, oh my God, right? There are no more buyers left. So no one dares to buy. Yeah, there's no more support. And the price tends to free fall from there. So again, this is where a lot of short sellers tend to enter short when they see a significant support level being broken. And again, do know that in reality, there are false breakouts. So sometimes the price can go below that and people start shorting and it starts going up again. Right? So we call it a false breakout. So you got to be careful of false breakout. In specific strategies, I'll talk about how do you avoid some of these false breakouts in trading. Right? The next interesting phenomenon to understand is that when a stock breaks a previous resistance, that resistance becomes support. Okay, and vice versa. So in this case, notice resistance, 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 right? Really strong resistance. And over here, what happens? It breaks the resistance, goes up, comes back down again, and what happens? This time, boom, boom, boom. That resistance has now become support. Okay? So when people often ask me, hey, is that a support or resistance level? And I say it is both. It is both. Because when price is below it, it's a resistance. Once price gets above it, it becomes support. Okay? Now the opposite is true. When price breaks a support level, for example, say it breaks this support, that support now becomes new resistance, right? So that is how it works. Here's an example. So again, support, 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 breaks support, goes up there, doesn't exactly touch it, but you can see it's near enough, comes back down again. But this time, boom, it hits that support, which has become resistance. Comes back down again, goes up one more time, hits that same resistance, comes back down again. So really significant, important levels to look at when trading. Alright, so support and resistance levels don't always come in horizontal lines. They can also come in diagonal lines. So we call those trending support lines. So if you look at a stock on an uptrend, in this case, and again, how do you define an uptrend? Higher highs and higher lows. Right? Do we have higher highs? That's right, higher highs and higher lows. Right? There we go, higher lows. Okay. So whenever I see a stock on an uptrend, I will see if there is a significant uptrending support level. Okay, so how do I do that? I look at the low points. I look at the lows, right? So this is a low, that's a low, or we call this swing lows, right? Swing lows, swing lows. And what I do is I see, can I draw a line that connects at least 3 swing lows into a line? If I can, I will draw it. Now it doesn't always happen, so don't force it. But you can see very obviously that a line can connect 3 swing low points, you can draw that, and that tends to be a significant line. So in this case, notice that there is one. There we go. All right, so we connect this low to this low to this low to this low. What happens? In fact, it forms a very strong trending support. Okay, so how can we use this? Well, we can use this in the following ways. That we know as long as price remains above this line, the uptrend prevails. Okay, and the best time to enter long is when the price retraces to this support level. So whenever it retraces and it bounces off the support level, that's the time to buy. Boom, time to buy. Boom, time to buy. Right? So it gives you a very good reference point when to get in on an uptrending stock, when it retraces and bounces off that support level. And of course, if it eventually breaks this line, that would be a good idea to take profit, right, and to exit the long trade. Right? So that's uptrending support. The opposite would be downtrending resistance. So if I see a stock on a downtrend, and again, how do you define a downtrend? That's right, lower highs and lower lows. Okay, so when I see a downtrend, I see if I can connect the high points to form a resistance level, a trending resistance. So I look at all the highs and say, okay, can I connect at least 3 points together to form a line? If I can, I would draw it. If I can't, I won't force it. Doesn't always happen, right? So in this case, boom, it happens to be that, right? So 1, 2, 3, there we go. We can draw a line. So the moment if you had drawn this line, it would have become a really good reference point, right? So the moment the price went up there and hit that line, what would you do? That's right, you will sell short, and boom, it goes down and you have a good profit, right? Reverses back up again, that same level, right? You could have shorted it and boom, would have dropped down. Go up again, boom, short it, drop down. So as long as the price remains below that trending resistance, the downtrend prevails. You do not want to go long, you want to stay short. And of course, eventually, if the stock breaks above this resistance, all right, then you do not want to be short anymore. It could be an indication of a change of trend. So let's take a look at some examples from the charts. All right, so let's take a look at how we would draw support and resistance levels on a chart. So you can use any kind of charting software. They all allow you to use drawing tools. So I'm using the free charting software from the broker Think or Swim. All right. So in this software, you'll find that you have drawing tools like in any other software. You just go to drawings, drawing tools, and you can draw trend lines using this tool here, or you can draw horizontal lines using this tool. All right. These are the two tools. I've also created a customized bar over here where I could draw the trend line or the price level as well. Okay, so this is, now I can put in the name of any stock I want. For example, let's look at Yahoo. So I key in the ticker symbol and it's going to plot Yahoo for me, and I can define the time interval as well. Okay, so as a swing trader, you want to use daily candles, which means each candle represents a day. I could look at the last 5 years, the last 3 years, the last 2 years, so on and so forth. So usually as a swing trader, I'll take a look at the last 1 year, and I can then zoom down to 6 months and 3 months. If I'm more of a long-term investor, I could take a look at the 3-year or the 5-year or even the 10-year chart, depending on my time frame. So in this case, I'm more of a short-term trader. I'll look at the 1 year or the 6 months daily chart, okay, or the day candle, right? So I'm going to click on 1 year. Okay, so I'm going to look at something like that. Let me expand it a bit more in this case. Right, there we go. Now, if I zoom, I can click and zoom in to any point, and you can see these are the candlesticks that represent the stock price. Now, you have to select candlesticks in whatever software you're using. Usually, under chart settings, again, any software will have chart settings. You have to select that you want Let me see where it is. Yeah, you got to select candlesticks, right? You got to select candles. If not, it may show you a bar chart or something else. So you want to select candles, and usually I will select white for bullish candles and red for bearish candles. You can use green and red as well, doesn't really matter. All right, so there we are. Okay, so I'm gonna take a look at Yahoo, and let's just take a look at this period of time, for example. Okay, so let's see if we can identify support and resistance levels. How? Well, let's look at price levels where the price tends to meet and then change direction. Okay, so you got to eyeball the chart and take a look if you can spot any of these levels. So I noticed, for example, over here, the price tends to hit and reverse, hit and reverse, hit and reverse, right? So that's at least 3 times. So I'm going to click on my horizontal tool, right? And I could draw, click and draw. There we go. So this is a very obvious resistance, right? So it went up 1, 2, 3. All right. Remember, you need at least 3 points to draw a line. That's a confirmed resistance or support level. 2 times is a probationary, 3 times is significant, right? So it tested 1, 2, 3, 4, right? And you can see it broke the resistance. Can you see this is a break? Now, what happened after it broke the resistance? It came back down to test it. So now this resistance has become support, right? So it supports and it blows, it goes all the way up. Okay, so what some traders do is the moment it breaks out, they buy. But that's a bit risky because sometimes you could buy and it's a false breakout, it comes back down again. It's kind of like the prisoner breaks out of the jail, but is caught back into the jail again. So a safer entry, if you're buying on a breakout, is to wait for the breakout and wait for the price to come back and to test that resistance to ensure the resistance has become a support. And then and only then when it bounces off the support, do you then buy over here. Okay, now it then goes up and comes back down again. And what happens? That's right, it goes back to this level and boom, bounces off again. So you can see that this is a very strong level. This is $38. $38 was a very strong resistance over here, and it has become a very strong support level as well. Okay, where else could I draw? Well, I have spotted one over here as well. Click. There you go. So this obviously is a strong support, right? 1, 2, 3, 4, 5, right? Boom, right? And again, like I said, these are zones. So sometimes it can go a bit below like that and then, you know, bounce back up again. So you got to give some buffer. So this you can see was a consolidation. It consolidated and it broke out of the consolidation, formed a new uptrend. This was an uptrend that lasted just for 2 months. Downtrend, uptrend. Okay, so when you look at the chart, you have to identify what this is a sideways trend. That was a short-term uptrend. This was a downtrend, and this was an uptrend. So currently we are on an uptrend over here. Okay, over here we are on a downtrend, uptrend, sideways trend. So when you look at the chart, the first thing is to identify what are the trends you see. Okay. All right, let's see what else can I draw. Are there any other significant levels I could draw? Well, you can see one over here as well. I'm going to draw my horizontal line. There we are. Okay. By the way, this is called a gap. So a gap exists when the price closes at a certain price and the next day it opens at a far away price. So there's a gap, right? Usually this is caused by some news that was really good that happened when the market was closed, and when the market opened, people were willing to pay a much higher price than where it closed the day before. So it causes a gap, all right? So it gapped up, right? It forms a support, right? Breaks the support, becomes resistance, breaks the resistance, becomes support, and boom, it goes up and starts that trend. Okay. In fact, you could draw another line over here. There you go. Very good example. Can you see that? So you've got a resistance, 1, 2, 3. 3 is significant, right? It breaks the resistance, boom, resistance becomes support, starts the new trend. There we are. So if you zoom in, right now it's on an uptrend. So on an uptrend, we could see if we can draw a trending support level. Okay, so I'm going to go to my trending support tool, trend line. Okay, so I got to connect at least 3 points for it to be significant. And if I can't connect it, I won't force it. So it doesn't always look nice. If it doesn't, I won't force it. So could I connect this, and could I connect it? So sometimes it can be quite subjective, like do I connect it here or here, right? So I would rather connect it here. Why? Because it touches more points, right? 1, 2, 3, 4, 5, 6, right? So that is a significant trending support. Okay. So right now the price is here, and would I want to buy over here? Well, probably not, because it's a bit far from the support level. I like to buy when it's on an uptrend, but it is near the support level. It's bouncing off the support. That's the ideal point. Of course, I would also put in my moving averages, which you're going to learn in the next part of this lesson. But for now, you can see that we are on an uptrend, but we are a bit far from the support level. I prefer if we buy closer to the support level, right? So there we are. So that's how I draw. I would draw these support and resistance levels for Yahoo. Take a look at this. This was a downtrend, you can see over there. Could I draw a trending resistance? Let me take a look if I could draw one. Again, does it connect 3 points? It has to connect 3 points, right? If it doesn't, I won't force it again. So connect that. Where does it connect 3 points? There. All right. So there you go. 1, 2, 3. That's a resistance. It broke above that, found support, and boom, went up there. There you go. All right. So the first thing I do when I look at a chart is to draw support and resistance levels. Why? Because remember, these levels tell me where price is probably going to reverse. Okay, so before I go long, I want to ensure there's no resistance just above my entry. If I want to go short, I want to make sure there's no support near my entry, and that's the only reason why I draw these lines. Okay, so once I draw these lines, the next step is to put in my moving averages, which you're going to learn in the next session. So let's move on to moving averages in a short while. All right, so let's take a look at another stock, Boeing. All right, so I've put in Boeing into my ticker over here, and I've selected daily candles, 1 year daily candles. Oh, I think I've selected 2 years, so we can take a look at more. Right, there we go. So this is a 2-year chart, and once again, I will look at it and see, are there support and resistance levels that are obvious? So I will go to my drawing tool, okay, and that's right, I will see one over there. That's pretty significant, won't you say? And again, I want to draw a line where it touches as many points as possible. So this was a very strong support, right? resistance, 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 resistance. So let me ask you this. If you knew that there was a resistance over here, for example, okay, right, and you wanted to buy here, would you want to buy here at 147.75? No. Why? Because you know that there's a strong resistance at 150 over here, or 149.85. So this tells you that there are many sellers waiting to sell. So you wouldn't want to buy here, because what would have happened if you had bought? Right? You thought, hey, you know, I buy here, it's going up really good, and what happens after that? Boom! Right? You can see it comes back down because it can't break this resistance. So to be safe, like what you've learned, and oh, look at it, it went all the way down, my God. Imagine if you had bought here, right? So again, to be safe, you want to make sure that the price, okay, has broken above, in this case, right, broken above that resistance, and again, safely wait for the retracement, and the resistance has become support. And that would be a safer time to buy, knowing that the prisoner has got out of the jail and is now running into a new uptrend. All right, so that's why we draw, and helps us to make good decisions. All right, where else can we draw? Now there's a pretty significant line over here as well. All right, can you see that? So resistance became support, support broke support, became resistance, became resistance, became resistance. Right? So again, imagine if you knew this, or you saw this, would you want to buy here? I mean, say it's going up, I'm going to buy, boom, it goes down, right? Because there's a resistance. So wait for it to break above that resistance, and then retrace down, all right, before buying. And if you can stay above that resistance that's become support, then we know that it's safe to enter the trade. Okay? You could also notice one over here. There we go. Support, 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 support. So again, if it's going down, you say, I'm going to short the stock. Would you want to short it here? No. Because you short it, it's going down and boom, it goes up and you're losing money, right? So before you short, ensure there's no support level just below your entry that you're going to short, all right? So these are really clear. Now let's zoom in. Here's an uptrend. So on an uptrend, could we draw a trending support? Again, can we connect three lines? Yes, we can. There we go, right? So 1, 2, 3, 4, 5, 6, right? So 6, very strong support. Now, what has happened over here? You can see that it broke support, and support became resistance. Becomes resistance. Boom, comes back down again, right? So you can see that these levels are really important to look at when you are entering a trade. Alright, so let's take a look at moving averages. Moving averages are one of the most popular and effective tools used by investors and traders. So what's a moving average? A moving average is an indicator that you can find in any charting software. And under the demonstration of the charting software, I'll show you how you can install these moving averages in just a few seconds. So let me just show you how it works. For example, in this chart, I've put in the 50 MA, or the 50 moving average. So what the computer does is it will draw this blue line, which is the 50 moving average. So what does it really mean? 50 moving average means that the software will take the last 50 days of the stock's closing price, add it together and divide by 50. And it keeps repeating this process every day, taking the last 50 days and dividing it by 50. So you get the 50-day average. So this is then plotted on a chart and is shown as a line. And again, you can determine the color of the line. I like to use blue for the 50 moving average. So why are moving averages really powerful? Because these lines indicate, number one, the direction of the trend. Number two, they also act as strong support and resistance levels. Okay? There are two kinds of moving averages. You have the simple moving average and the exponential moving average, the SMA and the EMA. So the simple moving average is the simple average of the price over a predefined number of periods. For example, 50, right, is a predefined period, or 100 or 20. And again, a period could be a day, it could be an hour, it could be a week, right? So what you're seeing here is the 50-day simple moving average. Okay, 50-day simple moving average. Now, I also use exponential moving averages. The difference is that for an EMA, the computer doesn't take 50 days and divide it equally. All right, it places more weight on recent prices as compared to prices that were back not so frequent. Okay, it applies more weight to recent prices, so it is a weighted moving average. So people often ask, which is better? There's no right or wrong. They both have pros and cons. EMAs tend to react faster to price movement. They tend to change according to the price movement faster, but they tend to be less stable. They tend to give more false signals. So I tend to use simple moving averages when I look at 50, 100, 150, and 200 moving averages. In other words, the longer moving averages. But for the shorter moving averages, like the 20 and the 40, or the 6 and the 18, I use the exponential moving averages. Now, you don't have to remember all this right now, because when we go into the specific strategies or trading systems, I'll show you exactly which moving averages to use and which EMAs or SMAs to use. Yeah. So this is really an introduction to understand how moving averages work, how they behave. So when you look at a moving average, the first thing is to look at the slope of the moving average. And the slope tells you the direction of the trend. So in this case, you can see it is sloping up, right? The blue line is sloping up, indicating an uptrend. And oftentimes on an uptrend, the price, which is shown by the candlesticks, the price is above the moving average. All right, so let me repeat that. When the prices are above the moving average, and when the moving average is sloping up, it's a clear uptrend. So in this case, you can see it's an uptrend, right? And then what happens over here? Over here, notice the blue line is sloping down. When it's sloping down, it's a downtrend, right? And usually the prices are below the moving average when it's on a downtrend. Over here, what happens? The price gets above the moving average again, and it starts sloping up. All right, so this is an uptrend, this is a downtrend, and that is an uptrend. All right, pretty straightforward, right? Okay. Next, notice that on an uptrend, the moving averages act as support on uptrends. So on an uptrend, notice the moving average acts as a support level. So whenever the price moves to the moving average, what happens? That's right, it bounces off the moving average point, right? Now, it doesn't always happen, but oftentimes in very liquid stocks, right, the moving averages act as a support level. Right, over here you can see as well, right, it hits the support, bounces off, bounces off, bounces off, bounces off, right? So that's a very, very significant support level, right? And on a downtrend, what happens? The moving average acts as a resistance, right? Can you see the price goes up, boom, comes down, boom, comes down, right? Right? And what happens is we say prices tend to revert to the mean. Okay, so what does it mean? Notice that when the price gets too far from the moving average, it tends to move back to the moving average. It tends to snap back. That's why we call it an average. Okay, when it's too far, it snaps back. It's too far, it snaps back. So we call it the mean or the average. So whenever the price So in this case, you can see over here, for example, whenever the price has moved too far away from the moving average, it's overbought, right? It is overbought. It's overstretched like a rubber band. And it tends to snap back to the average. Okay, so again, the moving average kind of tells you where the price should be at as an average. Okay, and again, notice that when the price gets too far from the moving average, what happens? It snaps back, right? It snaps back to the average. All right. So because of that, one of the most important rules is this: when you're buying a stock, okay, so remember you tend to buy on an uptrend, right? So over here you want to buy, right? You want to go long, right? And so you only want to buy when the price is near the moving average, right? So in other words, you could buy over here, right? This would be a nice point to buy. You could buy over here, okay? Now, would you want to buy it over here, for example? No, I wouldn't buy over here. Why? Because the price has moved too far from the moving average. So it's risky to buy over here because there's a high chance that it will revert back to the moving average. Of course, it did go higher, right? So sometimes high can go higher, but eventually it will have to come back to the moving average. So these are very risky points to buy. You want to buy when it's near the moving average, right? It is kind of like surfing off the moving average, okay? Similarly, if I want to sell, I want to short, I want to sell when it's near the moving average. So I could sell over here, right? At this point, I could do a short, right? I could short it here. Oops, hold on. So I could short it over here. I could short it over here, right? Because I sell high and buy back low, right? Sell high, buy back low. They'll be safe. Do I want to sell it here? No, because the price has dropped too far from the moving average. It is oversold. So if I sell here, thinking it's going to go lower, it's risky because sure enough, it snaps back up again. So really important to understand how moving averages work. So a common question asked is, which moving averages do I use? All right. Now, it depends on the time frame. So in general, I use the 20 exponential moving average to look at the short-term trend of a stock. Okay, I use the 50 moving average to look at the medium-term trend and the 200 moving average to look at the long-term trend. For example, so over here on this chart, you can see that this red dotted line over here, that is the 20 exponential moving average. Okay, the blue line is the 50 moving average and the red solid line is the 200 moving average. Right? So, the 200 moving average, okay, is used to determine the long-term trend. So basically, whenever the price, as long as the price, the candles are above the 200 moving average, and the 200 is sloping up, it's on a long-term uptrend. So you can see that over this period of time, the price was above this red line, the red line was sloping up, so it's on a long-term uptrend. So if you are more of a long-term investor, you would take reference more to the 200 moving average. You won't be concerned with the short-term trends. You're looking at more of the longer-term trend, which is 200 MA, right? Now the 50 moving average, the blue line measures the medium-term trend. So over here you can see the price is above the blue line, that's a medium-term uptrend. Okay, and over here the price crosses below the blue line, that's a medium-term downtrend. Right, so uptrend, downtrend, and then the price goes above the blue line again, and the blue line slopes up, that's a medium-term uptrend. All right, so again, if I'm more of a medium-term investor, I'll take reference to the blue line. And only when the price is above the blue line would I consider going long. If the price is below the blue line, I consider going short. Now, if you're more of a short-term investor or more of a swing trader or short-term trader, you take reference to the 20 EMA, the 20 exponential moving average. People who are really very short term, like intraday scalpers, they look at the 9 EMA, the 9 exponential moving average. So over here you can see that the price is above the 20 EMA. This is the 20 EMA. So that's a short-term uptrend. Right? Over here is a short-term downtrend. Here's a short-term uptrend. Right? Short-term downtrend. Okay. So over here you can see that the price was on a short-term downtrend, but still on a medium-term uptrend and on a medium-term. Let me repeat that. Okay. Over here the price was below the 20 EMA, right? So the price is on a short-term downtrend, but on a medium-term uptrend. Why? Because the price is still above the 50 MA blue line. And the price is also on a long-term uptrend because it's above the red line. So in other words, the price could be on a short-term downtrend, but medium-term uptrend and long-term uptrend, right? Or it could be on a short-term uptrend and medium-term downtrend and long-term downtrend. So you look at different trends, the long-term, the medium-term, and the short-term. Of course, the ideal time to go long is when all three trends are going up. So short-term uptrend, medium-term uptrend, long-term uptrend, all trends are going up. That is the best time to go long. Similarly, if you want to go short, the best time is when all three trends are going down, right? Medium-term downtrend, long-term downtrend, short-term downtrend as well. Okay? And I call this the EMA fan pattern. So besides the 20, 50, and 200, these are other popular moving averages, right? So we've got the 20, I've just shown you the 20. You can also put in the 40 EMA as well. So that's the 20 and the 40. You've got the 50 blue. Let me just draw it for you. So this is the 50 in blue. This is the 100 in brown. It's the 150 in green. And the 200 in red. Okay? So whenever you see this sequence, 20 is above 40. Alright? 50 is above 100, above 150, and above 200. When you see this sequence, it tells you that the MA fan is on a clear uptrend, and that's the best time to go long. Now, some of you may have this question. You say, Adam, what if the long-term trend is down? The medium-term trend is down, but the short-term trend is up. Could I go long? Yes, you could. But you are going long on the short-term trend, but the main trend is going down. So you could go long, but it's a bit more risky. So that takes a bit more experience, and we'll look at it in the specific strategies that will be coming in the lesson soon. Right? We call them all a counter-trend trade. Trading against the main trend, but with the short-term trend going up. You can do that as well. Okay, this is a MA fan structure on a clear downtrend. So a reverse, right? In this case, what happens? The 20 EMA is below the 40, right? This red line is a 20 and it's below the 40 blue line. So it's a short-term downtrend. The 50 blue line is below the 100 and it's below the 150, it's below the 200. So this is a very clear downtrend. All trends going down. Best time to go short and ride that downtrend wave pattern. Alright, so that's all you got to know about moving averages for now. Again, in the specific trading strategies, the lesson plans, you will learn exactly which moving averages to use for which specific setup. Alright, so let me show you really quickly how you place your moving averages into your charts. Okay, so again, whatever charting software you use, any software will have moving averages. It's one of the most common tools used by traders. Yeah. So you got to find on your software where you can put in indicators, or we call them studies. So I'm using again the Think or Swim charting software, which is a free software from Think or Swim, which is a broker that you can use. So I'll go to what we call studies, right? Or we call them indicators, right? And again, there are over 300 indicators that we will learn. Some of them, not all of them are useful. So one of them would be called moving averages. So you can always search for them. So put in moving average. There you go. So you see simple moving average. So you double click and it appears over here. So by default, they give you the 9 simple moving average. So I want to change it to, for example, the 50 moving average. So I'm going to click on this edit widget. There we go, change to 50. And for 50, I love to use blue and width 2. So when I click OK, what happens? There we go. So I have my 50 moving average. There we go. So as long as the price is above the moving average, it's sloping up. That is a uptrend. Now over here, look at what's happening, right? The price is going below the moving average. It's sloping down. So this could be a change in trend, right? So this would be a scary time to go long. Yeah. Okay, let me put in more moving averages. So double click again. So this time I want to put in, for example, the 200 moving average, which is the long-term trend. Red with 2. Okay, so there we are. I can also put in the exponential moving average. Exponential. This one. Moving average exponential. 20 EMA. Red. Usually for exponential moving averages, I use a dotted line just to demarcate. Okay. Apply. Okay, there we are. So on Boeing, you can see I've put in my 20 exponential moving average, 50 moving average, and 200 moving average, right? So there we are. Okay. So again, during the specific strategies, I'll show you which exact moving averages to use. For this case, I'm just showing you how you can install it in your software. So let's go back to the lesson. So this concludes lesson 3, Mastering Technical Analysis Part 1. I'll see you in lesson 4, where we look at part 2 of technical analysis. Till then, Adam Khoo signing off. Welcome to lesson 4. We're going to be looking at technical analysis part 2. And in this lesson, we're going to be covering things like technical indicators, candlestick patterns, and market and sector analysis, just to name a few. So let's begin by understanding how to use technical indicators. So far you've learned about how to read trends, right? Uptrends, downtrends, and consolidations. You've looked at moving averages that help us to determine the change in the trend. And we also looked at support and resistance levels. So to help us further to fine-tune our entry points, we can use technical indicators. So if you look at any kind of charting software, there are hundreds of indicators that traders can choose and use. And these are a couple of them which are listed over here. And I don't know half of them, so it's not really important. And what are these indicators? These indicators are, by nature, they're all lagging indicators. What it means is that they are calculated based on historical price data. Okay, so there's no indicator that can predict where price is going to go. It just gives us a probability of anticipated price movement based on historical data. Okay, now there are two kinds of indicators basically. We have trend following indicators that tell us the strength of a trend. So like the price could be on an uptrend, but how strong is the uptrend, right? Indicators help us to determine how strong it is, or how strong is the downtrend. The second type of indicators would be oscillators that measure if the price is temporarily overbought or temporarily oversold, right? Because this assumes that price oscillates between a mean. So again, helps us to fine-tune our entries. Now, what is important is that indicators should never be used in isolation. They must always be used in the right context of the right trend, okay? And they must be used in the right combination. So you're going to learn about some of my favorite indicators, but you can't use them by themselves. They must be used in the context of the right strategy. So when we go into the lesson plan on strategies, you learn, okay, for this particular strategy, which indicators do I use? And for that, which one do I use? Okay. So right now it's understanding the individual indicators and what they do in the first place. So let's start with the first one, MACD. MACD is the most commonly used indicator. Most traders use it, right? It's called the moving average convergence divergence. Okay. Now this is a trend following indicator that tells us how strong a trend is. How bullish is the uptrend, how bearish is the downtrend. How's it calculated? It is calculated by using two moving averages. The 12 EMA and the 26 EMA is commonly used, although we will use others for different strategies, okay? Now, the MACD line, which is this black line you see over here, let me just zoom in. Can you see this black line over there? This black line? Okay, that's the MACD line. So notice this is the price chart, and below is the MACD indicator. So the first thing to look at is this black line, and that's the MACD line. The MACD line is plotted or calculated by subtracting the two EMAs against each other, right? So subtracting the 26 EMA from the 12 EMA, you get that black MACD line, okay? And then you take a 9-day exponential moving average of that MACD line, and you plot it on top of the MACD, and you get this red dotted signal line. Okay, so that's how these two lines are created, the MACD line and the signal line. Now, if you're not